Up. Hello and welcome to another live stream with me, Christian Rauchenwald, on this beautiful, or not so beautiful Monday. It's quite fresh and cold in Ukraine right now, so kind of like more like winterish instead of spring and summer. As always, we're gonna spend our day or parts of our day by looking at GameStop using Elliott wave theory to try to predict where the stock price is gonna go next. We obviously know that overall we expect it to go up. Now I'm currently quickly finishing an update of MotiveWave, the software that I'm using to label everything. And yeah, I'm gonna just mark that as spam. And we can ignore that, and I already have that. And so just finishing an update, and then we are good to go. Or maybe the update is already finished. Let's check. Can also close that, quit, and close that, and close that. Oh, that I cannot close, cancel. And check here, okay, don't need that. And yeah, I hope you all had a great weekend. Quickly gonna resize that so I see the chat. Hi David, great to have you back, and great to be back. Yeah, hope you also had a pleasant weekend. Mine was semi-relaxed, got some work done, and then spent the Sunday being a little bit lazier than usual. I'm gonna share my screen, by the way, as usual. So MotiveWave just fired up after the update. And in a second, we're gonna work our way back down. So how does the pre-market look like? Nothing really relevant, so almost no change. And yeah, I'm gonna do that on the other screen, open up my other portfolio, eToro. And yeah, so overall nothing changed in our labeling from the big time frame. So on the monthly chart, we still would have wave 1, 2, and currently part of wave 3. On the daily chart, we still have basically from the low in March last year, wave 1, 2, and are still basically in wave number 3 here as well, according to our labeling. And our assumption is that from the high at 350 or 348, we basically finished our wave 4 at the low at 132. So after the earnings low, there was a recovery. And our assumption was that we have a double free correction here. So a zigzag followed by a zigzag up, followed by something like a triangle. Overall, as mentioned at the end of Friday, it starts to look more like that might even be a triple free, or that, I mean, especially on the daily chart, this starts to look like a triangle. Doesn't change a lot for us and for our overall labeling, because it still means that we're still within this wave 3. It would just mean that our wave 4 might not end here, but actually ended here or is ending here. If we zoom in a little, we can kind of like roughly, not like this. Stop, back. So we can kind of like draw trend lines, like connect those 2 points and connect roughly those 2, or whatever the high point in here was, extent. This would indicate that our triangle ended here, but if we pick this high point here, I guess we cover this one as well. So just saying that roughly it looks like this might be a triangle. We still stick with our labeling from now, which continues with our wave 5 of this smaller degree, 1, 2, 3, 4, 5, which will then finish the wave 3 that we're in here on one bigger degree. And we had our starting point here around the 14th of April. And when we jump lower on, let's just go straight to 5 minutes. So basically, that's the end of our wave 4 as we think it is, with now wave 1 and this being wave 2. And based on our assumption, let's check the retracement. It's a little bit below the 61.8 retracement, but that's not too bad. So it's still likely and possible that this is wave 1, 2 of this very small degree, and that we are now experiencing or about to experience wave 3 on the way up. And before the weekend, the assumption was that maybe, or basically when we ended the stream on Friday before market close, the assumption was that this could also be, how was it labeled? I think we had it labeled that wave 4 is here with a 1, 2, 3, 4, 5 zigzag 1, 2, 3, 4, 5, where we were expecting that maybe we get to see 153 or so, like, or 152, 53, yeah. But then we ended the stream roughly here, so it was labeled basically that this was not yet finished wave 4, but then the rest of the day the candles developed like this, and in that case it actually is still possible, like a second, because wave 4 could technically go as far as 155 here, and if this is 1, 2, 3, 4, 5 ABC, then our target would be actually this area here for the next, yeah, and that would finish wave 5, and then we would expect wave 5 to go down. No, actually, never mind that. So it's more likely that this labeling here is accurate. So because while we eventually hit the 153 area, we didn't hit it in a way where we would expect it if this would just be impulse, zigzag impulse to make this an entire wave 4. And yeah, I'm not fully happy with that, but still most likely. So that basically our wave 4 finished here. We have our wave 5 that also, if we use the Kennedy channeling technique and connect point 2 with point 4 parallel through 3, we see that our wave 5 doesn't hit the trend channel, but it gets close to it, which is sufficient to say this could be our wave 5, and it exceeds wave 3, not by much, but still, and basically would indicate that, again, from here we now have, so that basically finished the green wave 2 that we started at the end of our wave 4 back here. So for that I probably need to go to hourly again, yeah, yep. So no, not hour, oh yeah, there. So where we have 1, 2, and basically I think we finished that wave 2 here, which would mean that we are now in this wave 3 up here, and on the 5-minute chart I already labeled part of it. So if this would be 1, 2 in this wave up, then this would be our base channel, and we would be waiting for a breakout here to indicate that we're now in wave 3 of this impulse. Now for that I would also need to be able to label this here technically as a 1, 2, or 1, 2, 3, 4, 5. Yeah, as always, when we jump on such low time frames, it becomes way harder to confirm things because we don't have 5 time frames lower to work out and confirm. And that would then need to be some kind of zigzag, although it could be A, B, C. So it could be that our wave 2 here actually ends here, which would change that channel a little bit. And if we check the Fibonacci retracement here, then our wave 2, while the end point, so the orthodox point of our wave 2 would be at 38.2 retracement, the low point would actually be at 61.8, and that's usually the area that we expect for the retracement of a second wave, or not always, but usually. Which means this is now our base channel, and we would wait for, or the next thing we would expect is a breakout to the top. Now, if we were to see any price below 147.81, it would invalidate this blue labeling here. So we'll pretty much know quite fast, I guess, how things are playing out. And if we see, or once we see a price go out of the trend channel here, we would basically use the Kennedy channeling technique to figure out when our wave 3 ends. We would then have a correction that likely doesn't have to, but very often goes back down to this base channel, and then our wave 5 that takes us further up. And that's pretty much where we stand. I had a quite busy day today, so I was not able to check Reddit or anything else so far. I'm gonna do that on my other screen, and if I find something noteworthy, I'm gonna drag it over. I'm gonna start with Super Stonk. And can delete that, and can keep that open, and yep, so, but that's pretty much where we stand, so where we're waiting for. So what do we have? phishing scams, trying to steal your shareholder control number. Interesting. Which means with that shareholder control number, they could probably submit your vote. Okay. Okay. Super Stonk Daily. Monday morning before I begin. Okay, there will be a YouTube live from Dr. Susan Trimbath with a PhD in economy. Interesting. On a non-monetized channel, got it. Okay, still the voting stuff. Yeah, like the voting doesn't affect me because eToro doesn't allow to kind of like vote on your shares, which kind of is like a moot point about eToro. Hi Tristan, great to have you. Welcome here. Great to have you here. Yeah. So Warden is offline, or I haven't checked anything today because I was busy with calls and literally just finished, yeah, like 10 minutes before the live, and pretty much just jumped online, and now I'm checking like what I missed for today. And vote, yeah. Okay. More notes about FUD tactics. Okay, not much here. So it seems like there has been a quiet weekend with not a lot of content and due diligence. There was one post. Here's what happens if there is overvoting. That's interesting, maybe. And the same shares voted twice. This is commonly the result of vast increase in share lending. Okay. Okay, then the vote has been corrected. Got it. So it will not impact the vote. Will this trigger? No, not directly. Okay, so it doesn't really matter. Okay, so we don't have a lot of content to cover. And Warden is in his exam period, so he will come online only for more. Oh, interesting. Okay, didn't know that, missed that. Yeah, I think it's for everyone tricky to find the time to be like, it's kind of like if you write posts. I mean, if you do live charting, it gets a little bit more tricky, but even if you just write posts for Reddit, you can schedule it whenever you want. But when you plan to do some lives, then you're tied to the market hours, and then easily you suddenly lack the time to get other things done. Yeah, I suffered the same fate when I streamed from Monday to Friday, simply then fell short on other stuff that I wanted to do or needed to do, and so that's why we're now streaming Monday and Friday, so beginning of the week, to see if the labeling changed over the weekend for some reason, and hopefully get some interesting movement at the beginning of the day, and then come up with the prediction or predicted movement for kind of like the next days, and then hopefully on Friday see that we were right, or what we need to change to be, or yeah, like to make our labeling valid again in terms of which rules does our labeling violate. Sorry. Nothing here. Yeah, that's one. Reading all the exciting due diligence posts over the weekend, expecting the same sideways trading on Monday. Well, Technically, we don't expect it anymore. Like, if we zoom out a little, I mean, there's always the possibility that I mislabeled something, yeah. But technically, if this labeling here now is correct, we are basically here in wave 3 of the wave 5, which both are waves that go up, and therefore, yeah, we should go up. And on the small degree, in this blue wave, we would also be within wave 3, and so therefore, I'd actually, if we're right, we should see some stronger upwards movement. It could go a little bit further sideways, but it should then eventually break this channel here and break it like noticeably, not just la slowly, but usually with a stronger movement. And as mentioned earlier, if we see a price below 147.81, that blue labeling becomes invalid, and then the question is again, if maybe we really didn't see the end of this 4 or 5 yet, then I need to come up with how that makes sense. There we have that base channel that we don't need anymore. So yeah, that's pretty much all we need right now. And up. Let's check, do we have anything else? So remember back in January? Yep, I remember. Yeah, that's the way to go. Shill-free weekend. That's interesting. Do we have any way to verify that? Like, so basically that Melvin Capital is not in business anymore. Would be interesting to see if somebody can confirm that. I enjoy you so much. I watched the first ad in completion. I appreciate that so much. Thank you for the support. Yeah, that's literally, if you like a YouTuber, that's all you need to do. Like, it doesn't matter if it's like my channel or somebody else. If you like somebody's content, that's all you need to do. Just watch the beginning, or like when there's an ad in front of a video or stream, watch either the ad entirely or at least 30 seconds, or interact with the ad, because then the advertiser gets charged and the YouTuber receives revenue. And if you do that with the YouTubers that that you want to support and the content that you enjoy, they will make more than enough money. There's no need for donations of any kind or stuff like that. So Chase says we could call. Yeah, I'm in Ukraine, so I'm not going to call US numbers. Obviously somebody could call, but I think a better way to verify would be if somebody knows the location of their office and can check if there is light, you know, if there are people or if there are no people. If there are no people anymore, then you know it's definitely closed. And if there's still people running around, then whatever number is posted online may just be offline. Maybe there were enough apes that called and terrorized them so that eventually they changed their number. Yeah, who knows? So. Yeah, I saw that tweet from Ryan Cohen, yeah. And the only thing... yeah, pretty much how it could be. Possibly as well, yeah. Since January 4th, on average, GME float has been traded. Retail owns the float. We've already heard that one, and we already looked at it. Was that lights on from Melvin Capital or from Citadel? Like, that's the one I remember that there was last weekend where all the posts about that there are lights on at 4 a.m. on Saturday to Sunday night. And Or it could be that that was them, I don't know, like if it was Melvin, then maybe that was the weekend where they maybe shredded some documents and then closed down the office, I don't know. Cool, yeah. The poorest 50% have 2 trillion. Yeah? So the blue line here. Top 1%. Interesting. Several professional apes. I will wait for all the newer, yeah. Enough posts like that. Thank you, Canada. Thank you, Japan. Thank you, Europe. Okay. Gain porn. That's some decent gain with 55 shares. What, last price 6,000? Huh? Does this seem right? Like, shouldn't last price be the last price of the stock? Okay, isn't really gain porn. Photoshopped, okay. Got it. Yeah. Up. Apes, cats, space cats, yep, moon cat. I think it's one of the nice things that GameStop itself, first of all, profits in quotes of the whole situation, and second of all, that they create then merchandise that really is nice. It's not just some kind to make money, but actually shows that they pay attention and come up with suitable things to show how they support us in quotes, how they also believe that there is room to grow, or at least that's how I perceive it. Might be totally wrong. Maybe it's literally just a money grab in quotes, yeah. But it's nice to see. You can keep your Lambo, yeah. I didn't know that somebody actually built a Halo car. Tempting for Ukraine as well if it would have a roof to, you know, like protect from the snow in winter. Still have 7 minutes to go to market open. Bank of America, busier than usual. Okay, got it. So it seems to be common now. Yeah, fake news everywhere. Yeah, give money to rich people and nothing happens, yeah, who hold it, bad for economy, yeah, common sense. And there are just so many creative people that come up with the greatest memes and content. Like, I'm not very creative. I like numbers and logical things as a developer, but like I enjoy seeing the creativity of others. Yeah? And I'm sure once the price starts to rocket again, there will be enough people that want to jump on that train or rocket. Like usual, when things start to go up, suddenly everybody jumps on board, and very often they do it too late. But yeah. Korean tendies, okay. Got that already. Oh, there was an update from Deep Fucking Value, and he got a ton of awards. But yeah, the point is he still holds some 200,000 shares. So for those of you that missed it, he used to have 100,000 shares plus a bunch of call options, and apparently he exercised the call options for another 50,000 shares and apparently bought another 50,000 at market. So he's now at 200,000 shares, which is kind of like insane. Yeah. That's just such a, like, I don't know, like crybaby tweet. Like literally, I'm blocked by Jim as well already for a couple of weeks, and as far as I recall, the only thing I did was simply mention like you couldn't be more wrong to one of his like ludicrous GameStop is over or whatever tweets, and as a result I got blocked, and now he's whining about other people. It's like ridiculous, yeah. It's like, how that guy even can still have a job, yeah, like, I mean, what, get ready? Why would anybody start selling? And I'm probably the stock most at risk is then probably even GameStop, according to MarketWatch. Although one has to admit, the last time we had a drop in GameStop, MarketWatch announced it before it happened a little bit, apparently, so maybe they know something we don't know. Free same-day delivery, great news again. Yeah, 4 minutes to go. Pre-market is doing nothing, literally nothing. Yeah, and yeah, over 101% short. Yeah. We talked about that. We talked about that last week and looked at the institutional ownership and just some insider ownership, and already realized that the short interest that's reported on the FINRA website has to be wrong. And since that's self-reported short interest, so like basically short sellers report their short positions and they can make mistakes, yeah, it's the logical conclusion that the stock is still heavily shorted, in my opinion. Again, just my opinion, not financial advice and so on. And yeah, I like that one where he complains he's called hedgy. I haven't seen that one, mostly because I'm blocked by him. And I don't know. I think it's like, you know, like if you take a side, so either your side is like no, shorts already covered, or your side is no, there will be the mother of all short squeezes. Well, then you also have to live with getting like, I don't know, like criticized by the opposing party. Yeah, it's literally, you cannot be a celebrity of some kind, so a media person, without that. It's like, well, for example, on this YouTube channel, things are very civilized. Usually only those people join that want to learn more about Elliott wave theory, that are also bullish on GameStop. Here and there, like last week, we had somebody join that suggested that he thinks shorts already covered, but he still believes that the stock will go past 1,000 organically. Then we just had a civilized discussion, looked at some numbers, and then he admitted that, okay, pool looks like it's really not covered, yeah. But even if you would say, well, I still think it isn't covered, so it's like very, very civilized. But on my other YouTube channel, I'm constantly on daily basis dealing with comments that call me a liar or fake or whatever, yeah. And if you make the choice that you want to be in the center, you want to position yourself as an expert in any field, you'll have to deal with that criticism, and blocking people around the block simply isn't a solution. It's like, it just shows that, I don't know, like you're apparently not so sure of yourself because somehow those comments hurt you. You can just ignore them. And it's not that hard. Or you can give back, you know, like, I mean, many of the people that whatever, like, apparently have only one brain cell, or not even that, on my other YouTube channel to leave comments, I partially enjoy spending time to point out how dumb they are. Yeah. And it's not my best trade, but I still, like, they bring negative energy, from my perspective, negative energy, yeah. And I just use that to my advantage to, like, kind of like be sarcastic and kick the ball back in their court. But I wouldn't go all the way and start blocking those people. Oh my God, you disagree with my opinion, and you maybe even call me a liar or something. Why should I block you? Like, if you want to spend your time doing that, I would actually, if I were Jim, I would just say, you know what, I get paid for those tweets and you spend your lifetime leaving useless comments as a reply to things I get paid for. So Wayne, yeah, who cares? And we go, markets open. Apparently we opened slightly lower. And very often, what we already know, I label something, I say it looks nice, it might be like this, and the chart then says no. Let's see if we go below 147.81 or if we actually go up to see if the small update that I made to the labeling on the weekend is actually accurate or if I missed something. And yeah, also on the other screen, I'll have to, why is it still pending close here? Shouldn't be so hard to close. Now all the markets are open, so close. Yeah, I took the time to look at my copy folio on eToro, so like basically this one here, where I'm copying other popular investors with a few $100s each, and decided to get rid of one of them, but I'm waiting for the positions to close, and so I can use that money to copy somebody else that I want to copy. And there we go, like never disappoint. Let's see how low we go. I should start to label it the other way, that I say I expect it to go down, and then I will say, but if we break the price at 160, it would invalidate my labeling, and then the candles will go up. Yeah. So I mean, it's still valid, but considering that wave 3 should be a stronger upward movement, a start like this doesn't invoke a lot of confidence. Not that it matters, because in the long run, anyway, like in my opinion, there's no way around the $1,000 mark for wave number 3 out of 5. Yeah, so not the end of the way, but like the stop along the way. And yeah, stop hurting Jimbo's feelings. Yeah, I know you're kidding, but it's really. It's really, if you make the choice. Like for example, when I made the choice to go live with Elliott Wave Theory on this channel, I knew that there will be people that doubt the theory, that maybe even if I label something wrong, which is literally then my error, say the whole theory doesn't work and so on. I knew that in advance, that some people might even maybe know more about Elliott Wave Theory than I do, yeah, because I'm definitely not the guy that invented the theory, so I still have a lot to learn there as well. So maybe somebody knows more and I make a mistake, and then maybe he feels the right to, or the motivation to call out what an idiot I am or so, yeah. Well, I would, like, yes, it would slightly agitate me, but in the end, it's like, I already knew that that's possible the moment I decided to do a live, and the same is if you're famous on Twitter and on whatever, CNBC and so on, famous in quotes, yeah. You kind of have to expect that no matter what you do, there will be people that are like, oh my God, I agree with you, and there will be people that are like, oh my God, what a fucking moron, yeah? And yeah, well, let's just hope, like, not about Jim. Wait, I thought your full name was Christian Elliott Wave Rauchenwald, yeah? Well, I'm still waiting for the legal forms to change that officially, yeah? But he's paid to do what he's doing. He should accept the consequence and not to expect to be praised. Actually, that might actually be one thing, like a tweet like this, bitching around, that apparently, like, I mean, it's like common sense. Literally, where was that stupid tweet? Like, it was somewhere higher up or not? Or, no, where is Jim? Okay, then it was lower. It's like with the stock, it's either up or down. Yeah, the thing is, so not one wasn't an attack, so it's literally saying, okay, I had to block so many people that don't know how to behave and just attacked me. And then, mostly from Reddit Wall Street Bets people. How the hell does he know that? Twitter doesn't show, oh, that guy came from Wall Street Bets, yeah? Like, there's no way. So that whole tweet by itself could already be another paid content, yeah, to basically further discredit the Wall Street Bets community, yeah, and Reddit in general. Now let's check here. That doesn't look so. Let's get rid of. Now if I get rid of that, if I move that point here, and then that point here, and then use this, then it would assume that this here is wave 1, 2. Okay, so. But if that's wave 1, then it needs to be 1, 2, 3. That actually works if it's a leading diagonal, yeah. And 1, 2, and then 3 would be whatever, and 4 would be here. So if that would be tools, Elliott wave, leading diagonal. Yeah, not like this, almost. So 5, 3, and then 1, 2, yeah, something. But yeah, it would work like this. So then that could be wave 1. This is wave 2 with the new low, and then the channel, however, changes, because then that becomes our base channel, and we would wait for a break or expect the breakout here to happen to confirm that we're in this bluish wave 3, which would then eventually have a correction very often to the space channel, and then we would have our wave 5. So, which overall could look something like, yeah, like this. So, yep. Theoretically, like the price level here for wave 3 is like simply put here by me, nothing binding, we'll have to see. Wait and see, patience. So it looks like the stupid position is now closed, and now I can copy that other guy, Renoy. And how much do I have now here to copy? 703.96, okay. Renoy. 703. And the stop loss for this is going to be at 20%. Yay, there we go. So got that done as well. And copied it. I think, I mean, obviously outside of the GameStop situation where we are hoping or waiting for the mother of all short squeezes, I really like social trading, like where you can look at, since we're waiting for some candles to develop, where you can basically, and there are other providers besides eToro as well, so you're not like, just because I'm using eToro doesn't mean that everyone has. You just would have to check if whatever broker you're using offers some kind of copy trading or social trading. And I really think that it's a great idea or a great way, because you kind of can diversify, but not just diversify in terms of like you're buying different asset categories, but you can look at their history. Like for example, this guy here has trading history since 2016. 2017 was obviously an insane year for him for some reason. 2018 not so well, but still also for a negative year, not the worst one. And then 19 and 20, good results in my opinion. 21 already a good start. And if we then look in 20, in March, April, when basically the whole COVID drop happened, his drawdown is also not so bad. So you could technically like copy that guy. The minimum copy on eToro would, by the way, be $500. And so that you kind of like diversify from your own trades, or you simply diversify into multiple different investors. Now there are obviously other statistics as well to look out for, like the risk score, the drawdown that the user suffered the most. What is he investing in is also nice to know. how many trades are profitable, yeah, and then we see he's not super profitable, so he gets it wrong almost 35% of the time. So basically 1 out of 3 times he gets it wrong, but the losses are basically way lower than when he gets it right. On average, only making 2 trades per week, holding them for 10 months and so on. So like copy trading, really one of the things I enjoy a lot, simply to diversify further. And so even if I screw up and my trades don't work out as well, that I know parts of my funds are managed by other people with years of positive track records, and so that it kind of like either increases my results, or when I'm screwing up, reduces the losses that I'm suffering. And to answer the question, hi Carl, great to have you here. Also, by the way, hi Michael, didn't say hello before, I think. And I'm sorry you mentioned this millions of times. The book that I'm recommending is actually Elliott Wave Principle, and you can read it for free online. There's a link in the description down below. There should be. Or you can order the physical copy. I think it's $29 with free shipping worldwide. And it covers everything about Elliott Wave theory. So starting with the basics, how things are separated into impulsive and corrective waves. So an impulse would always be 1, 2, 3, 4, 5. A corrective wave, there are multiples of those, which usually in most cases are A, B, C, but there are other variations as well. And then how those play together on different degrees and so on. So that's really the one book that I personally think contains all the answers, in quotes. But then the real difference really, or the real enlightenment more or less, or aha moment, only happens when you start to label things and start to get things right. Yeah, like I think Elliott Wave theory, one of the advantages is that it's not lacking behind. So if your labeling is accurate, you have a prediction for the future and not some indicator that moves slowly after what happens. Yeah, and you can verify how accurate it is by labeling the past, because when you label the past, of course, you have the advantage that you already know what happened after, yeah, which makes it easier to recognize what kind of pattern it likely might be. However, you can then still use the Fibonacci retracements and so on, and the ratio analysis that's mentioned in the book to show if the predicted price areas that you already got when you labeled this. So every time you reach a point, you basically already using some Fibonacci retracements and so on, or extensions, should be able to predict potential price areas where we go next. And so practice then is key. Yeah. And another thing I quickly want to check, Tesla, how they are doing. Hourly. Oh, that's not, don't like to see that. Why did you go there? Does that check out the... It's so often, or it's fascinating how often the 61.8 or the 38.2 are basically the area here serves as kind of like a resistance. So when you have like, in that case, a move down and then a correction up, yeah, or a counter move upwards, that those levels are so often the point where things turn around. Probably also here, not like if we just take this point here, yeah, there we only go to 50, but also within the area 38 to 61, yeah, it's like, and yeah, curious how that will play out, but that base channel is probably already, or is now already wrong, so we'll look at that later. And back to GameStop we go, and I can also, yeah, close that and basically up, and basically, yeah, like wait for things, how they develop here. And I would love to have a day again with a little bit more movement, so it's not just watching boring sideways movement. How are the rest of my positions doing? Netflix is not doing so great, okay. But other than that, oh, there I'm gonna have to. Gonna then look at Netflix in a second. Coinbase, okay-ish. Still correcting. Palantir. Are you guys like, I mean, yeah, you don't have to say, but are you guys like 100% in GameStop, or do you still have other positions as well? If you want to share, yeah, like if you don't want to, also perfectly fine. I would actually, like, to some extent, I really would like to be 100% in GameStop, but since one of my portfolios on eToro is a popular investors portfolio, I cannot do that because I have to manage the risk score of the portfolio. And on my other account, I recently decided to diversify a little and basically, basically open one position in Palantir next to GameStop. Although I opened that one early, if I'm not mistaken, so like currently at a small loss. Yeah, so Michael still has his microvision. I think it was microvision, yeah, MVis, or something like that. There, that one, where we had the labeling to say, well, not off to a good start today with that one here. But yeah, that was the alternative labeling that I actually mentioned, that technically this could be wave 4. And from here we go up. So because you thought this would already be wave 4, no. It's been a while since Friday, yeah, so. But possible that there still is like, that's still wave 5 that's gonna play out, yeah. And maybe even likely, maybe later we'll take a closer look again. One thing I want to check real quick is Netflix. Okay, there we're still within the realm of possibility that this is actually a 1-2 and we see our wave 3 coming. And GameStop, back to GameStop, and one green candle, yay. There we go, that's movement I like to see, so come on, push it further, up, up, up. Oh, so your put options are until May, okay, that's fine, yeah. Although May is around the corner, yeah, so like a week. My first investment literally ever was GameStop on January 16th. Yeah. I think that's one of the great benefits. I mean, I hope it's not only that people started to invest, even though ignoring all the usual things like risk management, diversification, and so on, yeah, but that they at least started to. And I hope that no matter how all of this GameStop thing plays out, yeah, like, I mean, there is what should happen and like what already should have happened in January actually if there wouldn't be buying restrictions, and there's then what will actually happen. So, but no matter how it plays out, I do hope that most people then still see that long-term investing is the smartest thing to do. If we take a look at, if we go to Google and just say, yeah, like Dow Jones, something like that, historical, and for the max time, you can literally see, well, there is, for example, here from whatever, 99 to 2009 or so, so a 10-year period where you would just be break even, but if you save monthly, you could basically cost average and still make a profit, yeah. But overall, like investing in stocks, at least in my opinion, not financial advice, you all know that, it's like the smart thing to do. Even if you like, you don't even have to have a lot of money. Technically, if you take 10% of whatever revenue or salary you make, and every month you invest that, over time it will most likely result you in more profit than if you put it in some other kind of investment form, yeah. And like, I hope that a lot of people, even after GameStop, still see that that's the case, simply because of the way how our whole financial system is structured, that everything has to increase in value. And it's not necessarily that stocks increase in value because the companies are more valuable. It's simply also the value of the company might stay the same, but because there is inflation, the stock price still would adjust upwards simply to account for that inflation, because the physical value of all the property of the company and the intellectual property of the company would also become worth more because of inflation. So if they could sell a part of the business for 100 million today, then maybe in 5 years from now, the same part of the business, although it hasn't improved in any significant way, would be 105 or 110 million or 120 million, simply because things get more expensive over time and so on, yeah. I held from around 40 all the way through 480 and all the way up to now, yeah. Well, pretty much similar to me, like I didn't hold all the way. Originally I figured I will trade the swings, so, and kind of like screwed myself with that a little bit, because at first I had 5 times leverage positions, which was great. But I had multiple of them. I also invested around $38 or so. That's when I started, or around 40. Yeah? And then I wanted to consolidate those positions so that when we squeeze, that I only have one position where I have to click on close. And when I did that, then eToro didn't offer the 5 times leverage anymore, and so I ended up with 2 times leverage, but with a closer stop loss. And then on the way down, or on one of the temporary, before we hit 450 or 440 or 480 actually, already was kind of like forced to close a few of those positions at a small loss, overall still in profit, blah, blah, blah. And that was then the point where I decided, like, okay, I'm not gonna swing trade, I'm just gonna buy the shares and hold, yeah. And since then also I've been holding and then here and there buying more. I'm actually likely waiting for the payout from my YouTube revenue from last month, which should technically arrive today, to deposit more, and will likely increase the GameStop position further. I know it doesn't seem like a lot here with 3 shares, but that's because during the last couple of weeks I actually switched and set up an interactive broker account. My main position is also not super imposing, yeah, or impressive, but basically would be here with 76 shares. So, and the average open here is wrong, because that's kind of like, I basically invested, I think initially $2,000, and with the 5 times leverage and 2 times leverage and so on. And then when I switched from the 5 times leverage to the lower leverage, withdrew my profits and basically just reinvested the profits, and then at some time later deposited my initial investment again and deposited a little bit more. So my overall average, I think, is at 97 or 77, one of those two. And so there's like, what did we say? We have 76 shares here, and then in my popular investors account, where I cannot hold that much, unfortunately, there we have another 2 shares, making it 78, and then here we have 3 shares, making it 81 shares. And yeah, like, depending on when this week my YouTube revenue gets deposited, I buy a few more shares. We'll see how much. 55 is a great average. Like, I actually, I screwed myself again. Like, GameStop, once we have a squeeze, it will probably be the trade of a lifetime and the best trade that I ever made, but it's also the trade that I mostly mismanaged. Like, literally, I could kick my ass here, yeah? Like, because when we went down to 50, I was like, should I buy more? Should I buy more? I'm not sure, and so on. I was literally thinking, should I not? Yeah, it's not that I didn't believe that it will go up, or that I thought about maybe I should cut my losses or something. I just was like, should I really? Yeah. And then I ended up, instead of buying here, I ended up buying at 140 or 150 again. Yeah. So basically, again, screwing myself here. Yeah. But what can you do? It's like, after all, still enough shares, in quotes. I mean, even if 1,000 would be the moon, it would be a great trade. So, and then after taxes, something like this, minus an initial investment of like 5,000 or 6,000. Yeah. So even if 1,000 were the end, still a great trade. So, but definitely on the other hand, also the one that I mismanaged wherever possible. How are we doing in terms of volume? Almost nothing, yeah. So 75,000, 43,000. it's like, I think the one, I'm currently already up by a lot, like legit more money than I've ever seen in one account, still happily holding. Yeah, I mean, my positions are also up overall, yeah, but yeah, like, I don't know, like how much are they up? Like yeah, like in an absolute amount, not that much, like 4,500 euros, so like almost 100%, 90% of what I invested. So, and that's considering since January, so it's like an acceptable period, more than acceptable for those gains. But overall, still, yeah. Last squeeze that I've read about with 140% shorting went to 30K, so I guess this should go over 1K. I also expect it to go over 1K, but I still like expect that at 1K we have enough paper-handed bitches to create, up 1 month is too far, but to create kind of like that wave 4 here, so that we have like our drop here. So, and then from there, we also have to consider there will be trading halts. We also know that Citadel already violated regulations multiple times, that during trading halts they still executed orders, so which would be causing basically trading halt at whatever, at 1,000, or when it shoots through 1,000 at 1,200 or so, and then Citadel violating that halt and yeah, selling some shares, so that after the 5-minute halt, suddenly the price dropped significantly, maybe not to 500, but dropped. And then some people panicking and helping it to drop further and so on, before we lose those paper-handed people and then go to wave 5. So where then we again would have trading halts and minor ups and downs and so on the lower time frames. I think on a daily chart it will be fairly straightforward, likely maybe even just like a straight candle up, or maybe it goes over like 2 or 3 candles, like one up to 1,000. Then who knows, maybe, yeah, like hard to say. Like I think on the daily chart it will be a little bit harder to label anything, but if we look close enough, maybe not 5 minutes, but maybe on the hourly chart, 30-minute chart or so, we should be able to label things nicely. And just from a logical perspective, it kind of like seems reasonable, or not minute chart, yeah, it seems reasonable that there will be some people that simply don't believe that it can go further than 1,000, and there will be enough, in my opinion, enough volume at the 1,000 level for people to take profit. Combined with, once it goes slightly beyond 1,000, then there will be people that, oh, I've never thought that it would go that high, I'm gonna better sell now before it drops again, yeah? So maybe at 1,000 they add a trailing stop loss or so that when it goes up, the stop loss follows along. Then we have another trading halt, Citadel, or for whatever reason the price drops a little and it triggers those stop losses, and causing then the wave 4 that we would need to see anyway, yeah? So I put in 3,000, I'm up 20,000. That's nice. That's nice. Like, congratulations on that, yeah. But it's still, it's like, it's not life-changing money, you know. Like if you take that money out, then you would have to pay taxes on it, likely, because it's like you didn't have the shares for at least a year and so on. So depending on, so that would be like 17,000 profits. And I don't know how the tax rate is and where you are, but in Germany you would basically then receive $12,000. Which is like a decent profit, like 10,000 euro. But how does it change your life? You know, like it's like, it might temporarily help you in terms of not struggling with the rent, or maybe, you know, like whatever, like some medical fees, or I don't know, like it might help in a million different small ways, but it's not that it's gonna be like, oh my God, my life has changed forever and I can really make a difference with that money. So, tax rate 45%, yeah, like that's gonna suck, yeah. Sorry to hear that. So, really sorry to hear that, yeah. But yeah, so like, but you know, like the only reason to further hold is because you see further upside, because you believe, yeah. Nobody knows for sure, because, yeah, like if anybody would know for sure how a stock moves and what it does, it would be the richest person in the world. but based on your due diligence and your research, you also believe there is still more upside to come, and so you hold because it's the smart move, yeah. And I'd like to actually, that's why I upgraded here from 1 share to 3 shares. I actually wanted to, I had initially a sell limit order at 1 million per share, but I tried to set it up as sell for 1 share to have it at 1 million, for another one at 100,000, and for another one at 10,000. But that's where I also by accident, not sure if we can see it on the chart. Oh yeah, where by accident basically sold my shares and had to buy them again. But it would be nice, like I'm still looking into it. Apparently, it should be possible for me to just say right click and trade, and maybe not trade. I'm gonna look it up. There was let's see what it is, and quickly doing that up. And up. Where's that email? Motive wave. There. Limit sell orders at various levels. Yeah, so trade limit orders. So that would then basically be that one. And the last time I tried that, it actually, yeah, like I don't think that's gonna work. Because I think that this way, I mean, I can try, let's say this one at 10,000. And if we zoom out 1 month, okay, it's still here. The last time I tried it closed my position, but probably I did something wrong, so. Yeah, that one solved, dip. And I can actually check in the interactive broker terminal as well if that order shows up. Yes, like I think it's like, so David says, so selling at 1,000 and seeing that after it goes to 30,000 or even higher, that would make one very sad. I think it's like the same scenario, like if you think about Bitcoin, and people that maybe sold at $300 or $600 per coin when they had the coins already years ago, and now seeing that that Bitcoin is at what, I don't know where it's today, but like 50,000 or maybe still $60,000 per coin. Although with the major difference that they sold it years ago and were like back then happy with the profit, and since then a lot of time passed, whereas for doing a squeeze, it would literally happen within like 1 day, 2 days, maybe 2.5 or 3 days. And so you sell it, maybe then you sell at 1,000, and then a couple hours later you realize just how dumb you've been, yeah, in my opinion, yeah, not financial advice. And yeah, like quickly checking the interactive broker terminal. You see, I'm not sure. I mean, I hope that interactive broker is smart enough. You guys cannot see that screen right now, but because it doesn't really show as like a closing position, so I'm not sure that that sell limit would actually close one of my shares, or if it would try to create a short position. Yeah, but let's assume it does what it's supposed to do. So we're gonna say another limit order, sell limit, and that one is gonna be at 100,000. Submit. And that one then throws an error. And the error is, do I get to see that? In order to prevent Interactive Brokers from breaching its daily limit at the exchange, we cannot accept sell orders with a limit price that is so far away from the market and likely to be trade busted. Okay, so I cannot enter the 100,000 right now. Got it. And that's also the one thing that I'm worried about again, that like this year, I mean, it shows it now that C is actually for me to cancel that position. Yeah, but yeah, we'll just have to keep an eye on that, how it develops. And once we shoot through 10,000, then I will see if that works, and I can then likely place higher sell limit orders. Yeah. By the way, you guys cannot see my shares here, so it's like small quantity in the corner here. But I'm going to increase that one. I really like Interactive Broker overall and MotiveWave, the software that we're using here specifically. So likely going to increase the positions that we hold here. Going to move that one like so up in the next couple of days. And yeah, so chat is back. Yep. I mean, you know, like one of the things is also that we might not, I mean, there will be a huge, almost vertical upwards movement, but there's also so much automated traded going on nowadays that we still will see some minor swings. Of course, when everybody gets margin called, there's not much more to swing left, yeah, but until then, even if we all hold, there's still automated trading going on, so that there will still be certain movement. And there are obviously the people that just day trade GameStop, or yeah, like for some reason, maybe they lack the patience, maybe they invested money that they actually need this week to pay their rent or whatever, yeah. So there will still be the cases where we will have like some wave movement to go. Didn't Interactive Brokers restrict in January? I'm not sure about that. Honestly, don't think so. Would need to check brokers that restricted GameStop in January. Let's see if we find that, like Robinhood. Seems that you're right. That's obviously bad. Free stock trading pioneer, blah blah blah. Interactive Brokers. Thanks for pointing that out. Just ruined my day. But like with Interactive Brokers, what I see here is, as of midday yesterday, they put the option trading into liquidation, and long positions will require 100% margin. So basically, first, I mean, I have a cash account on Interactive Broker, not a margin account. I switched it on purpose because for a margin account, your minimum position size is $2,000 euro. No, like I appreciate that you pointed out. Like I knew some of the brokers that had restrictions. I didn't know that Interactive Broker has it, but I think it makes a difference. I think like what they did, so Interactive Broker has put AMC, BlackBerry, and GameStop, and one or two others, option trading into liquidation, yeah. And then in addition, long stocks position will require 100% margin, and short stock positions will require 300% margin until further notice. So they didn't restrict the trading as far as I see for your shares, but they simply restricted the option trading, which, yeah, like is not what I'm doing. So, and there might be like for options, I'm not too familiar with option trading, like what kind of like background mechanics there are. So I think that might have been something that's acceptable or reasonable or whatever, I don't know. But looks like shared. So if you buy shares, that hasn't been restricted. Only if you buy shares and have a margin account, then you would need 100% margin. So basically you cannot buy on borrowed money, which I think makes sense when a stock goes up and down like GameStop did. In one day up a couple hundred, next day down 100 or so. But yeah, we'll look into that. So, but based on what I read now, I'm not worried that I get screwed here in some way because I have a cash account. So all that margin requirements change that they made doesn't affect me. So yeah. Plus the benefit is once we have a MOAS, I'll anyway try to live stream it, which means there will be a recording of me smashing a sell button at some point. Yeah. And if that doesn't work, I definitely have enough proof that it's for technical reasons or manipulation and not that I didn't sell. Yeah. So, but yeah, just making sure because I thought I heard something about it. Either that or it was their CEO that went on TV. That could also be like, I mean, Interactive Brokers chairman Thomas Petterfy told CNBC Thursday the broker's decision was protect the market and clearinghouse, blah, blah, blah. The body responsible for a trusted transfer, blah, blah, blah. We're concerned about the ability of the market and the clearing systems through the onslaught of orders to continue provide liquidity, about the financial viability, blah, 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 yeah. I need to look into that further, but on first glance it looks like Interactive Broker again, like I think there's, I mean, based on what I saw, I really think there's a difference in saying, okay, I'm not going to allow people to buy like what happened on Robinhood, and at some point eToro also had to disable the buy button, but they mentioned that their liquidity provider restricted buying, so they simply couldn't do it anymore. Might be true, might not be true, but that's the official site, yeah. And I will need to look it up. Maybe I'll create a post on Reddit and ask some other users. But overall, I like Interactive Broker simply because of the integration. So kind of like being able to trade in one platform. And we have our like stronger candles here. So, I mean, we need a little bit more to be sure, but it looks like this will be our wave 3, which usually, by the way, would be another one. So like, as we know, each wave consists of subwaves, and a wave 3 would basically consist of another 1, 2, 3, 4, 5 impulse. Yeah. Now I might jump the gun here, which is what we always do here, or very often do. But basically, if we look here, we see that this here is a little bit more than the 38.2 retracement. So technically, it could be that smaller impulse here, and gonna need to move that point here. Yep. So that smaller impulse here is like this: 1, 2. And then 3 is in the progress, and then 4 and 5 should then overlap with this one here. And then when we zoom in a little bit, we would be able again to draw another base channel, and where now this candle indicates that we're in wave 3 of this smaller 1, 2, 3, 4, 5, where then likely, again, like we might go up even further and then see a drop down to that base channel. Not a must, but very often we drop down to that base channel before we then finally go up here. Yeah. On top of that, yeah, it would be kind of like, so we have 5-minute candles here, which means in 2 minutes that candle is going to be over, and we definitely should have a little bit more candles here to reach that point 3. Not saying that it will be at this 160 line, it's just where I put it right now. But that's somehow, like, it's confirmation that, to some extent, that this here likely is actually the proper labeling, so that's good to know. And I also honestly would like to move my GameStop shares from eToro, preferably right now, to Interactive Broker. But eToro, that's one thing that's kind of like a downside. They don't do share transfers of any kind, yeah. So you cannot transfer existing shares to them, and you cannot transfer your existing shares out, which means I would have to close the position, withdraw the money, which takes a few days, and then deposit the money and buy the shares again. And I rather risk like some issues when trying to sell at eToro than risking to miss out totally because there is like then $12,000 just stuck in transfers somewhere when everything might happen. Michael stepped out for 2 minutes and the candles went up, so maybe, why don't you leave? I mean, it's not that I don't like you, but you know, apparently it's not my wife's cooking, but you leaving that makes the difference, yeah? I forgot what those green candles looked like on GameStop for the last few weeks. Yeah, it's like, but we are on the 5-minute time frame. It's kind of like we're easy to please here because it doesn't take a lot to create a candle like this. But it's true, we haven't seen them in a while, yeah, so. I'm curious if some of you or any one of you still has a wave basis account. And if you then were on the 5-minute chart to label this as 1 and 2, where would it predict your wave 3? Like 160 or higher? Kind of like that makes sense as like a wave 3 prediction. And now we would see a candle down, or maybe 2 candles down to 158. And then it would give us our final channel. Our final channel, or our destination channel, would then be this one here. And then wave 5 would actually be, yeah, like somewhere here-ish. But maybe I'm jumping the gun here, like I often do, and we will see a few more candles, yeah. Michael can log in, yeah. Hi, Captain Caliente. So maybe it's not Michael's leaving, but Captain Caliente showing up that's responsible for those green candles. Or that was because Michael left, and that now is because Captain Caliente shows up. It's hard to say who to blame. How does it look on the minute chart? So I think on the minute chart it actually checks out nicer. Yeah, like I mean, I don't want to stay there because that's literally too much data to work with. But that we will basically like maybe touch that line of the channel. Don't have to fully touch it, but you know, like we're doing now. And that would also on the minute chart actually be A, B, C, already a decent zigzag. So with that last candle here, if we touch the trend channel or not, we could basically then continue upwards to finish that wave 5. So yeah, they are the catalyst. Yeah, there's nothing with hedge funds, and so it's literally Captain Caliente and Michael Clark that are responsible for the movements in GameStop. Bum, bum, bum. Yeah. Okay, so if we go like this, then that would be the next point where the price technically could bounce off. Although, oh yeah, we're still within that, yeah, so not a problem. Hi Osama, great to have you here, by the way. Didn't see you earlier, maybe you just joined. Oh yeah, no, I saw your message, but earlier before that didn't see you. So maybe it's your fault. Maybe it's not Captain Caliente that's responsible for those red candles. Yeah. Let's see. Like it would literally be nice to, for a change, get things right again. And we also like our bigger channel is here for the blue wave. Yeah, for wave 1 and 2, where I'm not happy that this would be, or could that be? Wait, 1, 2, 3, 4, 5. No, that doesn't check out. So definitely 3, 4, and then now we have wave 5. Yeah. So, but basically that slightly tilted channel here would be the small one of this of that wave pattern 1, 2, 3, 4, 5. I know it's not labeled properly on the 1-minute chart, but which would indicate that here we can have our turnaround and go to that wave 5. Which on the 5-minute time frame looks more dramatic. Wave basis shows 161.64. 161, that would be here. If it happens with there we really would need to go on the 1-minute chart now. So fix that. Okay, auto fixing doesn't do shit. So unfix that. And our final channel, if this would be, there's the low 177.41. low 150, 150, 150, 150. So any of those candles will do. And so if we take that here, and let's say this is our 0.4, that would be our 0.3. And if it then roughly takes the same time, then yeah, 162 would be for me. So they have 161 to 164, and we would be actually like in that area here. So kind of like 161, highly unlikely, but more like 162 to, yeah, like 164. Seems like a reasonable assumption, yeah. Let's see how it plays out, like up. Some sort of a reverse high score. How low can the volume go? Like, yeah. I mean, that's already an improvement. Like, it's like 5 minutes and 250,000 shares. Yeah. It beats other days and candles. A, B, C, but question is if we here also have to, or if we here would also see an entire ABC pattern, which I don't necessarily expect because we're looking so close that we likely will only be able to see it on ABC. Although if that candle here goes also down, then it's getting challenging again. I mean, there's still 30 seconds left for that candle to do something. Can someone poke it with a stick, please? And on the 5 minutes, we still have 3 minutes left for that candle, which should go up. One, two, or 1, 2. I mean, if this here would be 1, 2, then that would be 3, 4, 5. But that doesn't check out because then that profit target that we have here only indicates that we would have finished wave 3, and then wave 4 would actually be on this channel here. And then we would already be in, yeah, but that wouldn't, no, that wouldn't check out in terms of relationship because then wave 3 would definitely end up being the shortest. So yeah, got a lot of Elliott wave theory and the low volume in GameStop, although right now I said it's like slightly more, so 250,000 and 200,000, so pretty much 500,000 shares. Sleepy today. And up we go. Maybe. Oh, there's a post, list of brokers that restricted trading in January. Let's see. And it says interactive brokers, okay. Which then would only leave TradeStation left for me as a broker that integrates with MotiveWave. But there are several reasons why I don't necessarily want to do that. Like one of them would be that I still would need a separate data feed provider like bar chart. Another one would be that my accounts would be in US dollars instead of in euro, and I would lose money based on the conversion rate. And tricky choice. I wish there would be brokers like Fidelity and so on available. I think today is 21 days from the last failed to deliver reset. Theory floating that we should see big movement today. Hopefully this is true and only the beginning of a big move. Well, actually yes, like last week, I don't know who of our viewers here actually posted the dates where we have the plus 21 and so on. But I remember that the 26th was one of those days. So which would mean more movement today. Obviously interesting if this movement goes in our favor. Now that candle here turned into a green one, which is already nice, but basically what we would expect to see here, we might not be able to see it fully on this 5-minute time frame, but on the 1-minute time frame that we basically get from this low here, another 1, 2, 3, 4, 5, that basically makes up this wave here. Now again, when I switch to 1 minute, the labels don't add up properly, and I'm too lazy to move them here because we usually don't stay on that 1 minute time frame. But so basically that would be where wave 4 actually would end here, wave 4, and then 1, 2, 3, 4, 5 up here. Yeah. And if we would really go crazy, we could use Fibonacci retracements and see that here this candle is a 61.8 retracement of the move up here. So technically it could be 1, 2. And as long as this candle doesn't get lower, obviously, which means that here we would then expect soonish a stronger candle 3, 4, and eventually something that combines us up here. But yeah, so a little patience here, looking good so far. Today I heard also some kind of market liquidity test. I read that only in one post, but also only the headline, so no clue about details there. But also if we look at the rest of my watch list here, we can see that pretty much everything is green today. So Oxygen, oh my god, how can they still go that crazy? That's true. No, that's daily. What, that's daily, really? Can't be daily. Did we look at them daily? That candle was green, so that could actually be AB. And I know I'm jumping from asset to asset here, but which means that then C technically could be here-ish. Oops. So before we drop down, or before we have what that was, wave 3, and that's then wave 4. Before we have another drop basically that would finish that endless wave 4, which would take us roughly to here. Yeah, but yeah, we see basically that most of the market is green, even the stocks that I don't want to see green, like Tesla. And yeah, really need to look into that later, why this is going like that. Have I been wrong and we will not see this pattern here, ABC, or is that still possible? And GameStop in comparison is actually not doing super well. Yeah, if we sort this, we see, yeah, your microvision is going like crazy, that we already saw earlier. Oxygen, even American Express, not doing bad today. And GameStop. A, B, on 1 minute that checks out, yeah, so there it would basically, if that is be down, up, yeah, but not in price, yeah. And if it's A, B, C, then we would get lower here, but that doesn't make sense because then we would actually, well, it would be possible in terms of candles because we would still stay above this red, that one, wave 1 here. So even if it's A, B, C, we would then bounce off the bottom line of this trend channel very likely. And it would also make sense in terms of rules of alternation. If wave 2 is a quick and sharp correction in quotes, or a fast correction, A, B, C, then wave 4 would be a more complex one, yeah, so longer. But In any case, likely that we'll see, and that's on the 1 minute time frame, so it's like take it with a grain of salt. In any case, likely that we see either, as I said, a little bit more sideways, slightly down movement to hit that bottom line here of that base channel, or that from here already we go up and then complete our wave 5, which would have as its target, assuming that our wave 4 is correct, yeah, like this channel line here, or the median here. So, or sometimes falls a little short of the entire channel when wave 3 is an extended wave for a very strong movement. So many possibilities, and only time will tell which one is actually true. So, Cody review, yeah. What? Oh, like, oh, that's just 1 minute, okay. But still, less than 10,000 volume here, and 50,000 here, 115,000, 200,000. It's like the whole volume got used up. So here, volume, 130, 250,000, and then 250,000, 100,000, and now their volume is dead again. Great. Maybe that was it for today, and we now see sideways movement till the end of the day, making this again a very, very long wave 4 basically, so likely it would then move that wave 4. And it's like patience, like this really GameStop is like a training exercise in patience and in waiting for the right thing to happen. And actually, like somebody just shared on eToro, like I'm not super happy about that, yeah. So apparently, I will need to look into that, yeah. But there might likely be the official terms of service of eToro. If we think, in our reasonable opinion, that an exceptional event has occurred or is occurring, make the following changes to the eToro account without telling you. Close your open transactions at a price that we reasonably think is proportionate. Yeah. Not something that installs confidence. Might need to consider, if I sell on eToro my GameStop shares and withdraw the money, but then until I get that money back, in your humble opinion, how accurate would you say Elliott waves generally are? Like, that's a tricky question. I can answer that, yeah, but there is like, it's like with so many other things in life, it's about perspective. So what I can say is Elliott waves are 100% accurate, yeah. While the price targets might sometimes fall a little short or get exceeded, Elliott wave theory in any asset that's not super heavily leveraged and where mass psychology applies, so where enough people are involved in trading it, so let's say stocks with whatever, like a certain market capitalization, yeah, Elliott wave theory applies, and it applies 100%. So, and therefore it's 100% accurate. The problem with that, however, is that at almost any given time or at almost any given moment, multiple patterns apply. Yeah, so if we, best example in GameStop, yeah, if we look at, I think on the hourly we see that, yeah, or hourly, daily actually, yeah. If we, daily is a little bit, adjust that, yeah. If we look at this year where we had the high at 348.50, now it might not be super visible on the daily chart here, but on the hourly chart and on other time frames, we are able to clearly notice that this is a A, B, C, and it's almost perfect even, because if this here is wave A, and then that high point here is wave B, yeah, then you see that wave C, you see how perfect that matches. I mean, it's a little off, but simply by saying A, B, and then C, we would already know almost with laser precision the low that we reached then 4 days later. Yeah, or that we started 4 days later. We reached it 3 days later, and then 4 days later we took off from there. Yeah? And so based on Elliott wave principle, this would be a wave 4. We see that this is blue wave 4, and wave 4 is usually a corrective pattern, and very often it's a zigzag, A, B, C. So if we would jump back in time, so we don't see all of this, we don't see it, yeah, we don't see this right area here, so we're still at the earnings call, we could say, okay, that's A, B, C, wave 4 is over, and we buy, because we think now we are in wave 5, and this is actually what happened. Now, the next thing is, if we think we're in wave 5, it should split up into 1, 2, 3, 4, 5, yeah? And we basically, so based from here, and that this is a nice ABC, assumed, okay, that will be 1, 2, or 1, 2, and so on, until we were more or less proven wrong, because we couldn't confirm the waves anymore. And how do you confirm waves? It's like when we say that this is a wave 4 is a corrective pattern, so it in 70% of cases will be a flat or a zigzag, and both of those are labeled A, B, C, and follow certain patterns. Yeah? One of those patterns, for example, is that wave C very often in a zigzag is almost identical in terms of duration and price movement to wave A. Yeah? And then when we zoom in, wave A, so if we look at a lower time frame, we confirm that wave A is actually a 1, 2, 3, 4, 5 impulse. Yeah? Wave B, from here from A to B, is another zigzag, and wave C is another impulse, yeah? Or ending diagonal. And so while we were able to confirm that, we made the reasonable assumption that this is wave 4, and from here we have now our wave 5. So we already expected that from here we will go further up. Yeah. However, what then happened in reality is, like, we could label it for a couple of days, and suddenly our labeling didn't make sense anymore, and we had to adjust our labeling and adjust our labeling until we ended up with what we have now to say this is a double free correction. So it's a zigzag followed by a small zigzag up here, followed by a triangle, although on the daily time frame the triangle isn't really visible. And then we assume this is the end of our wave 4, because double free corrections are already rare in quotes. Yeah? But if we now, as what I mentioned at the beginning of today's stream, if we now look at this, it actually looks possible that this is all a triangle. Yeah? I'm saying it's possible, not that it's the case, which means our wave 4 doesn't end here, but actually ends here, and from here we start our 1, 2, 3, 4, 5 upwards. Yeah? So the point is that when we label the past, it's not always easy, but it's easier because we already see what will happen in the future, and as a result we know roughly which wave ends and starts. When we, however, label the present, so up till now, we're labeling unfinished waves, and unfinished waves leave us often with multiple possible patterns, and then it would be up to us. I'm not perfect at that, but it would be up to us if we then take the Elliott wave theory book, and you look then on page 86 or so, it starts. You have the rules for each pattern. So those are rules that you are not allowed to violate, and the guidelines for each pattern. And then you would check which of the possible patterns fulfills all of the rules and most of the guidelines. And that would then become your so-called preferred labeling. And then you would look at what other labeling could be applied that still fulfills all the rules but less of the guidelines. That would then be your secondary labeling. And just because one is preferred and follows more of the guidelines doesn't mean that it's the one that will come true, but it just means the one that is most likely to happen. So while Elliott wave theory, when you apply it to a chart, should apply in 100% of cases, the simple fact that you have a certain flexibility to Elliott wave theory, because you have 3 impulse patterns, so you have like the 1, 2, 3, 4, 5 regular impulse, but then you also have something called the leading diagonal and an ending diagonal, which are also labeled 1, 2, 3, 4, 5. and you have a total of 18 corrective patterns if we also count the double and triple corrective patterns, which are then used in wave 2 or and or wave 4 of impulse waves, yeah, or after wave 5, because then if you have a 1, 2, 3, 4, 5, it automatically is part of another wave. Yeah, this 1, 2, 3, 4, 5, if we take it completely out of context, could be wave 1 of another impulse, it could be wave 3 of another impulse, it could be wave 5 of another impulse, but it could also technically be wave A of a zigzag, wave C of a zigzag, and so on. So there's a lot of flexibility with Elliott wave theory that when we're looking at the situation right now, I think my labeling is correct, but it doesn't mean that it's the only valid labeling. And if we would spend a lot of time, we would likely have like 2 or 3 charts open with slightly different labeling and then go through all the details in terms of which rules and guidelines are valid in which of the patterns and to decide which one is the preferred labeling that's most likely to happen, but still with the option for the alternative labelings to happen. Yeah? And to answer your question, however, in a way that you likely would want to perceive it, if you Google for Elliott wave accuracy, you likely I only found one source, but I didn't verify it, that states that it's 84% accurate. Yeah? In any case, the one thing is, if we think about Elliott wave theory, so the point that you have wave 1, 2, and then wave 3, 4, 5, yeah, assuming you label wave 1 and 2 and you confirm that this wave 1 consists of another 1, 2, 3, 4, 5 and that wave 2 here consists of ABC, for example, and you already have a strong enough sign that this here will be another 1, 2, 3, 4, 5 that goes upwards, so you would end up maybe buying here, then it means that your stop loss would be at this point 2 at 148.76. You bought at, let's say, 152. Yeah, so you have like $3.24 down to your stop loss. And your profit target for wave 3 would then be, you need to use the Fibonacci retracements for that, would be, let's say, 160. Yeah, so you bought at 152, so you have like $8 upside to take profit, or where you then start using a trailing stop loss or something like that, but less than $3 downside. So even if your labeling is only correct in 50% of the cases, if you then also use the stop loss accordingly, so basically at the point where your pattern would become invalid, because if we would have a candle that goes below 148, it would declare that point 2 here invalid. And or even more on a smaller scale, oh no, that's actually on a bigger scale, yeah. And so anyway, so basically if you suck at labeling, you very often pick the wrong labeling and so on, but the simple fact is, if you just try to trade wave 3, maybe wave 5 as well, then wave 5 I think is even the one easier to trade, yeah, because as said, when we have in blue here this blue here, 1, 2, 3, 4, 5, then what happens is when you connect point 0 with point 2 with a parallel through point 1, you get your so-called base channel, and then once you have a breakout from here, it indicates that you are in wave 3, yeah. We also have a smaller base channel down here in this red, and very often once you reach your wave 3, wave 4 will basically come down and touch this base channel. It doesn't always happen. Sometimes it falls short, sometimes it hits the medium or even the bottom. But what does this mean? When you trade wave 5, you can basically, if you label 1, 2, 3, and then you know that you're in wave 4, you can set a pending buy order at that channel or slightly higher, and then another one at the median, and then another one down here, still considering other rules, because, for example, wave 4, unless it's a leading or ending diagonal, cannot go into the area of that 1. Yeah? So in this case, if that pattern would play out like this, we wouldn't place a buy order at the bottom line because it would be a violation of the rule. So we would at best place another buy order here at the median. And so with your profit target, at least 70% recovery of whatever we lost from the 0.3. Yeah? And so In that case, basically, while your stop loss could then be, for example, at this wave 1 here, because if wave 4 goes in there, it's not an impulse, but you would then need to verify if it could be or it would be allowed to be a leading or ending diagonal. Otherwise, you could have your stop loss at this 1 point here. So again, assuming that you try to trade this 5th wave then. And you would basically have a very short stop loss. So at 153, while your buy orders might be 157 and 154, obviously 154 being the bigger position, so in case it falls further, you really average down or increase your position because you anyway have a very small stop loss for that bigger purchase, so your absolute loss if you're wrong here is not that big. However, if you really were right, you have more upside as well because you would go at least 70% back up to that wave 3, in most cases beyond that wave 3. Yeah? And that means that even if it's not accurate too often, so even if it would only be 50% accurate or you label it only correct 50% of the time, your winning trades would be way bigger than your losing trades. In return, you end up making more money. And like if we look now, we're going to jump on the lower time frame here, but we see, for example, that we're likely here. So first of all, we went lower here, so this is not the end of our wave 4, and our wave 4 would technically need to have an end here now. But if I move that over here, we will see something happen. Oh, we don't even. So that one is lower at 153.80, and that high here is at 153.73. So there is literally a 7-cent difference now between this point and that point, and that's the only reason why this labeling is still valid. We would need to check if we could verify, which we cannot jump lower than 1 minute time frame, so it's challenging, but if we can figure a corrective pattern in here, yeah. And if the price would fall lower here, those 7 cents, then this labeling here becomes partially invalid. It would then need to be, we're in wave, but that's wave 3. Or then that labeling would actually become invalid because if it's wave 3, it always has to be an impulse. It cannot be a leading or ending diagonal. Yeah. So then we would need to check where we got it wrong. So we can also just to check here. So we have a retracement to the 50% line. So yeah, gonna need a little bit of waiting. But in other terms, it means that if we use the Kennedy channeling technique, so we have our point 1, 2, we draw a channel, and our assumption is that this is our so-called base channel. When we have our breakout to the top, it creates our wave 3, and we can create basically our acceleration channel. So we connect 3 with 1, parallel through 2, and the moment we have a breakout here, it would be our so-called deceleration channel. And for that, we can remove that one, where we take the point 3 and try to roughly, yeah, might not be the right, let's get rid of that one. And so it could be like this. But in any case, we would kind of like try to encompass most of the candles, and when we have a breakout to the top, it would indicate that our wave 5 started. Yeah. Now, the point is, if we do that properly, we would end up with something like this, and we would already assume that here wave 5 started, which would also align with a few other points here, but then the movement goes like this, telling us definitely not. Yeah. So that would be one of those cases where maybe we would have opened a buy position here at 155. With we're looking at a very small scale, but at the end you would do the same on an hourly time frame or on a daily time frame, where then obviously the price movements for each wave are bigger. Yeah. But so where we would have bought roughly at 155 maybe, or let's check exactly where we would have said, okay, buying seems like a smart idea. So likely with this candle here, so like here or here, so 156 even, where we would have bought. Knowing that we will go at least to 70%, so 158, but likely expecting to go higher. And then this here would happen, and our stop loss for that would be at 153.73, so which so far, again, we have not risen below. So we're still, our position would still be open, but we would be at a loss at the moment. And yeah, I already don't like how this develops, so likely something with our labeling here is a little off. But technically it's still valid for now, so we'll have to see. And also, again, rule of alternation, if wave 2 is a simple corrective pattern, wave 4 usually tends to be a more complicated one. Definitely the case here. Small short corrective pattern would be here, and that here is again like something messy in comparison. And if that would be indeed our wave 4, then we could draw our destination channel, which would be 0.2 versus, or 0.2 and 4 parallel through 0.3 and extend it. And I'm going to remove the base channel for now. And then the profit target would be the top of this channel, but at least the median. Now, it still would need to recover up, sorry. Yeah, right up, hotkey, median, Fibonacci. It still would need to recover at least 70%. Yeah, so if we look here, 70 might be somewhere here. So might actually be exactly on the median. But ideally we would actually expect that we will hit the upper channel here. So 162, yeah. But it would be sufficient if we reach somewhere here, 158, because it's 70% of of this wave 3 here, or actually 70% recovery of that wave 4, and then we would look at something called the truncated fifth wave. So I hope that makes sense. But it's still possible. I mean, I still like the look of how this wave looks, 1, 2, 3, 4. Although if we consider our one-page cheat sheet, which you can also download, it's like there's a link in the description below. It's a one-page PDF. It kind of like, from the shape of it, it starts to look like, I don't know, like that what we have here looks like what I would look or consider an expanding triangle, which would be a corrective pattern, A, or 1, 2, or actually A, B, C, D, E. But since we assume that we already finished our corrective wave here, that shouldn't be the case, especially if it were a corrective pattern, it actually is moving in the wrong direction. So, yeah, like, if we, by the way, if we fall short here, so if we go to 158, and that will be then our point roughly, 158, maybe 100, like maybe somewhere here, but we don't exceed wave 3, and then we would have there our blue point 3, and then it would go like, this blue wave 4 would then start to correct down a little. Yeah, they would actually be the same then, like if we, when we look at the daily chart, what we had here, wave 3, wave 4, and then wave 5 doesn't go all the way. Yeah, so it doesn't exceed it. It goes a little bit more than 70%, yes, but it's still 70 is the minimum. Yeah, so, and yeah, 5-minute time frame doesn't look as bad as when we label it lower. Two, 4 parallel, and 1, 3 parallel through 2. Yeah, I think that's still, and so blah, blah, blah. Hope everyone is doing well. Hi, Nuns with Guns. Did I miss anything crazy in the live stream? I did see the price action we had to get to almost 160. Now we're just staying above VWAP. Nuns with Guns, we're trying to figure out if we finished an impulse or we are 4 or 5 on 5-minute. Larger time frames, still trying to figure out if we're finishing 4 also. Thanks, mate. Was doing work things, or I was late, sadly. Hopefully wave 4 is over soon. How do you label pre-post market? You don't label pre-post market because most investors don't have access to the pre and post market. Therefore, it's not a time frame or an area where human mass psychology applies. So you just don't have the candles for pre-post market on the chart, and they are then therefore irrelevant. Like if they result in a gap or something, then you consider the gap. Yeah, somewhere we had a gap like here, but you don't consider the pre-post market that led to that gap. Yeah, so there are no candles for that. And yeah, so Nuns with Guns, it's kind of like looking on the daily chart, it just starts to feel like our wave 4 didn't end here, but that this entire thing here is a triangle. Yeah, I didn't measure it, and I'm waiting to for like, I mean, it's also that it doesn't really matter that much. The only difference is that whatever we label here as 1, 2 actually isn't really 1, 2, but will be A, B, C, D, E. So our 1, 2 will just start from here. But because in any case we go up from here, but I consider the possibility that instead of a double free corrective pattern that ended with like a weird triangle here, it actually is also a double free, but with our triangle going till here. Yeah. And just arrived a few minutes ago. Can you please go over how low you expect us to go on that fourth corrective wave? Didn't go over that today so far. So, I mean, unless you mean the small for here where we look on the 5-minute time frame, but I actually don't think we will go lower. Like if our current labeling is right and this was our wave 4, then we cannot go below 142 anymore. That would invalidate our labeling. If my other assumption is right, that this entire thing here, let's quickly, that this entire thing here is from here to here a triangle, then tools, Elliott wave, triangle, then that might be the start of the triangle, yep, and then it would look like this. And then we see that the target for wave number E would be 141.65. And we can quickly draw a line here, yeah, which technically a triangle shouldn't exceed or fall below that A to C line, but in reality it very often does, yeah. But technically could also be that that's then the end of the triangle and from here we go up. So then this we would need to look up what's like wave 0 in a triangle or wave A. Like in a triangle, where do I have triangles? Oh yeah, there. Contracting triangle. Wave 0 can be a zigzag, yeah, so that actually makes sense. So, and because we know that this here is a zigzag, and we know that this here, we don't see it on the daily frame or the hourly, daily, that is a zigzag. That might not work out as such a nice zigzag, but often wave C is a more complicated one. That is a zigzag, and that here A, B, C is also likely a zigzag. It actually might be the more accurate labeling. Let's stay on this chart for now and like look at that. But if that's the accurate labeling, so from this chart here, can I copy everything? Let's check that. I'm not sure if I can copy things. Oh yeah, I can. They just don't make sense then. Great. Great. Let's delete everything. Paste. No. F5. No. Well, it was worth a try. Yeah. So maybe I need to make sure that I have both charts. Like, let's check that again. Copy. Paste. No. Okay. No chance. But yeah, so I think can also compare, let's check, so Elliott wave, triangle, that would be our triangle. And then in a triangle we would also, according to the big fourth wave after the fifth mini wave of the current third big wave. God, you gotta love Elliott wave theory. The big fourth wave after the fifth mini wave of the current third big wave, the big fourth wave, this one here, the big fourth wave after the current fifth mini wave of the, no, you're still talking about the fourth wave in this, so on this way to that free up here. Yeah? No, it's just when we talk about, you know what you can try to do when you talk about waves that are on the chart, try to, first of all, mention the time frame if it's on the daily chart or 5 minutes, especially when I'm switching between charts because we have some delay, yeah. And second of all, try to use the same style. So, I mean, I know, for example, free circle or the 4 with brackets, yeah. So then I know which wave degree, or it's easier to spot it, yeah. But in any case, I'm going to quickly try to check here. So according to somewhere in the chapter about ratio analysis on page 193. No, actually, if our current labeling is correct, so if we go back, then our assumption would be wave 4 ended here. And then that should already somehow, which we have on the 5-minute time frame, start to be 1, 2, 3, 4, 5. That takes us slowly up here, yeah? And therefore we cannot go lower, or we wouldn't go lower. If we would fall below 132, this here would be kind of invalidated, yeah? Now, if we look at the alternative that by now looks more tempting, so that our wave 4 here is not some double free correction with like zigzag, zigzag, blah, 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 but that the whole thing is actually a triangle, which, if we check our cheat sheet in an impulse in wave 4, happens in, what's the shortcut for triangle here? CT and ET. In 10% of the cases, a wave 4 is a triangle, yeah? So it's not super common, but also common enough that we would have, so if it would be a triangle, then this would be 3, 4, and 4 could technically already end here, and we go up from here. But if it goes further, then according to this, the low would be 141, and from here we go up, yeah? We're gonna work on labeling this out further. We just wanna start with the Fibonacci retracement. So the first thing is, in a triangle, it's not set in stone, but just for rough estimation, this is our wave A, and our wave B to C, so basically the movement that we have here, usually equals 6.18% of wave A. Now we see that that is not necessarily the case here, because 6.18% would be here, but we only went till here, yeah? So again, that's not something super exact, but it's something that helps confirming things, yeah? Now, additionally to that, our wave B would be from here to here, and that would also match 6.18% of our wave C to D. Now, there 6.18% would be here, but we only got here, so yeah. And then last but not least, in our wave B to C, so if we take this one here, it usually would be 6.18% of our wave, where's point E now? Of our point E now. I think that's why it labeled it here, yeah? So if this were true, then you see that it like roughly would be like this, yeah? And if like that already was our point E, then we don't see that here now. Can I add a marker or cancel 146, 73? So the Fibonacci retracements of the relationships between those waves don't check fully out for a triangle, but it's not that it's doesn't mean that it's not possible. It just means that we'll have to check the subwave structure, yeah. And I thought I saw that we would be, okay, I already read that, yeah, so no, like, either way, like, if this here is true, then we might go down 141.65, maybe a little lower, so because, well, it shouldn't, but often enough, like, wave E breaks through a little bit, and then we go up, and if our original labeling is correct, then we are already on our way up, and there is no further fall, like, I mean, we're talking about a few dollars plus minus, but no noticeable fall anymore, and we work our way up 1, 2, 3, 4, 5 into the 4-digit range. Let's check 5-minute time frame. Here in the 5-minute time frame, it actually looks. Did I delete something that I didn't want to delete? Give me back my labeling, please. It kind of feels like I'm missing something here. I mean, I don't want to complain, but it looks like my entire labeling here. View, show, where is it? Hidden components. No hidden components, okay. Minute time frame. No labeling anymore, great. So my copying and stuff was not the smartest idea, somehow got rid of some labels. Screw me. Actually a lot of labels, yeah. But overall, we're on the 5-minute time frame, and we assumed that this here is 1, 2, and there we are now in wave 3. So one would be this, 2 would be that, and this here would then be actually not a finished wave 3, but yeah, something like this. Yeah. But back here, let's see if we can confirm something here. So if we jump from daily to hourly, one of the things that would be the case is that our first wave here should be a zigzag, and it is a zigzag. We already measured that. Now this here is also a zigzag. Might be harder to see, but it's also actually a fairly nice zigzag, because if we take this wave, yeah, can you please put it on the right spot? So like this, and then also please, so here, and then there's another one hiding somewhere. Okay, here, and here. So if we check this here, that wave A, and then we put that here on our point B, while in time, we took a little further, and we don't exactly nail the price level, but it's still a very nice ABC shape. Now, our wave C is then a more complex corrective pattern, and again, that point should be on the candle. And then this here is another zigzag, and while not perfect, still I think decent, okay. Yeah, like, I mean, falling short of the price level here, but okay-ish. And then the question would be, our wave E also should be another corrective pattern, and it could be that it's a zigzag that goes till here. Again, not perfect, but again, yeah, like in price level, even a little bit nicer than the other ones, which would then indicate that this here is the end of this wave C, and we would need to have to figure out, again, there's something moved, go back here, and you also go back here, because then this here would need, should also be a corrective pattern of some kind, and auto labeling suggests it's A, B, C in some way, yeah? Making it possible that this entire thing actually still was our wave 4, so. And possible that we still, as mentioned, get a little lower to have that breakout from that A to C line to finish our wave E and go up from here. But overall, it's like, yeah, like we're talking about a few dollars that we could go lower. Like I said, 140 or so was like the wave E prediction before we go up, or we are already now in that wave E breakout. Now, yeah. Now the annoying part is that most of my labeling from here is more or less gone. Let's see what I can recover. Yeah, let's work our way down. So the first thing that we had is on monthly, where we have an impulse from here, 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 and we are currently in wave 3. And that wave 3 we said goes to the 1,200 something, roughly. Did it start over now? Okay. From here to here to here, and we go to roughly 1,200 or so. Yep. And now that warning here that you see here, it's because wave 2 terminates below the start of wave 0. If we were anywhere else and wouldn't look at the data since the IPO, I would not accept it. But since we look since the IPO, and technically at someday GameStop was founded with a value of 0, and then they built the company value. So technically there could be candles that reflect the company value to come up here, which means technically this point 0 could be somewhere lower. Yeah. And while there's no specific rule about that, one rule would be that if you're unable to label this properly, you can just pick a recent low that's 1 or 2 or 3 years in the past, so like the low in March last year, and start labeling from there. However, there are enough examples about Elliott wave theory in the book where the authors also use historical data and combine from different sources to come up with the value of something in the past to actually make the labeling. So Yeah, in other words, while somebody could argue with me about that 1, 2, 3, 4, 5, well, then he could just start labeling in March last year. Yeah. And with that, we jump on weekly, I guess. Still too small. Or actually to, yeah, let's go to daily. And then from here, we would label let's try like this, which obviously I don't agree with. So where we had, this was 3, this was 4, and then this here was 5. Then we had a subwave here, which we're not going to label, and which basically means, and that 0 point here, 0, 1, so which means then that this here, no, we were still, my mistake, we don't have that 5, we are currently working on this 4 here, so that would be our wave 4, and 3 was actually this point, and we are still working on that number 5, and we are actually looking at that's the 1, 2, 3, 4, 5 that we have in here with a truncated 5th wave. And while 1 and 2 here might be wrong, yeah, because they were auto-labeled, but overall that's the labeling that we had before. And yeah, from here we basically, yeah, let's try to correct the placement. Here we have a overlaps parent wave. What overlaps parent wave? What are you complaining about? That's one of the reasons why I like motive wave over wave basis, because we actually see when something violates a rule and can try to figure it out. So point 0 is here, and then, okay, no violation anymore. So kind of like was just like time shifted. And which means that here is ABC of this green, AB, blah, 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 which means that here is also a different degree. So that degree here is minor, and then that one is actually minute. So they should be golden. Degree, minute, and when we move that B here on the right, so like this, and move this, should actually start to adjust it properly. Yeah? And then here, that one is not, that seems fine, that seems fine, that seems fine, and that seems fine. And now if we jump to 5 minutes, everything will be off again. And let's adjust this, which means that from here we would be looking in our 1, 2, 3, 4, 5, which we anyway will, no, actually our assumption was 1, 2, and from here, yeah, but there we don't have the labeling anymore, so I don't see it anymore, but oh, still, that was the 23rd, 1, 2, yeah, and now we are 23rd, just zoomed a little different. There was what, 145. So yeah, from here, yeah, we were labeling out this one in red, but in blue we assumed that we already had 1, 2, and this is the blue wave, or green, wave 3, yeah, which now changes because now our assumption is that our wave 4 ends here, which if we fall below 144.70 would turn invalid. And then from here we are working on our 1, 2. Now we can check basically where is our wave 1 by trying to figure out like what fits the best. This one here fits as 1, 2 quite nicely with a 61.8% retracement. Alternative, if we look here, not as nice because it's like not such a nice, it's still in the right area, but not in the perfect one. So if we again assume this is 1, 1, 2, and then that would be our base channel, which would indicate that this is wave 3. Technically that could be wave 4, and then we would have a wave 5. Now the wave 5 would not be as high as it's indicated here, so it kind of like moved our wave, 3, 4. No, we again have the wrong 1, 2, 3. we're still part of the brownish wave 3 with the biggest one. And here we are 3, 4, 5, making this wave 3, making that wave 4, and making that wave 5, which means this 5 is the wrong point. Go back down here, wherever you went now, 5-minute time frame. Yeah, let's see if we can get that 5 here up. So 5 and now scale that back properly, and 0, and then we had 1 and 2 and 3 and technically 4, and then our 5 not finished yet here of this degree, and then again we would have our base channel 0.0 plus with 2 parallel through 1, where this breakout indicates that we have the start of our wave 3, and we could roughly, if we look very roughly, that could be 1, 2, and then it could be here 3, 4, 5, and then here wave 2 likely doesn't end here, but actually might end here, so that this is A, B, C, or some other shape, or 1, 2, 3, 4, 5, yeah, like it could be here or here. Makes it a little bit tricky because if wave 2 is here, our base channel looks like this. If wave 2 is, however, this candle here, our base channel also looks slightly different. Yeah, not too much, but still. But we're gonna stay with this variation here right now. So this is 1, 2, and median. Although the other variation kind of like fits a little bit nicer in terms of the retracement. Yeah, so if we go with this one here, if this one too. And that's some important aspect, like the wave point doesn't always have to be the lowest point. There's something called the unorthodox wave 2, which would be the lowest point. And then there's the orthodox wave 2, it's where the corrective pattern actually ended, which could be slightly higher, like when I label it like this, yeah. And in this case, our base channel would be like this. This would indicate that we are in our wave 3 channel, and that it was a very short journey for our wave 3. And we can check, going to be a little bit challenging, we might not be able to use that here, but basically the moment we break out here, it indicates that we're definitely in our wave 4. We also touch the medium of the base channel. As mentioned, usually we would bounce off the top, not always, but usually. Sometimes we reach the median, sometimes we reach the bottom, sometimes we don't reach that base channel at all. And now if we go ahead and would create our so-called deceleration channel by connecting this and this, that breakout here already would indicate that we're actually starting our wave 5. And our profit target for wave 5 would be 2 and 4 through 3. So either this median line here or the top line. In any case, at least 70%, so at least 70% of this distance here, so which would be the median line at 158, and the top line would take us here, and then that whole thing together would become another 1, where we then would wait for our 2 to either again fall back here or even fall back here, so somewhere in that area. Yeah, so. Wave basis is dumb expensive too. I thought we had a truncated fifth, okay, different degree. Wave basis is dumb expensive. I don't know, like I think $50 per month, it's kind of like, if it really helps you to label things better, then I think, I mean, it depends on how big your portfolio is, you know, like, I mean, if you trade with $200 in your account, then spending $50 per month on a software is not the smart move. And then anyway, I think like that's what my personal opinion is. If you really have very little money and you don't plan, or you can for some, or you don't want to, or for whatever reason, you're not investing or saving every month to build up the money in your portfolio so that you have more to work with, then you might as well just find one trade that you consider a great opportunity and YOLO it, you know, like it, maybe even with leverage, to literally get your account to at least above $1,000. So you have a little bit to work with, or preferably above $10,000. You have a little bit more to work with. And starting at $10,000, I think the $50 per month are not a problem. Yeah, like it's like reasonably to assume if you trust in Elliott wave theory and if you are skilled enough to label things properly, and so get it right at least 50% of the time, so that when you trade your wave 5 and your wave 3s, that your profits are way bigger than when you get it wrong here and there, then I think wave basis is fine. But I also think that wave basis, the $50 is really, it's kind of like you get Elliott wave tools that are nice, but the moment wave basis isn't enough for you anymore, there is no point in upgrading to their $169 per month plan. That would be the point where I would switch to motive wave, like I did. So, but yeah, I really think that that this here is now the more accurate version, yeah. And that's what I meant earlier when you asked, or I don't remember, Carl, I think asked Carl, how accurate Elliott wave theory is. Literally the moment we had this ABC here, we could have actually said wave 4 already ended. Now in this case, with like this triangle pattern here, it wouldn't be that bad. We would have bought here and our stop loss for the position would be at that 116 or 116.90. But instead of just going then 1, 2, 3, 4, 5 up, we basically would have had to watch the rest of this corrective pattern to play out, and then we might go up, yeah. And as mentioned, while I think that this might already be the point E of the triangle, it's possible that it will still go lower to 140, 142 was like the price point. That would then be the wave E of the triangle theoretically, and then from there we go up, yeah. So the really challenging part in Elliott wave theory are not necessarily labeling the wave 1, 3 and 5, but the corrective patterns are like the pain in the ass that can be, yeah, like where there are just so many variations. And yeah, when you have the first corrective pattern, you don't know for sure if it will be that's it and over, or if it will turn into a double corrective pattern, or if whatever you are able to label as ABC is actually a zigzag of a smaller degree that's just part of a bigger corrective pattern that still fits into the overall labeling. So, and I think there then the key to success is likely simply practice and experience. The more you label and the more you double check and then reread the rules in terms of rules of alternation, ratio analysis and all that stuff, the more sense it makes then to you personally, yeah. So, I mean, and always try to confirm things. I wouldn't recommend day trading on the 5-minute time frame with Elliott wave theory, because you again only have 1 or 2 time frames lower to try to confirm things. But again, hourly or higher, probably the best thing, although then you need patience because it takes a couple days for patterns to play out, yeah, but still. But if we were to go here on the 1-minute time frame, for example, we could try to verify, yeah, so I'm not saying that we will be able to, but technically from here, from our wave 2 to our wave 3, needs to be another 1, 2, 3, 4, 5 impulse, yeah, so which might not be possible. If we look here, that could be 1, 2, 3, 4, 5, that could be a small impulse, which would be wave 1. Then we would have a corrective pattern that likely doesn't even stop here, but might go till here, wave 2. But then we don't really fit in another 3, 4, 5. Yeah? So it's maybe that was really point 2. And although I don't like it that much, but maybe that's point 2. And so this here is then 1, 2. And then technically it considers the breakout from here is wave 3 already. That's what it should be if we use Kennedy channeling technique. And wave 4 would then likely be either this low, which then would be, oh no, wave 4 would then be a violation, so it could be this low. And then this here would be 1, 2, 3, 4, 5, yeah, so that we also can confirm that subwave. Yeah. Now that would need to, this part here would need to confirm into a corrective pattern like ABC. It's not a nice ABC, so I'm not sure if that is correct. We can try like this. Yeah, but it still labels it as ABC. This part here would also need to be another impulse or leading diagonal. So it works out not perfectly with this 3, 4, 5. Kind of like looks like a, like an ending diagonal, or yeah, like still leading diagonal, like so going smaller. And then if this here, so we can get rid of that one, and then this part here would need to be another corrective pattern. So from the top that we have here down here, it would also need to break down into some kind of either ABC or ABCDE, or that's one other thing. There are also triangles. So if we jump on the daily time frame real quick, or hourly, there are also triangles that don't have A, B, C, D, E, but that actually have F, J, H, I. So like 9 letters instead of 5. And that's one of the reasons why I like motive wave, because in motive wave, if that would be the case, we could just right click on here and then select 9 waves, and it would add the additional letters, and we could then label them out. Whereas in wave basis, you're a little bit more limited with the selection of the labels that you have available. Yeah, so like this. And yeah, but I think that kind of like looks nice. We hit the median here. I mean, again, I think 0.2 makes more sense here, but even if it were like this, not making a huge difference. And then the interesting part also, while it's not always true, but very often wave 4, or not wave 4, wave 2 would be the case. If we would have 1, 2, yeah. Very often the correction, so if wave 5 goes up here, then we already know that our correction would expect 38.2, like this area, but very often a correction, so wave 1 and then wave 2, actually falls within the area of wave 4 of the previous impulse of a lower degree. So since this is wave 1, wave 2 would very often fall into the area of this 3 to 4 of that smaller impulse, yeah, which means while technically we would expect the retracement between 151 and 155 based on the guideline, not a rule, it doesn't always happen. I'd actually say that it will be in the area, so that basically the corrective pattern will actually be 153 and not necessarily, so the 50% retracement more likely than reaching the 61.8. But for that, first we need to finish our wave 5, and our wave 5, as said, would be sufficient if we reach 70% of what we had wave 3, then it would be a truncated 5th wave. Those are the things that are a little bit harder to spot, to be honest, for me. I like to decide, is this already a truncated 5th wave? And that's again, if we talk about the accuracy of Elliott wave theory, because if we go up till here, it could be a truncated 5th wave. Yeah. However, it could also be that this is then just the start of an A, B, C corrective pattern, so that wave 4 isn't finished here, but it's like A, B, C, and goes lower. Yeah. So there simply is a lot of flexibility to Elliott wave theory, which is responsible for it applying to pretty much everything. But also makes it harder. So yeah. And what do you think about GameStop official page messages like taunting a major action 23 minutes ago was posted a unicorn cat on Twitter? Or like, there's one of the issues with GameStop is that they literally lock out everybody. I don't know, like if it's just in that case Ukraine, or if it's Europe, and so kind of like what many American businesses did when we had the start of GDPR in Europe, so of the global or something privacy something, yeah, that they simply, instead of trying to be compliant, decided to lock out Europe, so they don't have to deal with those compliance issues. Yeah. Facebook, yeah, haven't been in Facebook or on Facebook for some time, but let's check. GameStop. Plushy, squishy, exclusive. What the F? What's that supposed to be? that's a cat. That's supposed to, I mean, I get the unicorn part, yeah, but yeah, cat, okay. You know, it's hard to say, like, if there's a special meaning to stuff like this, or if it's simply smart business to know that there is currently an audience that is pro GameStop and that is talking about potential short squeeze and apes and going to the moon and roaring kitty and so on. So it could also be smart business in terms of give your audience what they want. Yeah. Yeah, I also have ExpressVPN here, so like it's one of the benefits of being a YouTuber. Got that one for free. But I mean, I could actually even use it, but because my streaming PC is separate from the screen that you're seeing. Yeah, but I usually try to avoid it during streams because I sometimes stream from the same PC, and if I then would turn on the VPN, suddenly the stream would die because yeah, connection lost from current IP to YouTube. But yeah, I think it's nice that GameStop does those things like we showed earlier in the stream, the T-shirts with the space cat and so on. Yeah, only time will tell if it was because they also think that what we're doing is right. Technically, you know, if they wouldn't believe in a short squeeze or something like that, they anyway don't have to care about the short squeeze. They have to care about long-term business and definitely giving the audience what they want, so like those Space Cat t-shirts and so on. I'm sure they sell very well and therefore bring cash and profit into the pockets of GameStop, which help improve the numbers, which then in turn helps get people more bullish about GameStop, like regular people that don't consider a squeeze. And, you know, like, so either way, if they're doing it because they believe in a squeeze and they want to kind of like support us or tease short sellers or whatever, or if they're just doing it because their marketing team pays attention to their audience, yeah, either way it's pro squeeze actually, because in either way it brings revenue and therefore profit to GameStop, and with that makes a squeeze more likely. So yeah, anyway, I'm gonna take a short break. We basically, what we would wait to see is kind of like if this was the end of wave 4, then we would basically wait to see something where we would have another like 38.2 or 61.8. I mean, it's on a small scale, so technically this here could already be like from that candle to that third candle could already be 1, 2, and we're waiting for wave 3, 4, blah, 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 but basically we're waiting for something to take us up. And again, gonna get rid of that base channel here for now before I go, and we're gonna put the destination channel or whatever it's called. So either the median line, but then it would still need to be at least 70% of what we lost here, or the top line. So like that's where, or roughly the top line where we would have our profit target. Yeah, that's, and we might actually get to see all of that today. So like, and then again followed by a drop roughly again into the area here. Technically, based on Fibonacci retracements, also possibly a little bit further. And that would finish another 1, 2 and help us on our way up. Yeah. All those managers, they gave up salaries huge to be paid in stocks, so I think it says something. No, definitely, there's a lot of action on the side of GameStop management, but I think there's always, I mean, you all know that, I'm literally not planning to sell at a couple hundred and so on, and that I'm definitely, based on Elliott wave theory, expected we go above 1,000 and so on, and that based on the numbers that I'm sharing, that I'm also, in my opinion, the stock is overshorted, yeah, that the official short interest is not accurate on the FINRA page and so on, but still there's always two sides to everything. Like, if I were to be in the management, and I would know that there's 100 or 200 or 300 or 500,000 people that are buying my stock because they think of a potential short squeeze, which means they are buying and holding and help to drive up the price. So if I now agree to get paid to some extent in shares, it basically means I help to remove shares from the market to some extent, plus it's a bullish signal to all those people to buy even more, which increases the value of those shares further. Yeah? So it's like, I mean, it then depends on what are the conditions. When will I get those shares? Under what conditions can I sell them, or can I leverage them? Which apparently in the earnings report, or not earnings report, but in the last quarterly thingy, yeah, there it mentions that they have a no leverage rule, which means if I receive 100,000 shares as a director of GameStop, then I'm not allowed to also open a short position to leverage and basically lock in my profit or my current value. Yeah. However, that would only apply to me. And then the question is, what if my sister, my brother, my wife, I don't know, like my niece of the 7th degree opens a short position to hedge my position? So, you know, like, just because I'm not allowed to do it doesn't mean that I have no way of doing it indirectly, and which in turn would mean the question would be, when would the directors receive those shares as compensation, and what kind of restrictions are on that shares in terms of selling? Because if they, I mean, it's clear that if they are like, yay, pay us in shares, please, it sends a bullish signal. And it's exactly the confirmation that we all want to see. So it's kind of like a little bit of a conspiracy theory. I'm just saying that there's like, while I perceive it as a bullish signal, I'm also aware that it technically could be theoretically possible that the GameStop board doesn't believe in a short squeeze, but they just are doing really, really great management currently to take advantage of the attention and give the audience what they want in every possible aspect, because that helps them to drive up the value of the company further and like consistently. Yeah. So anyway, Chase says, love you, bro. Thanks for sharing with us. Like, yeah, like anytime, just sharing my opinion and throwing out some breadcrumbs, and wouldn't be the same without all of you, because while I have some thoughts on how I perceive things without like alternating opinions or additional information that everyone in the chat usually throws in here, I also would only be like, I don't know, like 25% as smart or educated in all that GameStop stuff. So I think that it's really a give and take, you know, like I give some of my time and share how I see it, and yeah, like, and try to really be honest about how I perceive things. It's also always a little bit tricky because technically that's why we have the text here. Everything you hear is just my opinion, not financial advice and blah, blah, blah and whatnot. Yeah. So, but I try to just share things the way I perceive them. Anyway, let's also, if I could, I would kick out Osama. I would kick out Michael. No, where was it? Michael, yeah. And I would also kick out Mr. Captain Caliente, because the last time those three weren't there or just showed up, we had green candles. But yeah, I'm going to be AFK for 5 minutes or 10, and then I'm going to be back. Maybe we already see some movement up there. But I think, fingers crossed, that this actually is how things now play out. And even if it's not, we saw the worst case scenarios. We see a drop to roughly 142 to finish our whatever triangle or whatever corrective pattern we have, and go up from there. And I think, yeah, like we go up, that's the core sentiment. So be right back. See you soon. Till then. back again, and yeah, not much movement. Up didn't help that much. But as said, technically we would need to see another smaller 1, 2, 3, 4, 5 to get up here. Obviously not that small, but still have to be patient. I'm going to use the time and do some other stuff real quick on the side. So that's like literally, I would like to stream every day, but it's just among all the other things taking up so much time. No, that we already had. Like, what's that? Let's check tickets. Close that or save that as downloads, Chrome extension, test task. Close and up, or over there, see access token 3310. And check admin. Can you fix your lines so we can go up faster? Yeah. It would be nice if kind of like the candles would move according to my labeling. Okay, it's integrated, but it's not using it. So I can disconnect that one. Which means that's solved. I just tuned in regards to Elliott waves. Are we expecting anything else but sideways trading for today? Actually, yes, we're expecting that. I mean, I don't think that we're trading sideways today. We are already up 3%. And so we're basically expecting likely during the day to up. Gonna lock that one. Is it locked now? Lock component. Basically, we expect to see this wave 5 here finish, either by reaching at least the median around 158, 160, or by reaching this one up here, which will then turn into wave 1 of that bigger wave that is somewhere going up there. And yeah, so also, since you just tuned in, we changed a little bit on the daily, where we had 3 and our wave 4 ended here with a double 3 corrective pattern, so a zigzag, zigzag, and then a triangle that was really weird. But now with a few more candles, it's more likely that this is the actual labeling, so that our wave 4 is actually only a triangle. So start of the triangle, and so A, B, C, D, E, and where either we already have our wave E here at 100 whatever 45 or so, if I'm not mistaken, or we might technically be able to see, maybe we see that on the hourly better. So that one, that pattern here, A, B, C, D, E, or we might technically, very unlikely considering the amount of green candles we have here, but technically still see a drop further and E at 142 or so, so a little lower. But again, considering those green candles, more likely that this is actually now the way up. So our wave 4 that used to be labeled here actually now ends here and makes more sense than it did before. And yeah, didn't change a lot overall, literally just moved wave 4 here, but had an effect on our 5-minute labeling, which now starts here, 1, 2, 3, 4, 5, which previously we assumed that we already have a 1, 2, and here would be wave 3. So yeah, but basically, yeah. Now, there is the possibility still that this here is not yet the wave 4 point. It should be, but it technically would still be possible if we look here, our base channel 1, 2, that this here is A, B, and then we would get wave C, and wave C would be then basically here 151, which would still be okay because it would still be higher than wave 1. So possibility that either our wave 4 ended here and we go up from here, or it's A, B, C and we go down here to 151 again, and then go up to wave 5, which should at least recover 70% of that range, or likely again hit that top channel. However, if wave 4 turns out to be somewhere here, then that channel here would also change, and it would be basically like this, and it would flatten a little bit so that our wave 5 target would be a little lower. But again, that anyway will only turn into wave 1 of a bigger degree, and yeah, so kind of like see this with a few candles. Either we start to move up here, or we start to fall down here, and then we will know if wave 4 is here completed, and we are on the way to wave 5, or if we are still in that wave 4 correction. Now, in any case, if this is already the way up, then at some point here we need to have a wave 1 on a smaller degree, 1, 2, 3, 4, 5, and yeah, not sure if that's the case yet. We can check on a smaller degree here, so on the 1-minute time frame, and oops. And if we check here, technically the retracement that we have here to 38.2 could indicate 1, 2, and we would get another base channel like this, and a breakout from the channel, so at 158, 159 would indicate that we are in wave 3 of this small 1, 2, 3, then 4 and 5 would then basically be that point here, yeah, which kind of like seems like it might check out. So if we have, especially that we now see that there's a little bit upward movement, so it would be like this, yeah. So, and we see that the price levels add up roughly with what we have labeled here for wave 5, but that would then be like this. So, and likely I'd expect it to hit the top. So might in terms of time, as always, could be longer and so on. Also, that wave 4 here on that smaller degree, if this here is a simple A, B, C zigzag, which also seems to be possible. So A would be like this part, B would be this part, and then C would be this part. And we see in terms of the price level, close enough. But again, that's the 1-minute time frame now, so we're looking so close that it's really, really hard to be 100% certain. But yeah, like possible that this is what we're looking at. Very basically need a little bit more upward movement here to get above 158 to be more confident about that. But otherwise, if the whole thing here would turn into an A, B, C, it's already, in my opinion, unlikely, because then this here would need to be a zigzag, so also subdivide into A, B, C, and I'm not sure if that will work out nicely. So I think that actually 0.4 here and we go up from here is what's the most reasonable expectation. So on the smaller thing it would be, how do we have it? 1, 2, 3, 4, 5. Yeah, so let's check. So reply to that. And let's check that, log out. It's like we also have a small software as a service business, and I mean that we launched last year in end of February, early March, and I'm happy that that business is doing very well. But on the other hand, we're having the issue that more customers means more support requests, and I'm still looking to hire the right developers to help out with development and support. And so like every day, like a couple of hours of my times disappear with dealing with support emails or jumping on calls with users and so on. That's also one of the reasons where streaming is a little bit tricky. Yeah. By the way, hello, Justice is Honor. Great to have you here. Yeah. Randomize, can you fix your line? So yeah, hi, Randomize. I also didn't say hello to you. Yeah, and yeah, I think we're like fine now. Like, I mean, if somebody disagrees and has different labeling, I'm obviously all ears. But I really think that labeling this here as a triangle A, B, C, D, E actually now makes the most sense, even more than our previous assumption that we have a W, X, Y double free corrective pattern. Or actually it was W, X, Y till here, and we tried to label in this part. And which also means, as said, that we'll likely have a little bit more movement to see today. Either way, if it turns into an A, B, C, we will at some point, we might technically even see a recovery close to 0.3, but very often not. But we would then suddenly see the downwards movement. And we would see more movement, confirming that our wave 4 hasn't finished. Or we see now more upwards movements. We break out of this small channel here, a little bit higher, correct lower, maybe to that line, maybe to the middle of that channel, and then we go up higher and finish that wave 5 here. And personally, I have to say I would actually prefer it if I'm wrong and we see a huge drop to 140, 130 or something like that. Because likely, maybe not today, but during the next days I should receive my YouTube earnings from last month and then be able to deposit more, which obviously would be nice and then buy more GameStop at a lower price. But yeah, we don't always get what we want, so we'll have to wait and see. And let's check, do we have any? Nope, that's still not. if that's 1, 2, 3, 4, 5, no, 1, 2, 3, 4, and with an extended fifth wave, but then it would be a leading diagonal. But then we basically, it doesn't make sense because we didn't break out properly from the base channel. So most likely labeling is 1, 2, 3, 4, and 5. And just to clear things up a little bit, we're going to get rid of that small, no, we're going to keep that small channel for now, but we're going to get rid of that one here. So basically in here, we're waiting for a breakout here, which will then bounce back to that channel, to the median, or worst case, the bottom line of the channel, before we then go up to this point, which might not be here at 8 p.m. my time, but could be somewhere later, which then usually would mean that it gets higher, or that we end somewhere on the median line. Yeah, have to wait and see. And let's check, is this broken? Is this thing on? Let's check, do we have any errors? So again, I'm multitasking on the other side, so oh, already almost refreshed all of them. Cool, 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 cool. So will we get green candles up, up, up? That would be 1, 2, 3, 4, 5. Like 0, 1, 2, 3, 4, 5 somewhere, and then we would have basically 1, 2, 3, 4, then we would have a drop here, 1, 2, and then from here we would have then 3, yeah. Waveception basically, so. Actually want to check, yeah, so Elliott Wave. In case you guys didn't know, yeah, Elliott Wave International also has their own YouTube channel. And they still have a lot of work to do there to make that one better. And I had a call like so that's their, when you search for the YouTube channel, and apparently they scheduled a live test for tomorrow 5 p.m. and I had a call recently with the #2 guy of Elliott Wave International. Now I'm very bad with names. It's almost how to say, embarrassing, but yeah, like nobody's perfect. International. Let's see. With Mark, yeah, so that was, yeah, Mark Almond. So basically the nice friendly looking face here, and we talked about a couple of hours about like what they can do better and so on and other stuff, and it was very interesting. And one of the things I mentioned that they could definitely get more out of their YouTube channel. And somehow my TubeBuddy extension goes crazy here. Yeah. Like if you consider my channel, like my main channel has like 200 or 350 videos or so, I think, and has, you see, like 500,000 views almost the last 28 days. And they literally have 10, oh no, where would we have it? 1,500 videos, but almost no views, yeah, because they are not optimizing the channel well. And I think it's a pity, like definitely a lot of room to grow there from the YouTube videos. Like for them to spread awareness about Elliott wave theory, but also for them to sell more books and get more subscribers and so on. So definitely worth checking out, in my opinion. Might be a little bit dry content because they obviously on average talk to an older audience, but definitely something worth checking out if you have a free minute. And can close that, and then here I was waiting for that to finish. It did finish. Let's check too. Yep. Free, yep, perfect. So, and submit as pending. Cool. opishub.org. Let's check that. But yeah, looks like it's going to be like this, so that we're like slowly but steadily over the next couple of 5-minute candles moving up out of that channel. I don't think I could draw that channel smaller. Like I think if we 1 minute time frame, I mean, while I'm not a super fan of that because we correct here lower, but I think the worst I could do would be to say our base channel would be like this. Oops, wrong. Like this. And yeah, we still didn't have a breakout, so it doesn't really matter. So, and we said our base channel is 32 here, this one, yeah, so that would be the small base channel that we have here. So that candle, that candle, that candle. So pretty much the same, still waiting for the breakout here. And Submit is pending, blah, blah, blah. So we are firmly out of the giant wedge to the upside. Our daily MACD should switch to bullish today, tomorrow, and our Elliott wave is showing bullish movement now. GameStop is back. It's weird today, GameStop is up, but so is SPY and QQ, all by a small amount, but same with SPY and NASDAQ futures. Yeah, as we see, like most of the stocks that I have in my watch list in quotes here are up today, like pretty much everything. And while I'm not invested in all of them, but yeah, the ones that where Michael has his put options in, and then Oxygen, which we looked at on Friday, still insane increase, where my labeling also now disappeared. We already had labeling there, yeah, like why I removed it and we said we do it later there. Then pretty much everything is up today, like, and it looks like most of my labeling for some, that might be it. If we go back here and I jump here, that's kind of like an annoying detail to know, yeah, because now since we have our new GameStop labeling in here, let's try what didn't work before. If I copy all of that labeling, 5-minute chart GameStop, and we go here also to GameStop 5-minute chart. So now our old labeling is back here. Yeah, like, okay, then we keep that for now, and eventually I try to, although it doesn't make a lot of sense anymore here, what we have here, but I will have to transfer that. Yeah, but basically pretty much everything is up today. Like there are a few things that are down. Apple's, but it's not even down, it's like plus minus zero. Bed Bath & Beyond a little bit, but also, yeah, not noticeably. Like most of the things, like really, really crazy. And yeah, reply to that. So that's done, that's done, that's done, that's done. And yeah, that I will need to look later because it's a video. Okay, there is no reply yet, so can ignore that. Yeah. And I can close that as well. Cool. Oh, okay, there's no download yet. Okay. And oh yeah, back to GameStop, sorry for that. Multitasking, not my strong suit, and we're on the right chart, and we're on 5 minutes, and we're basically waiting for this here still. But GameStop, yeah, like I know that you were mentioning to that GameStop has a negative beta. I'm not sure if we see that on investing.com. Oh yeah, they are -2. But the question is on what time frame is that beta value generated? Like if it's like for this entire period, or if I switch to daily, it doesn't update, yeah. So, I mean, it just means in general that when the stock market in general, in quotes, moves up, GameStop moves down, and vice versa. So, which theoretically shouldn't happen, but happens in this case. But it doesn't mean that it has to be like that every day. It had like -36 at one point, yeah. Hello, William Fleming. Welcome to, or great to have you here. And yeah, but as I said, I don't think it has to be like that every day. I know we saw some correlation in terms when GameStop went up, and we saw it especially, if I recall it correctly, during January when we had our first, let's call it like failed start attempt of our rocket. And that might have been because some smaller hedge funds or short sellers got margin called, and their Facebook and other positions of popular stocks got liquidated, and therefore when we went up here, those other stocks went down. But that might not be the case anymore. So like maybe, I don't know like from which time frame the beta value is calculated, as said here on investing.com and or on any other platform. So might be that we are coming more towards a positive beta now slowly, or that it's just one day that causes some exception. Do I still have, now that I don't have open anymore? Maybe we don't get to finish this wave today though. Like, where did we start today? Like here. So it's like not huge progress that we made. Like finishing this wave 3. Likely finish that wave 4, still could turn into A, B, C. Unlikely, but possible. And I would wager it might just be an exception for today. In theory, if there's a squeeze, the negative beta would be in fully display. Yep, if there's a squeeze, we would see it in fully display, because then a lot of positions would get liquidated in other stocks. We open at 149. Sorry, about 151. Yeah, here. Yeah, it's like that's also like in Motive Wave, we have this vertical lines here, which should indicate, for example, the end of the day, or if we zoom out further, it would be the end of the week or the end of the month and so on. So it shouldn't be too hard to figure out, yeah. And 280, so 167803, 167803, blip. As said, doing a few other things on the side, so I don't have to do them later. And there, plus 280, 923.93. Yep, adds up. Back there. I was actually, like, in terms of that, like, since I also have my popular investors portfolio that you guys already saw here, where I have to, as a popular investor, keep my risk score at 7 or below. Yeah, so you see, like, the last 2 months, my risk score actually went up a little bit, mostly as a result of GameStop here and here. And I was actually on the weekend thinking about it, how that whole thing might play out and affect my risk score. But then I realized, although that account here only holds 2 shares of GameStop, yeah, if we moon, and then there is a sell-off in other stocks like Apple and whatever else I have here, and they go to whatever minus 30% or minus 50% or whatever, luckily enough, those 2 shares will overcompensate all of that, so that in the end, I'm still looking at a net profit in the small account here. And net profit, like a small net profit in quotes, yeah. And my risk score shouldn't be that bad, because those 2 shares would likely go up far enough to compensate for all the rest and actually create an increase. Plus, I can then use the tendies to average down in all the rest. So in that account. So I think that's going to be playing out nice. But I actually was worried about this for a second, because if I get my risk score above 8 again, then I get copy blocked for 3 months, which I try to avoid. But yeah, so. I'm actually on another topic. Like, I'm wondering, like, all of you that started to look into Elliott wave theory, are you already at the point where when you look at a chart, I'm just going to pick Fiverr, for example, or I'm actually going to keep GameStop open in this one, and we're going to just go back here. So when you look at a chart, like, for example, Fiverr, and you jump on daily, that you already start to notice wave patterns, even if they're not labeled, so that you already, I don't know, roughly see 1, 2, 3, 4, 5, or 1, 2, 3, likely with an extended third wave here, 4, 5, so, or is it still like a mystery? Like, for me, it's by now with most charts at a point where somehow, while I don't get it always right, of course, yeah, and I don't know how that got labeled, to be honest, yeah. likely that's supposed to be here, or not. Within the orthodox, 1, 2. Oh, then we wouldn't have that 3 already, so that's likely wrong. Whatever, I'll get rid of that. But yeah, so that you like, when you look at the chart, you already start to see, or you think you see wave patterns. Downwards here, it could be 1, 2, 3, 4, 5, which then would make up the, which actually could be also that this is just a big A, B, C. Might need to revisit that one. I see waves everywhere I look to. The trouble is knowing where we are on the larger degrees to help me understand overall trend direction. Yeah, that definitely is the bigger issue on that. Yeah, like to label it from the top to work your way down. But you know, in many stocks, it's literally like while March last year was kind of like a massacre for many portfolios, or March, April, it also served as a great point to count your waves, because in so many stocks, if we look or go to a monthly time frame. Yeah, okay, that's a German one where we don't have that much data. That's a new one. That's also a newish one. But in so many stocks, we have a significant drop on the monthly time frame last year in March, that you know that you can start a wave from there. And while you don't know the biggest overall degree, while you're still within the 1, 2, 3, 4, 5 that you start from here, you still know that the trend is upwards in that 1, 2, 3, 4, 5. Although it may just be part of a corrective pattern, like if we have a stock that, yeah, like I don't have one that's been going down consistently, but yeah, so like March 2020, no, February, March 2020 here, so where here it would technically be wrong because we started at a lower point here, but still within there we would have, like we see in this one, 1, 2, 3, 4, 5. Yeah. So even here labeling for March, you would be able to likely, maybe not the same way as I did it here, but label 1, 2, 3, 4, 5, and now you would realize that you're end of wave 5, so you would expect that this will be an ABC. Then the only problem would be, or a corrective pattern, the only problem would be to figure out that 1, 2, 3, 4, 5, is it 1, or like in this case, it's supposed to be also a wave 5, so this 1, 2, 3, 4, 5, yeah. And so I think in that case, with Elliott wave theory, last year's March drops are actually kind of like a huge gift, because in so many stocks, they serve you as a starting point if you're not sure about how to label since the IPO. After all of this, will you write your own book about Elliott wave? If I had the time, haha. Like, I think there it takes way more. Like, if you think about it, the Elliott wave principle, like that's literally looking at historical data and so on back for like hundreds of years. So using something called the something dollar, so like kind of a normalized dollar value, or there is like, maybe I find some of the charts real quick. There's a graphic or an image in there somewhere, but it's like in the later chapters, if I'm not mistaken, that goes back to Middle Ages or further. Yeah, like so, just to show like Elliott wave, not in terms of stock prices, but in terms of human civilization and times of growth. Let's see if I find it. Yeah, this one. So I'm gonna quickly just switch. So yeah, so if you guys look here, that's literally going back to the year 1000. Yeah, and you see that it's like part of it is estimated based on whatever historical data, but I think it's like it uses the product prices for bread and stuff like that, if I'm not mistaken, if I recall it correctly, and it's the millennium wave from the Dark Ages. So, and considering that, the amount of Elliott wave labeling that I have done is like ridiculously low. Yeah. But what I would like to do, predictions for the upcoming days or about today's trading. Thank you for your time. Hi, main outfit. Welcome to, or great to have you here. Hi, Paul. What I think is like the problem with many things is like similar to my other YouTube channel. Yeah? If we quickly jump to YouTube. on my other YouTube channel, while it might be part like sensationalized or using like a little bit clickbaity titles, I look into like crypto apps or in other stuff, like kind of like ways how people can make some money or get some cryptocurrency for free, or get in early into potential cryptocurrency projects. So work in progress that might still fail, but where people don't have to invest anything other than maybe a little bit of their time. I'm also reviewing apps that I consider are a scam, where people should stay away and not waste their time with them. But the point is, there's, for example, here we have Helium Network, cryptocurrency, but I'm approaching it from a different aspect. I'm saying, okay, passive income, yeah. So, and it definitely, to some extent, is, yeah, to reach a different audience, because there are definitely way more, let's say, average or poor people that are looking for how can I make money, than there are people that look like highly complicated cryptocurrency projects that I could maybe use, yeah. And the same would be, for example, geocache and other cryptocurrency projects, where I'm saying, like, instead of like super complicated algorithm used to generate cryptocurrency token, blah, 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 yeah, I'm going for get paid for sharing your location data, yeah. And that video alone made me the #1 referral for the geocache project, simply because they, on the other hand, if we look, GeoDB, medium.com, their entire content is focused on targeting such a technical audience, yeah, that most people would never jump on that, yeah. And so I think like many of those projects make this mistake, that they approach things from a too technical side. And I think when it comes to Elliott wave theory, I also, and that's what I talked with Mark about in the call, so the guy from Elliott Wave International, that I think like they're targeting a audience of old people, and therefore they are kind of like doing it in a too dry fashion. So if at all, I would create some kind of video course or so about Elliott wave theory. I wouldn't bother writing a book or so. First of all, I don't have the time. Second of all, as you might notice from my live streams, I easily get from one topic into the other and so on. So like following like that clear line might be challenging. But if I break it down in some video topics, I think it might be possible, and approach it from like different angles. Like, for example, I thought about to create some kind of like list or system to keep track of predictions. Yeah, it's already even challenging with the streams, when on Friday we end the day with like, okay, that's the current labeling. On the weekend, on Monday, I jump on the stream and I realize, okay, based on the last candles on Friday, after I ended the stream, we should relabel it and so on. So to kind of like, let's call it a case study, like really take some time to analyze a couple of stocks. And mostly I do it really quick, so like really take some time, not as much time as with GameStop, but still some time to from the IPO, label it properly and go time frames down, maybe till the hourly time frame, and come up with a prediction. And then publish that prediction somewhere, maybe on my Discord server, maybe like on TradingView or so, to then in the end keep track of how often am I right versus how often am I wrong. Ideally, combine that. Hopefully, when I during the next days can deposit a little bit more money into my Interactive Brokers account, combine that then with actually trading at least one share of whatever prediction I have, if it's a prediction that says upwards, to then have some sample size, because then I could create content about like whatever, let's say I get it right 50% of the time, but 50% of the time would already mean, as mentioned earlier, our winning trades are way longer. If we enter here, our winning trade potentially goes up till here. Our stop loss, however, is like this. So we should always have a profit to or risk reward ratio that's north of 1-to-1. So it should be 2 or 3-to-1 in pretty much every case, or even better. And so even getting it right only half of the time would be incredibly profitable. And so doing that and then approaching it with a video series about like trading strategy that's or whatever, like resulted in whatever that amount of profit over time. And have to think about that more. I like the content. I see the potential to like gain more popularity myself in the trading space using Elliott wave theory. getting more copiers on eToro. There we have our breakout from the base channel, strong movement, nice, definitely a third wave move of that very small degree. And then, yeah, like also kind of like having a financial benefit from that myself, while at the same time spreading the word more. But yeah, like we're doing so many things, like my wife and I, like it's not just the trading that I enjoy, but again, our software business, we have, with this YouTube channel that you're watching right now, we have 3 monetized YouTube channels. And yeah, like so affiliate marketing, and then looking for employees, dealing with our existing employee. We only have 1 right now. So yeah, so like, but I think the Elliott wave theory stuff, like it has a lot of potential, and it's not even so far-fetched, you know, like I mentioned it in many streams that while people might not want to use or believe Elliott wave theory, but if you look at it, all it is like, in quotes, all it is like trend channels in various variations, which other people use without any additional help. They just draw a trend channel, and if there's a breakout from the channel, they trade it, but they don't have any kind of profit target or reasonable or expect, yeah, like, I mean, different stop loss and so on. Then Fibonacci retracements. There are enough people that trade with Fibonacci retracements that would say something like this, and when it then starts to drop here, they would say, okay, it will likely, it could bounce here, it could bounce here, it could bounce here, it could bounce here. You know, like a year ago, before I really started looking into Elliott wave theory, so before I found the book and so on, I actually expected that 50% is very often where the retracement bounce off. Now with Elliott wave theory, I realized that it's very often 38.2 or 61.8, sometimes in between, which would then be 50. Yeah? But Elliott wave just combines all of that and gives you some kind of like a framework to work with. Yeah? And yeah, so like definitely here, nice wave 3. So we have the, on that small channel, so from that 0.4 to whatever 0.5 will be, so maybe like, let's put it back here for now, having a breakout here, which would indicate this could be 1, 2, and this is now wave 3, which would then be followed by a drop to this line, or maybe the median, so we don't see the median right now, maybe the median, or the bottom here, yeah? And then we would get into wave 5 of this very small 1, 2, 3, 4, 5. And if that already is the top, okay, we get a little bit more upward movement. Let's see how far we go. But if that's already the top, then basically we would have our point 1, 3, and 2. So we would actually expect that we have some sideways movement that takes us out of this channel. Doesn't necessarily have to happen, but technically the drop that we will see from here could be as a result to go to 160. So it's not much, it's like $2, but yeah. Also still have more upward movement here. In any case, so we have here 1, 2, 2, 4, 3, yeah. Or could be like if we touch that top channel here already, that I would need to label this differently, like 1, 2, 3, 4, 5 with an extended 5th wave. So, I mean, we don't have labels for that very small thing right now, yeah. But if we already touched it here, it could already be the end of wave, of that small wave 5 here, which then also would be followed by a correction because it would turn into 1, 2. We can try if we jump to the minute time frame, but there, like based on the Kennedy channeling technique, it's like the most likely that this is like 1, 2, and that actually is wave 3 of that very small. So 1, 2, 3, and we will see a drop here, and then we will see a wave 5, which may then touch this channel or maybe go a little bit over that channel. Yeah, like, and then we see our corrective pattern that's following after this 3, 4, 5, which takes us back down a little bit again. Yeah. Potentially as far as 153, yeah? And we do have a resistance around 165, which would be pretty much the 165 would be like here. So if we expect to see like the drop from here to touch that channel again and then go up, then that would kind of like probably work out nicely that we will then reach 165, and then from there we would have our wave 2. So the 5 would be here, which makes it then 1, and then followed by 2, where we have a drop. But we will see. Like, And that's what I meant earlier, like, so like there are people that use trend channels, there are people that use Fibonacci retracements, then there are people that use support and resistance levels. So like if we look here, so actually here at 162, there's already, if we look back, like they're often enough, it bounced there. And then if we look here, 165, same story again, so roughly 165, yeah. And so people that use support and resistance levels, and on the other hand, Elliott wave theory already provides us with those things, although on a sliding scale, yeah. And you can combine those things. So we could place support resistant lines to kind of like as a secondary validation or to confirm where we might likely see a price turnaround, yeah. And it's also on the other hand, if we again zoom in, I'm a little bit bad with that, but let's try a Fibonacci extension, which we would then draw like, no, which we would then draw like this. No, not like this. If I draw it like that, no, again wrong. Let's draw it like wave 2, 3. The book mentions those things, yeah, but basically, okay, like would need to look that up. So maybe from 1 to 3. There's some rules to that whole thing that I still don't fully understand, but they are mentioned in chapter 4, ratio analysis, and there we would have also some of the ratios that are used to come up with profit levels or price targets, yeah. And page number 136 would cover parts of that. So if we would have an extended third wave, yeah, but we don't. Okay, so for example, what's possible is that it's going to be tricky to label that, but let's see if I can do it. Basically from wave 1, or from our starting point, to then wave 4 would be 6.18. So roughly wave 4 is like this, yeah. And so it can be like this, that we have like wave 1, 2, 3, 4, and this is 6.1, or actually vice versa, sorry, because it's like going the other way. So then we would have to go to 382 here. Then this is 6.18, and then the profit target for wave 5 would be 382. Then there's the other variation where this is, so where the bottom part here, the difference from here to here is 382, and the profit target for wave 5 would be 6.18. And then there are the variations where we have extended waves. So if we have an extended first or an extended third wave or an extended fifth wave, yeah, then it's slightly different, but we'll have to see. Overall, quite nicely here though, if we look, I'm gonna scale that a little different. So we see we went up there, we touched that, and then we dropped down. We didn't touch that base channel, but technically we got close to it, yeah. So it could be that maybe on the 1 minute time frame it's clearer, yeah. Okay, I think we might have more downside here. So we went up here, and now this is A, B, and here we likely might see our wave C, which could look like if this is wave A, and that turns into a zigzag, then our wave C would take us down to the median here roughly, yeah. So we'll have to see if that develops. So around 159, maybe not all the way, maybe, yeah, maybe bounces here, but if it's a perfect zigzag, then it would actually like basically take us down here 159, and on the 1 minute time frame, and finish basically that wave 3, 4, and then we go to wave 5. So 5 minute time frame might be a little bit harder, but there we don't label that. We just keep roughly track of the development, yeah. And blah, blah, blah. What else do we have? That's cool. I didn't know how far back they had taken the theory to apply it. Well, they didn't apply it in every detail. They literally applied it in terms of showing that even if we look that far back in history, that the way how prices and everything developed, and sports of, or I'm not sure if spurts is I think the right English word, so like sprints of discoveries and development and so on, versus stagnating times where like the dark ages, where there was not a lot of development and or inventions and so on, and therefore also like prices stagnated and so on, that even there you can apply a 1, 2, 3, 4, 5 pattern. And they actually did it to illustrate that if you look at those old times, okay, it might turn out different on the 1 minute time frame. If you look at those old times, that even there you can again find a 1, 2, 3, 4, 5 pattern. Yeah. So, but yeah. So we do have resistance. We had that. So if they have gone that far back with Elliott wave theory, is that not in essence an actual physiohistorical prediction, a la Isaac Asimov? It's okay, you can say my idea is crazy. I don't know Isaac Asimov, yeah, so, but, and English is not my native language, so physiohistory prediction, or physiohistory is like also psychohistory, so psychohistory, yeah, like you see, English is not my native language, not sure if you know what I mean, but it's kind of like, we all might be too young for it, but apparently like Mr. Prechter, so the second guy that wrote that book, basically H.A. Frost is like an older generation and maybe already dead by now, but he was kind of like the Elliott wave guy when apparently Bob Prechter, whatever his first name was, yeah, I forget, again, bad with names, sorry for that, discovered Elliott wave theory and asked H.A. Frost if he would write a book with him, yeah, and kind of like benefiting off the name of the known name in Elliott wave theory circles, H.A. Frost, but where Prechter likely did most of the work. And apparently, in the book it's also mentioned in the later chapters that they predicted the market crash of 87 or something like that. And apparently back then, H.A. Prechter was on TV quite often with his next predictions, and as was or one could have expected, in the end, when it turned out that he was right, I mean, he had to also adjust parts in terms of the time. Again, Elliott wave theory, when it comes to timely predictions, it's not super accurate. It's more about the where do we go, not when do we go there. And apparently, when then that crash happened, people blamed him because all the media attention that he got where he predicted the crash, so he caused it, yeah, because everybody followed his advice, so that's what caused the sell-off and whatnot and so on, yeah. And yeah, then after that, he also had a few predictions where he got things wrong, yeah, nobody's perfect, and but I think overall, like what's really amazing is about Elliott wave theory, when you read it and you read the part about Fibonacci relationships and so on in retracements, when you then know this, how those things apply, not only in stock prices, but in so many other aspects of life, yeah, and so and the accuracy, like literally, like every time we get something wrong, it's because we picked the wrong labeling when we could already consider that there is an alternative option, yeah, that's also would be valid. And like here now, when I thought this might be the end and we go down from here for an ABC, it could also be that this turns out to be the ABC, but it could also be that that thing here already is the corrective pattern. Could be that we go a little bit higher so that our ABC actually takes us nicely onto, then it would likely be a flat. Have to be careful if the high here, 163.49. So as long as we stay within 163.49, and then drop down, it could be some flat corrective pattern that might take us perfectly on the spot here, or maybe that's the point where we turn around for ABC. It's gonna, like 1 minute time frame is definitely like almost ridiculous to try to label. 5 minute, we don't fully get the pattern to label the subwave here, yeah. That 1, 2, 3, 4, 5 that takes us up here, but basically in any case, our profit target is the top of that channel, which could already be reached here. And we only look at the 1 minute time frame to kind of like try to confirm if we completed it already or if it's still going further. Yeah? And if we completed it already, that here would need to be a corrective pattern, which it currently isn't. It's just a wave down. So there is no ABC, but might simply be that we run out of smaller time frames to confirm it properly. So if we would have like a 30 seconds or 15 seconds chart, there might be a visible maybe A, B, C in some way in here. And then here we would have another 1, 2, 3, 4, 5. I think here we actually, yeah, like we exceed this now. So it could still be that this is a B, C, but then it would need to be a flat correction, but becomes very unlikely now when we see this strong move here. Yeah. So although still with that strong move here, it's likely that we haven't seen the end of wave 5. So of this very small wave here, it would be 1, 2 if we got it right, 3, 4, and this is now wave 5 up here, which subdivides again into 1, 2 or 1, 2. Likely this candle here 3, small drop 4, and giving us the final wave 5, and which results in a so-called throw over on our 5-minute time frame. Because when we look here, our target for 2, 4, 3, we exceeded slightly, so it's a so-called throw over. Yeah, but definitely maybe this candle. Let's check 1, 2, 3, 4, 5. So if I'm gonna get rid of those two channels for need to unlock that one. Just for now, get rid of that one. And if that would be our 0.3, and we said that would be our 0.4, our 0.2 was this candle here versus 0.3, and we slightly exceed the resulting channel here, so that's likely going to be our 0.5. And again, 4, 2, 3. Now the question is, if, for example, if our wave 2 didn't end here, so if our wave 2, however, ended here, if I move that here, so that would be the point. Doesn't really get much better. We would need to, do we have a 0.2 where that even works better? No. So likely like this, and in terms of it's also interesting, like I cannot draw it like this so that it goes upwards. Yeah. Yeah, dummy. If I remove that and draw it like that, it still goes downwards. If I remove that and draw it as a retracement, yep, that's how we do it. So 161.8, 178. So technically we might even see more upside, and that's like with really a lot of grains of salt. But if I got it right, one of our targets would be 168 and the next one would actually be 261. So if I got it right, because we exceeded this here, it might be that we exceed this further and end up in a so-called extended fifth wave, and then 170 would be our next goal here. Yeah, but that again with a lot of grains of salt, because with the Fibonacci retracements to manually figure them out for profit targets, I'm still shaky at best. We'll see how that plays out. We definitely already got a new high, so our wave 5 would anyway already be here, but technically we had to say like the next target would be here if I got it right, resulting in an extended fifth wave. And let's see, it's a science fiction concept from a famous science fiction writer. Okay, so don't know either. And blah, blah, blah. We are bouncing off 200-day exponential moving average for 1 minute time frame for today, and above 9-day exponential moving average right now. Barely though, and it's gone. Still above 20-day above moving average, still above the 20-day EMA, so exponential moving average, which we also could add here if I'm not like, not as a strategy, but as a trade tools. Do we have averages here, regression, channels? No, actually it would be as a strategy, so it would be moving average. moving EMA, their exponential moving average. So 20 days, but now we're on the 5-minute time frame. So 24 hours times 60 minutes times 20 days divided 5 minutes. So we would have a 5,660 interval here for 20 days. Okay, that might have not been the smartest move because now it's trying to load a couple thousand candles in the back. And so that's this one here, if I got it right. So like for 20 days moving average. Might be the wrong one, I'm just gonna delete it. I'm curious if we get to 170, so like, I mean, I might really be wrong here with the targets. No, that was again the wrong way, so get rid of that and as an extension. But although if I measure it like this, it also points towards 170, so from wave 1 to wave 3, and then the next point would be, again, so that would also be 170, and again, if we measure it like from wave 2, then it's 168, and if we measure it as this, then we already went past the 168 and would be on track for the 261.8 at 170. Yeah, so might be wrong, but yeah. Would be interesting to see if we break 170. Like, I mean, if I'm right here, and again, like with that ratio stuff, I probably should reread that whole part one more time. But if I'm right here, then we would actually bounce from here. So that would finish our wave 5, and then that would turn it into another wave 1, and then we would have our wave 2 correction, which would then technically we would actually expect it to see 38.2 to 61.8, and that would actually be amazing, because if you remember, the wave 2 correction, or actually when we have that correction, very often it corrects into the area of wave 3 or wave 4 actually, so 0.3 to 4 of the impulse wave, of the previous impulse wave of 1 lower degree. So, and when we look here, it's literally the area of 38.2 to 61.8 is literally the area of wave 4 of the previous impulse. So if we see 170, it would kind of like just fit so perfectly to bounce off from there and fall into that area as a wave 2. And then from there, we would go up again. Yeah, so I'm gonna leave that retracement on the chart for now. But definitely, like, I mean, this could now be 1, 2, and there's still wave 3 till here, but an extended third wave, yeah? And then now we get 4 and 5, so it could be that here a few more candles are like slightly sideways, maybe even slightly down, and then we go up to 5. So really, really cool to see. Although depending on how that plays out, it might be that basically by the end of market close, or when the market closed today, that from whatever 10-11% high that we have here, that we already parts down to here. Still up for the day, of course, and not expecting it to go below our market open, because like literally that would be the stop for where we think this could go. And then it would be nice if we already see the drop today as well, because that would then mean that tomorrow we kind of like see our wave 3 go up again. Yeah. If today we still end somewhere up here, technically, by the way, could go even further up. So like there are then multiple other profit targets that under certain conditions would be possible. Yeah. But it would be nice if we see the drop today, because we would end today in green. So like move up, correct down, and hopefully then maybe already start the recovery again back up. Because that would mean tomorrow we would then see, or likely see, the wave 3 upwards, which should be one of the stronger waves. Yeah. And so like we basically see here, third wave has strong movement, and in here as part of this 5th wave, third wave has strong movement. Yeah. And yeah, what happens after the peak of the 5th wave? Well, you know, like you have wave within wave. So it's like, I'm gonna share it from the book real quick, because there I can easily find it in a few seconds. in chapter 1, it's actually, there's a graphic that explains it very well, yeah. So like pushing a button. So if we look at this here and up, you see that in the circle, so on the top, the peak of the whole thing, you see a circle 1. So it's wave 1, and then in the inside you see circle 2, wave 2. So we have that. I'm going to try to hold it a little bit better so I can show you. So tilt it. So we have wave 1 from basically the bottom down there, wave 1, and then wave 2 is down here, yeah. And that wave 1 itself consists of a 1, 2, 3, 4, 5 with the brackets, and that wave 2 consists of an ABC with the brackets, yeah. And each of those waves by itself consists of another wave and another wave and another wave. So you have waveception, yeah. And so when we have 1, 2, 3, 4, 5, it automatically is part of another wave. Now, our overall wave 3 has a price target, or if we zoom out, maybe hourly. Oh, no, not enough. On daily, we see on daily that our wave 5 here, okay, that's not the right wave 5, wave 3, 4, 5. Actually, that line at the bottom here that you see going there out is a wave 3 and has a price target at 1,250 roughly, and it's the same as this wave 5. Now, this wave 5 here is just not connected it right now, but that's the price target. And this wave 5 here consists of another 1, 2, 3, 4, 5, and that 1, 2, 3, 4, 5 consists of subwaves again, yeah. Now we see that the 1, 2, 3, 4, 5 that we map out on the 5-minute time frame is ridiculously small compared to what we are waiting for. Therefore, our 5-minute 1, 2, 3, 4, 5 here will turn into wave 1 so basically be another wave 1, 2, 3, 4, 5, which likely will still be too small, so it will be part of another wave 1, 2, 3, 4, 5, and so on, yeah. So that's called waves of different degrees. It's just like when we look here at this 1, 2, 3, 4, 5, and then I could go here and say 1, 2, and in my opinion, likely still wave number, I mean, it could be that this is 3, 4, 5, and we already start the corrective pattern, but the other assumption that I made is that this is actually an extended third wave, 4, and we go up there 5, yeah? So you see, and this 1, 2, 3, 4, 5 basically is just part of this, right? Just makes up that other wave here, and so after 5, it just means that this is a wave of a higher degree, wave 1 of a higher degree, followed by wave 2, which would be most likely A, B, C, taking us back down in that area, most likely, not guaranteed, but most likely. And then we start wave 3, which will then consist of another 1, 2, 3, 4, 5. So kind of hope that makes sense. It's like reading the book really solves or explains that very well. But we'll have to, yeah, like, I mean, I explain it as best as I can, but I understand that this is very confusing. When I first heard about Elliott wave theory, it was actually in 2015, and the guy that taught me, that mentioned it, isn't very great, very fluent in German, doesn't speak a word English, and so he pretty much in some like slightly broken German showed me he had incredible results and incredible accuracy with when he bought. Like he very often bought precisely at the low, like literally at the low, and his profit targets were also very much on spot, and I was really like shocked to see. And he just explained to me in, again, broken German, but translating it to English, it would be like, well, it's like 5 wave, usually 1, 2, 3, 4, 5, A, B, C. Yeah, but he wasn't able to explain, like he explained some of the rules, like wave 3 cannot be the shortest, wave 4 cannot go in the area of wave 1, but he wasn't able to put it in perspective in terms of saying, and it's part of a bigger wave and so on. So, and he didn't know that it's called Elliott wave theory, so I knew that his strategy is working, but I was not able to find it for a very long time, and so, yeah. And only when I last year discovered, first of all, the name, that it's called Elliott wave theory, and second of all, the book. Although I didn't order the book immediately, I checked it online, but it seemed very complicated at first. It was like blowing my mind a little bit initially. And only then later, especially when the GameStop thing this year started, did I really dive into it more. And like because I was looking for something where I don't have to rely on short interest and other stuff that might be manipulated, but where I can rely on a strategy that stood the test of time and that makes me comfortable. Like if we now, like, I mean, again, I know that possibly this could be wave 5, and from here we go down like A, B, C, and I expect us to go down into this area, and from there we go up. If we go up here, I still expect us to go down into that area, and from there we go up, yeah? And it's literally the one strategy, in quotes, that first of all doesn't rely on lagging indicators, like a moving average is always lagging behind, yeah, for example, but it actually gives you predictions for what's next, and it helps me stay calm when we go to 170 and I already expect it to fall down to roughly that area. So if we then see that fall, or even if that's the turnaround, I still expect to see that area, yeah? So if we see that drop, I don't worry about, oh my God, should I take my profits? Should I take my profits? Like, I mean, GameStop is a special situation, but also in other stocks, yeah? Like like in Tesla, I mean, it might turn out that I'm wrong. Again, I need to switch to the other chart because there we have the labeling saved. Yeah, so on Tesla, where my expectations based on the daily chart are that, so first of all, based on the monthly chart, it's kind of like, looks to me like this is the end of a 5th wave. So we have a corrective pattern coming, which means that corrective pattern should be at least an ABC. Now it could be that somehow this already was ABC and the correction here is over and we're looking at 1, 2, 3, 4, 5 of the next impulse. But I actually expect, like based on multiple rules, if we go back to monthly, first of all, this wave 5 means, I mean, that should be the end of wave 5, yeah, means that that entire thing from here to here turns into a wave 1, yeah, so that this here, from here to here, yeah, like hard to label it properly, cannot label it properly, need to first escape F5, and maybe now it lets me label it properly. No, it doesn't let me, yeah, screw you. Let's try that again. So let's first try to move that and fix it properly, and now try that again. If I pick this wave 1, yep, so then that would be wave 1, followed by a wave 2, and there we basically remember wave 2 often retraces into the area of wave 3 or 4 of the previous impulse of one smaller degree, yeah. Now 3 or 4 would actually be down here at like 40 or so, like that's a guideline, not a rule, so don't expect that to happen. And then we also know that very often we can use Fibonacci retracements, and we will see potentially the 38 to 61 area, which would confirm, by the way, that area. I mean, I'm not going that far that I expect Tesla to drop to $100, yeah. But what, no, oh yeah, like so that one we can actually delete, but keep the subwaves. But basically what I expect is that simply, to me this seems like the end of wave 5, wave 5, wave 5, and therefore I'm expecting a corrective pattern, and I don't think this is an ABC, so like from here to here, but I think that this here will be the zigzag, so that we will see, we saw the drop here, and as a zigzag, this would need to subdivide into an impulse or a leading diagonal, which it does. This here would need to subdivide into a zigzag, which it's not perfect, but in terms of time, it's not perfect. In terms of price, it's quite okay, yeah, so we see wave A here and wave C here are pretty much exact the same price movement, and which means that the next wave here should actually be another 1, 2, maybe 3, 4, 5, and I expect it to go down here. Why do I expect it to go down here? Because if this is if this is a zigzag, I can draw a line for wave A, and I can apply it here from our point B, and I get my price target roughly for that wave C. I might be wrong here, but again, Elliott wave theory provides me with the tools to basically calmly look at corrective waves, like to just watch them happen without panicking, yeah. In some situations, maybe it provides me even with the tools to take my profits, and yeah, like Tesla, for example, I closed my positions. I closed them a little bit too early. I should have waited for the wave B of the zigzag to go up again, yeah. But basically I took some profits, not huge profits, I took them. If I was wrong, I miss out some upwards movement, okay. But if I'm right, I don't have to watch my portfolio to go lower, which for my regular portfolio, I don't care, because there I can hold the positions long term and just wait out that dip and maybe buy more. But as a popular investor, again, I have to manage my drawdowns and my risk score and so on. And therefore, there it's more important to also avoid those dips if possible. So there, rather than sell that position and put it in a stock where I currently believe we're in a wave that goes up. Yeah, but yeah. I've missed being in the streams. New job. Oh, hi Ben, great to have you here. Yeah, like what else did I miss? Oh yeah, like holy crap, a green day. Yeah, and we actually, like, I'm gonna recap it real quick for you. So we adjusted the labeling. It by now looks like what I think I mentioned it on Friday as well, that it's possible that we have our wave 4 actually just finished here. So that this thing here from the higher at 350, the earnings low here isn't zigzag and triangle, but that the whole thing is actually a triangle, like this one here, A, B, C, D, E, and that we're now going up from here after wave E. So our wave 4 didn't end here, but actually just ended like 2 days ago or so. And based on that, we started to label here wave 1, 2, 3, 4, and currently are waiting for the end of wave 5, which could have been this point here, but because we exceeded it, and I said take that with a grain of salt, but using some Fibonacci retracement and extensions that I'm not sure are the right ones, but that I think are the right ones, we would have the target here at 170 to finish up this wave 1, and then have the correction to wave 2, yeah. And then congratulations on your new job, by the way. Yeah, like still great to have you here. Tesla does have support around 670 and 620. If we go back to Tesla, so 670, yeah, would be this area here. But then again, like, I mean, there we had 690, yeah, and we would anyway expect it to be an impulse. So if we say 670, let's say here, then it bounces, or that's 650, yeah, but then it bounces off for wave 2, and then it eventually breaks through, blah, 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 yeah, so, and $200 SMA, which may act as the final support, blah, blah, blah. Oh yeah, on Tesla I would expect, based on fundamentals, having the quarterly report to go up, at least on short term. You never look on fundamentals. I consider them, but I trust Elliott wave theory, yeah, because it just has been so accurate so often that for me personally, I try to never trade against the trend. So for example, if the overall trend that I can see is downwards, and Elliott wave tells me it might go up or so, then I still might not invest in the stock, because I simply rather miss out than kind of like take the wrong risk, yeah. But yeah, like for me, it's just I rely more on Elliott wave theory. Like in GameStop, I have multiple things that make me believe that it will go up, like the company's outlook and so on, yeah, like the short interest and a million other things. But Elliott wave theory is then the point where that I use to figure out, in my opinion, how far will it go up? Where will it turn around? How will it go up? Like in what kind of pattern will it move up? Yeah. And while I get it wrong sometimes, I'm usually then able to figure out what mistake I made with the labeling and correct that mistake. Every time I get it right, of course, it's kind of like it helps me to confirm that the labeling works out, that it kind of like helps me to predict, in quotes, how far we are going, how far we are correcting, and it just helps me to be overall calm. I know that with Tesla I could be wrong, because Tesla is also one of those stocks that has like a huge following behind it, that it then ignores fundamentals, in quotes, so there are more people buying than people that would risk to short it, yeah. But like when Elliott waves tell me that, or when I come to the conclusion based on my labeling that we have a corrective pattern, again, in my main portfolio, I would simply keep the position and sit it out, because I believe there is more upside to come. But in my popular investors portfolio, I then try to close that position, because if I'm wrong, I miss up a little bit on upside, okay, and I can then enter again at a worse price, okay, happens from time to time. But if I'm right, I save my portfolio from drawdown and therefore reduce the risk score of my portfolio. So it's kind of like, yeah, biggest fucking triangle ever. I like it though, yeah. Yeah, I also think that it's like looks better than before. The Fibonacci ratios of the waves of that triangle are not perfect, to be honest. So like of the relationship of wave A to wave, what is it then, C, and wave B to wave D, and wave something to wave E are not perfect. But overall it just fits way better, and suddenly this here also plays out more nice, and suddenly we actually have the upwards movement that we were looking for, that we already were looking for a little bit too early apparently. Yeah. Didn't change a lot, to be honest. Like even if we would have entered, as mentioned earlier, because originally we thought this was wave 4 because that's a nice zigzag, and if we would have bought here because we would have expected it, like now we go up in wave 5, well, we still would have had that. We still would have that position open because we never went lower, but it would have been like, yeah, like for a month now sideways movement with still profit if we would have bought here, to be honest. Yeah. To give you one example, like it's literally like, I mean, again, like obviously it's like kind of like picking the examples that I remember, yeah, but it's like if we look at this wave here, yeah, and so we have wave A, we know we expect a corrective pattern, and so wave A, then we have wave B, and then when we put this one here, and you see the price points, so like, well, the price point here for the low is 109, we actually went down to 116, yeah. It's not precisely on spot, but it's still like surprisingly accurate in my opinion, yeah. So basically here on this day already, on the 19th of March, just by using the length of wave A, expecting that this will play out as a zigzag, we could roughly predict, in quotes, I mean, it could have gone up further, and then we would have moved that line. So we measure our wave A, and this is the highest point we have, so we expect it to fall down here. Maybe the next day it goes up further, we just move that line, so we still would result in a nice zigzag, and we already get a prediction for where we expect it to correct further down, yeah, if our labeling is correct. So like, I've just seen too many examples where Elliott wave theory, when labeled correctly, is just so highly accurate that I take that over everything else. Yeah. And I mean, we will see now, for example, again, like my prediction here for the 170 area is based on my, let's call it basic understanding of the, how to apply the Fibonacci retracement and extensions to determine the profit targets of third or fifth waves. But overall, if we hit it, it would just be another confirmation, yeah, and especially if then our corrective wave goes down into this area here. And so then some earnings report that might come out, yes, it might here and there invalidate my labeling, but if, yeah, like as long as I'm, technically I would only need to be right 30% of the time to make this a probably break even trading strategy, like, because again, the moment we labeled this here as wave 4 and we were able to, or decided to label this here as 1, 2, we could have entered the market at 160 or 156, 57 with a profit target of at least 163, so that line here, and a stop loss at 153. So we would have $3 or $4 downside with $3 or $4 upside here on that very small scale. Yeah, if we think of the bigger picture, we would have actually bought, so we would have initially labeled it wrong and would have bought here after around 116, probably a little bit higher because we would have had our buying order at 111, it would have started to turn around and we would have likely entered at 140, yeah, and, or yeah, like maybe a little, if we would have entered at 140, we might have actually hit our stop loss here at 132. No, actually we wouldn't. We would have entered at 140, but with our stop loss at this 116.19. So at this point where if we go lower, it would invalidate our labeling. And then we would have that upside, but we would basically still, so we would have entered at 140 with a stop loss at 116.19, which is like $24 downside, or I don't know how many percent, like 20% maybe. But our upside would be drawing a trend channel of this 0.2 here. No, that's the wrong one. This 0.2 here, I need to zoom out for that actually. So our potential upside would be this, with a parallel through this. So with our originally wrong labeling, our profit target would be somewhere on this channel, 500, 600, 700, yeah. So 20% downside with like a couple 100% upside. So that's not always the case that it's so extreme, of course, but overall, yeah, like I don't know, like it's like something, it's something that follows rules, you know, like they might not be, they have a lot of flexibility there, and we end up relabeling, especially when we have corrections, often enough. But it's, other than like trying to guess how much the earnings will be better than expected, how they might affect the price and so on, it's something that follows specific rules, and therefore like I just trust it more. Yeah. And so in short, I would be surprised if Tesla breaks the support of the 200-day simply moving average. It can though. Yeah, like I mean, I am bullish on Tesla. Like it's just that in the meantime, that's what makes the most sense. Like if I try to label that differently, if we look on the monthly time frame, I mean, we can then go lower, but on the monthly time frame, 1, 2, so, and also using Kennedy channeling technique. And my historical data here is off, yeah? So my data here is a little off. It actually, there here from here to here is like more upside, yeah? But 1, 2 breakout indicates we're in wave 3, yeah? Now, again, that part of the data is a little bit off, but overall, that waveform in our chart here touched the trend channel. Actually, let's go to trading view. There we have the accurate data, so we can label the biggest part. Tesla. And yeah, so that's monthly. And then if we, whatever, if we have like, what did we say? This was 1. Oh yeah, now I cannot label that properly maybe, or can I? Screw you, delete. Let's try that again. So if this is 1 and that is 2, parallel through here, and I need to change the color. Yeah. So that would be our base channel, indicating here that we are in wave 3 now. Now our wave 3, I might have that labeled wrong on my chart, because again my historical data here looks different. Yeah. That could basically be a big flat correction where then that point is higher, and if we, let's see if we take a, do I have a line tool here? Lines. Arrow dot line, not word, trend line, info line, trend line. Yeah. If we assume that this is a big flat correction, and likely I can also still connect those 2 points here. Again, change the color, and then likely if I move that correction from here to here, while not perfectly, I mean, yeah, it's like still a little off, yeah, but overall still, like I think my point 3 is here, but looking at the data here, it could also be that this is point 3. Yeah. However, if we use the Kennedy channeling technique, what we would do is we connect point 3, so the highest point that we have, with our point 1 parallel through point 2, which is currently, we don't get fully 2, so 2 would be here. And when we have a breakout, it indicates that we are in wave 4. And then we can use our point 3 parallel to whatever, like in that case, maybe this point, since we already moved that far, parallel to 4.2, and basically the moment we have the breakout to the top, it would indicate that we could be in wave 5, yeah? And in any case, either our wave 5 cannot start here, because here our low is 35.64, and here our low is slightly lower, yeah? So which means our wave 4 definitely ends here, and our wave 5 starts here in the low in June 2019. And even just roughly looking at it, 1, 2, 3, maybe 4, and an extended 5th wave already. Or 1, 2, extended 3rd wave, 4, 5. Yeah. Either way, this is the end of the 5th wave by my labeling, which means it has to be followed by a corrective pattern, A, B, C. Yeah? And so no matter what the earning call says, like no matter how I label this, I end up with this has to be the end of the 5th wave. Not because it has to be the end in, like there could be like, sometimes 2 waves are extended. So it could be like 1, 2, extended 3rd wave, 4 followed by an extended fifth wave. But for that, how this corrective pattern here started out, it just, based on my labeling, if we look on daily, with this being an impulse, which would be wave A of a zigzag, this being a zigzag, which would be wave B of a zigzag, it just makes me expect that we see another impulse wave down here to complete that zigzag. It might not move all the way, so the price target here is not set in stone, but it should at least retrace again to this area here at 630 and slightly lower. So, and then we are already like in the $500 area or slightly below. So I might be wrong here in this case, but time will tell. So blah blah blah. Oh yeah, so at the 5-minute window, could wave 3 be shortened to include wave 4, 5, with 5 being the curve? What at the 5-minute window, we are at the 5-minute window, could wave 3, would be this one, be shortened to include wave 4, 5? Ah, you mean that that actually is, wait, what, wave 4, 5? You mean that this is still wave 3? Technically, if we use Kennedy channeling technique, it might be possible. Let's check 1, 2. Unlikely though, but it's possible. Like, but we have a breakout through the Kennedy channeling technique for the base channel here, which indicates that we're in a third wave now, and we then have also that retracement here. And in relation, like in terms of like how long this wave already is, and in terms of that it's higher, possible. We could confirm that if we wouldn't be able to label this one here as 1, 2, 3, 4, 5. Yeah. So, but we are, and so 1, 2, 3, 4, 5. Although it might then be challenging with labeling this here as 1, 2, 3. Yeah, like there we might get struggling. So it's possible that you're right that this is still wave 3. Let's assume that for a second. So. Let's get rid of that, let's get rid of that, let's get rid of that, and then move 4. And so technically we would say this is wave 3, so we would have our base channel here, and we would have our breakout. Now then we would wait basically or expect a breakthrough below here to confirm our wave 4. And in terms of labeling, it might even check out nicer, yeah. So possibly you're right, so we would have 1, 2, so I'm going to get rid of the channels real quick so we can try to confirm that subwave. So we would have 1, 2, breakout confirming wave 3, retracement that then goes a little bit below, but then actually wave 4 ends at that base channel. And then our price target here, connecting those two, falls a little bit short right now, but still could be okay. So like, still a little upside technically here. So, well, I'm not going to say that it's invalid labeling, but definitely like in 1, 2, I'm not sure if we can label this 3, 4, 5, could be 3, but might not be in terms of 3 being the longest or shortest wave. So, and that wave 2 would likely check out, not perfectly, like A, B, C, not in time, but in price. Here it would be 1, 2, 3, 4, 5. So that definitely checks out as an impulse here. That here, 1, 2, 3, yeah, like might be challenging. So could be that our 1, 2 here is also like jumping the gun, and that our 1, 2 could be a bigger one, yeah. Like, what is max pain this week? Don't know, like max pain. $150, so we're currently above that, and so currently we're doing fine, and I think it looks nicer like this, like at least that part here, yeah. I'm not sure if our wave 2 really ends here, so let's check in terms of, oops, wrong screen, so let's check in terms of retracement here. yeah, we hit the 61.8 retracement here, go a little lower but not too much. And then in terms of this channel here, said we have a nice breakout, and then the wave 4 correcting. The wave 4 doesn't check out super nicely because we would have A, B, and then kind of like, but it could be A, B, C combined with something else. Although I'm not sure about the rule of alternation, because like if wave 2 is a sharp, simple correction, wave 4 would be a more complicated one, and those two seem very similar in terms of length and movements. MA's, or MACD, or however you pronounce that as a shortcut, almost crossing on the daily chart for GameStop on the 1 year time frame. Yeah, and implied volatility crossed over historical volatility. I see, yeah, like so we have a lot of movement and good signs. But yeah, so like to whoever, I don't remember, but asked earlier, how accurate Elliott wave theory is. So the literal problem is like the room for interpretation. I think the more practice one has with labeling, the more the easier you spot different possible patterns, and then it's about which one fits the bill the best, yeah, like in terms of looks the best as well. So 1, 2, but then this would, I mean, it could also be an extended fifth wave, yeah, like so, or extended wave here. Which then would not be labeled 1, 2, 3, 4, 5, but would actually have 1, 2, 3, 4, 5, blah, blah, blah. I'm not sure if we can label that. Can we label that? Like, probably not. Yeah, that extending won't help, yeah. Like, it doesn't extend anything here, so because we're not showing the channels, so. But overall, it fits like, you know, like that very often you have like really nice channels. So overall, this 1, 2, 3, 4, 5 in greenish, or in green, fits nicely. I'm just not sure about the scale of everything, yeah. Things look good. The volatility crossing shows a move is likely to occur soon, but anything can happen. RSI also pointing up, other technicals to go along with Elliott wave. Yeah, yeah. No, I like it when we have things that confirm that. Like, but what I don't like about this labeling is though that here we would have to say 1, 2, 3, 4, 5. So like a very small impulse, and here we would have to say A, B, C. And then suddenly, well, wave 3 obviously can never be the shortest, but that's more in terms of like price movement, yeah. We suddenly label this as a 1, 2, 3, 4, 5. That's so big compared to what we have here, yeah. But if that were the case, then basically we would expect our drawdown into that area, 150 to 160, which is kind of like the same one that we expected before, not like, let's check here. No, not like this, but let's move that. Yeah, it's not exactly the same area because before we had this point here, yeah, but roughly the same area. So we would still expect from, if that's already the end of this wave, let's check, 1, 2, 3, 4, and it would also be an extended wave, either an extended third or an extended fifth. But let's try to, I mean, thank God we have auto label. Let's see what auto label says. AB, yeah, very smart, very smart. Okay, let's then let it force label it as an impulse. So there I would say 1, 2, and we're still within wave 3, but that might be of a higher degree. So it would be then like this, and that would basically indicate the start of our wave 3. And for that, we would need to have an impulse or a leading diagonal here, which apparently we can fit an impulse in here. Very interesting. And that would then need to be some kind of corrective pattern, which we cannot fit in here. and then this would be the next impulse of a smaller degree. Like, get rid of that. Let's see. If we jump on the 1 minute time frame here to just do an overkill, okay, this here works out as an impulse, and that here likely works out as some kind of ABC. Yeah, not a nice one, but still. And I mean, I'm really not 100% certain, because if we use Kennedy channeling technique, we would also expect that now the wave 4 that might be happening here actually reaches the top of the channel. Although in some cases, in Tesla, for example, we had that last year when things moved up faster. It might only reach the, like when we double the range here, so it might only go to this top of the channel, which might be enough to fit some kind of ABC pattern in there. And one, two, three. And the retracement from here to here would be 50%, yeah, so not as nicely. But then it would be 1, 2, 3, and it goes too low, so 4 would need to end here. But it retraces too far, so cannot be, so 1, 2. Although if this is a wave 1, then it can be a leading diagonal, and it could be 1, 2, 3, 4, 5, making this wave 1, wave 2, and then that could be 1, 2, 3, no, it's too small, then 3, 4. God, you gotta love and hate that flexibility with Elliott wave theory. Oh. Like, you know, I liked it more in that case before. I mean, not that I liked it more, but if I can I get back to how we had it before? Let's see if I can go back that far. So we had it like this. All the way forward now be here. But I think there's also, you know, like there's a case for having like that actually fits even nicer here with that 1, 2, 3, 4, 5, because our wave 5 then literally, so that green wave 5 literally on the spot hits the top channel. Yeah, so like that this here is one impulse works out quite nicely, which means that would have to be the start of wave 4 or the end of wave 4, which means that has to be the end of wave 3. If this is wave 3, 1, 2, 3, like let's check how we can label this. I mean, I already checked before, but yeah. So this checks out, not nicely, but still 2, 3, although it could be actually 3, 4, and 4 technically could not be down here. That would be a violation, so. Which also means, okay, we have the orthodox end here. Or not here, but it could be 1, 2, 3, 4, 5. 3 would not be the shortest, but which would, again, we would have that violation here. I think like, so like, I mean, things we can confirm, and I think like this 1, 2, 3, 4, 5 here in green is a perfect impulse. Yeah, like it's literally a beautiful trend channel, and our 0.5 nails the profit target here on spot with the top of the channel. Yeah, which means that this has to be either a wave 1, a wave 3, or a wave 5. Yeah, of some bigger degree. Now, It cannot be a wave 1, because then the question is, what do we have here to make that a wave 1? Which means it could technically be a wave 3. But for that to be a wave 3, it would need to be like so. Move that. What? No. Undo, undo, undo. So I need to move the 5 away, and which means I need to move this one, the greenish one, back, and then move the 4 away, and that screws everything up. Okay, so move the 4 away. And can I? Gotta love that sometimes. If I move that 3 there together, can I now move the 4? No. So if we leave that, okay, so if this would be a wave 3, then it would need to be 1, 2, and that wouldn't check out, I guess, or would it? Okay, retracement-wise, it would check out nicely, but in terms of relationship, it wouldn't check out nice, because 1, 2, and then wave 3 would actually be way too short, because our wave 3 then would not really, or would it? It would barely leave our channel here, and it would not really be the strong move. I mean, there we already have a strong move in quotes, which is usually a third wave signal, yeah, that we have a strong move. So I mean, we fall a little bit short of 170 here, which was like what I figured we might reach based on Fibonacci retracements that I just randomly threw on the chart. But I don't know, I still think that this here is like, just based on how perfect that impulse up here is, more likely. And now here we basically are watching our 1, 2. I mean, it might be a little different, but 1, 2, and now wave 3, 4, 5, which will be our wave A. So like A and B, C, and which brings us precisely into this area of 3, 4 here to then finish up this 1, 2. And in terms of Fibonacci retracements, it would then be like the, yeah, it kind of like aims precisely at the 50%, but somewhere in that area. So 61.8, like 38.2. I really think like that's still the more likely. Like, so we could also, again, on the smallest scale here, work with trend channels and have basically our breakout here indicates that we're in wave number 3, and then we have a retracement likely to that channel to confirm our wave number 4, and then we have our final move number 5. Might not go all the way till here, yeah, it's like really just like roughly, and then have our wave B going up however far with a ABC zigzag pattern, and then go down again with wave C. So I think like that's just more likely. So awkward hustle, I mean, I think you have a case, but I just feel like overall this here just works out nicely, with the only thing that we have something called the throw over here, so that our wave 5 exceeds the channel that we can draw by connecting 2, 4, and 3. Yeah? And if we could do it this way, so yeah, like even there, so. But the main reason for me for that assumption is really that this 1, 2, 3, 4, 5 here with an extended third wave is just like, it just looks perfect to me. Yeah? So requiring that to be a wave 1, wave 3, or wave 5, and it cannot be a wave 1 because we already have candles before that we somehow need to label. So, and if it would be a wave 3, it would be too short because that would be the 1, 2, and then 3 would just be so short. And even if that would be 1, 2, and that would be wave 3, or with the other problem that we then, if that would be 1, 2, then we barely broke out of our channel, and we shouldn't, or we couldn't go lower than this point, so we couldn't fall lower than whatever high we have here. Let's undo that channel. 159.94. So if we fall below 159.94, then this definitely cannot be 1, 2. And if we stay above 159.94, then it's technically possible that this is 1, 2. And then this here is just 1, 2 of like 1, 2, 3, 4, 5 that then makes up this wave 3. Yeah, like, so it kind of like depends on how this plays out and how far we go. Like if we go below 159, and then it kind of like and end up ideally perfectly we would actually go to 153. So like this A, B, C, maybe that move up not as strong so that our C takes us down to 153. Then I would even be more certain that this labeling here is correct. Yeah, which would be nice if we see that play out today. So if we literally see it like here, back, down, up. So if we see all of that play out today and we actually might end up and end then at 156 or maybe 153, it's still a green day, and it would mean that we finished wave 1, 2, and tomorrow then would have another upwards day, which would be stronger and should take us then above, maybe not tomorrow in a day, but it should take us then above the 170 line or 168 line again. Yeah, so, and like, I don't know, like if we look from here to here, we already have that one, yeah, but if we look from here, wave 4, 5, okay, then here we would bounce 38.2. So 1, 2, 3, now building 4, which would take us maybe to 166 again, or not that far actually, so up, up, up. Or technically could, like, because, or actually they're 165, so go up 165 and then go down to 160 or so, then recover a little bit again, 165, and then go down. Yeah, we'll have to wait and see. As said, gotta love and curse the flexibility of Elliott wave theory. And more practice likely leads to better results. We just have to wait and see how that one here plays out. So, yeah, with that, I'm actually going to take another short break, and I'm going to think about if I'm going to stream till the close of the market in 2 hours. I need to check my emails and see how many other tasks I have that I need to do today. But would love to stream till the end. Just have to see if I still can get all the other stuff done that I should get done. And anyway, I'm gonna take a 5-minute break, and we'll see if it plays out like this. 1, 2, 3, 4. Basically couldn't go up to, I mean it could, because in wave A can also be a leading diagonal, but it shouldn't go above 165.60 here and then bounce down further. And yeah, then I'll be back, and would be cool because we had another day where we still had to make some adjustments, but we had another day where kind of like we had some interesting movements. We saw how the Kennedy channeling technique works, and I think we got a few things right. Not everything, but enough to have some other confirmation bias. Also a pleasant day for my regular portfolio so far, because where do I have it here? Today looking at like a nice recovery, 2.59%. Although over April, I'm currently still down. So like if we recover 3% here, I'm still down 2.5. So we still need like another 1 or 2 very nice days to turn April positive. But still seems like many of my decisions or my changes that I made late last week are going the right way. Yeah. And yeah, see, like that's why I like Elliott wave theory, because that post is like garbage in quotes. Yes, they may have started shorting GameStop at $14, but how many of those short positions still exist? Like, how many of those were maybe already during the small squeezes that got GameStop to 40, like closed or liquidated or whatever, yeah, like, or at some other price, like. I don't think that anyone still has a short position that is at $14. Like, I think that would already have been force closed that when the stock went to 400, yeah, or 350. Anyway, short break, be back in a couple minutes. We'll see how that plays out, and then I'll decide if we'll stream till the end or not. So stay tuned and see you soon. back again, don't get scared. And yeah, so nothing much happened, but technically could be 1, 2, 3, that could be 4, and basically following our wave 5 down here. I mean, might not be exactly here, but downish. And yeah, we'll have to wait and see, as so often. And technically, did I get that link from? No, didn't. So I'll have to wait for that message. And here also, yeah, and apparently, so Tesla will announce their earnings after today's market close, yeah, and which is interesting because obviously, if their earnings fall short, then it would be an indicator for my labeling that Tesla will drop further, to be accurate in quote. So it's going to be interesting to see then tomorrow how that works out. And yeah, let's check that. I can also check that. Oh, I forgot, yeah. Let's do that. It's like literally NEO I labeled a while back, and I think there was the same labeling that we have a similar ABC corrective pattern, and I might have it still open on the chart. Let's see, NEO. Yeah, looks like a mess here, the daily. Although I don't know why this is labeled as ABC. Oh no, yeah, like this would be 1, 2, or 1, 2, 3, 4, 5. And that would then be A, B, C, expecting the C to be higher, but it doesn't necessarily have to be. Yeah, so there are also C's that fall short. And with expecting, you see my alert is at $22 per share. So doesn't mean that it will come to this, but it's just like the last time I labeled it, it ended up something like that. And I know there's a lot of confusing lines here. We would have to zoom out and then look. But overall, similar expectations like Tesla, so that the corrective pattern has not finished yet. And mostly, like technically, maybe, I don't know, that just doesn't look like an ABC corrective pattern, yeah, because it's more like a 1, 2, 3, 4, 5. But overall, if that would be the end of the corrective pattern, then this would need to be like 1, 2, 3, 4, 5 of the next wave. And I just, the last time I measured it, maybe it changed now. And I just don't like that the retracement here went, like, is not in the area that we usually would expect, 38 to 61, but actually went further. And then it started to develop into this sideways movement, yeah. Now, on the other hand, if this is an ABC in some way, yeah, then this would need to subdivide on a lower time frame into 1, 2, 3, 4, 5. This would need to subdivide into another A, B, C, and this would need to subdivide to wherever wave C ends, yeah, into another 1, 2, 3, 4, 5. Yeah, so it might be not accurate. Would need to look closer. But the last time I labeled it, that was A, B, C, and I'm waiting for a lower low, basically. Likely, actually, if I look back here, there's still a gap open, so likely actually then 21.80 something, so to close that gap as well. If we were to go that low, we definitely would go a little lower to close that, in my opinion. And back to GameStop, where, surprise, surprise, now we go lower. So while I roughly labeled this 1, 2, so this would then be 3, and we see it gets challenging to label when we looked at close. 3, 4, and now this would basically, wave 5 target would then be taking wave 4 and wave 2 parallel through wave 3. So wave 5 target would be this line here, or at least the median. We already have the median reached here, so, but more likely, I think, more downside to come, so 160. And from there we bounce then off in an ABC fashion to, I don't know how far back up, but I think so far that labeling holds. So I'm just going to get rid of the channel and zoom out a little bit again. Up. And scale that up. So, and there we go. You're most welcome, Paul. So, but it's literally just my opinion, yeah. So how I labeled it, then time will tell. Again, like you've already, if you watched some of my streams, you've seen how often, or that, especially with corrective patterns, there is like it happens often enough that I have to relabel because I like jump the gun and think the correction is over when it isn't already, and so on. But in the end, it's about just being correct more often than not, or about that your winning trades are so much better than your losing trades, so that overall you end up with a profit. Yeah, and like since I talking about some statistics, since I opened this eToro Popular Investors account, I basically, which was last year in May, so it's now getting to 1 year anniversary, middle of or end of last year. I only made 185 trades so far. You see that my winning and my losing trades are roughly same size. However, that 72 to or 73% of the time I'm actually getting it right. So, I mean, so far, statistics, yeah. Doesn't mean that I will keep getting it right 73% of the time, but that's how it looks so far. And fingers crossed it will stay like this, yeah. And yeah, so let's see if we go further down here or not. Like again, technically hitting the median line here already would make it okay. We would just have then we would see basically already A, B, C taking us up a little bit more, and then the distance from this point here. Also double checking this, like the high here is 168.50 and the high here is 168.50. Okay, it's the same. Like not super happy here with that retracement. What high do we have here? Also 168.50, because basically we have 100% retracement here, but not 101. So like we go exactly back. Could be that that's not 1.2. Yeah. But again, we're looking so close that at some things just get a little bit challenging. Yeah, a few more candles will tell us if this holds up or not. I've been watching your streams and appreciate your opinion, helping me understand how Elliott waves work. Thanks for that. Glad to hear that. In the end, the best practice then, however, is to just label charts yourself, and feel free whenever you come up with some different labeling to just take a screenshot and upload it to Imgur, or however it is pronounced in English, and share it basically, so to provide alternative views for me as well, and then to discuss why either my labeling might be wrong or why your labeling might be wrong, so that overall we all can get better. Could that technically be 1, 2, and then still not 3? So 3, 4. 3, 4, 5. If that's 3, then it would be 4 would be here, and let's try that roughly. If this would be up channel, if this would be, let's say we get development till here. No, also not nice. So could be like this also, that wave 3 actually is this point, and our correction upwards will go here to 165, because then we get a nice channel of 2, 4 and 1, 3 would both then connect nicely, and then our wave 5 target would then also be on this channel. So again, still 160. So again, this 3, 4 could actually be 3, 4, and especially if we go to 165 and then turn around, because then it would make a nicer Elliott wave channel here. Just so many possibilities with just so few candles. Especially now that here the high was 164.45, and that one is already, oh, that's still 1 cent short. So that's a little shorter than this one. So maybe on the 1 minute time frame, if we are going crazy, like maybe up, zoom out, zoom out, zoom out. I said out. Up. Looking at the 1 minute time frame, technically it could be even, there we also have still 100% retracement. It's like a little tricky. That high here is 168.50 and they are also all 168.50. Yeah, so it's like tricky. So could be 1, 2. But if that's 1, 2, then we would have our base channel like this, so which would be like a horizontal. That would indicate the breakout into wave 3. Now if that would be wave 3, for that we would connect our point 1 with our point 3, which was this one originally, changed to that one, parallel through point 2, and actually a breakout here would indicate that we entered our wave 4. I mean, when we look so close, the channeling technique might not work out fully anymore. But technically, that would align with the assumption that I just made, that maybe we have our wave 4 to go to 165. And then we can also, if this would be our point, oh, but then that doesn't change, that doesn't stay our point 3 because we get a higher high here. So that would be point 3. Parallel through point 1 and 2. So 165 would still kind of like at least be the bottom here. And just going to add our base channel again here. And yeah, like so that would be like touching this here would be Kennedy channeling technique. So either from here 1, 2 or from here 1, 2. Then we go in our wave 3 till here. Wave 4 goes up there and technically very often should then touch this channel, and then we get our wave 5. And if that's our wave 4, then we also get a nicer channel that connects all the points properly. Yeah, so undo some of the stuff and go back to 5 minutes. So basically assuming that this is point 3. Yeah, I'm gonna adjust that. So 1, 2, that would then be 3. 4 would then still be in development and should finish at 165 roughly. And then 5 would then basically be 2, 4, 3. So it would basically be somewhere on this line here. Let's say 160 sounds like a psychological support. And then question is how far up we go with wave B. But then our wave C would basically be the distance that we have here. So if wave B was here, it would then take us to like here, like that would then be, but depending on how high wave B goes, so that would be, and if we bounce off here at 165, so still, due diligence saying that any sell limit hurts the most because it shows the intention to sell. I think it depends at which level you have it. Like we currently have one sell limit, like for one share at $10,000. Yeah, so I don't think that that hurts the mother of all short squeezes. But yeah, if you would have lower, if you would have like your sell limit at 1,000 or maybe 496 or 420.69 or something like that, then yes, because then there would already be some sell volume there to cause another dip. Yeah, like they say even at 1 million. I disagree, you know why? Because, so let's assume the stock is heavily shorted, yeah? And so the stock is heavily shorted, more than 100%, so that the hedge funds, if margin called, would be forced to buy each available share at least once. Yeah. Now, at first, they would buy the shares at market price. Yeah. And the point is, for the price to go up, you need supply and demand. If you have endless demand, it's not that the hedge funds are gonna suddenly be willing to pay more. It's simply the orders get liquidated at market value. So whoever is willing to buy them for the price. Yeah. Now, let's say, I mean, I don't see all the orders here, yeah? So I don't see, like, I don't know where it ends here for me. The highest one I see here is at 55,999, yeah? And so the hedge funds get margin called and everything. That's not complete order volume. It's not from every broker and so on and blah, blah, blah and whatnot, but let's assume it is. So the hedge funds get margin called and they have to buy all the shares at all the prices. So they buy all of those till 180 and 248. There is no other share available, so suddenly they have to buy that one at 248. Now, they bought that share, there's no other share available, they have to buy that one at 16,000. They bought that one share, there's no other share available, they have to buy that one at 55,999, which means on the chart you suddenly see the price go up there. If there is no sell limit order at all, then you don't see the price go up there. There's simply the hedge funds would try to buy, but if nobody is willing to sell, you don't see the price go up there. Like if the price then would still be at 248 and some people click the sell button for whatever reason because they don't know about the squeeze and so on, it would just fulfill the order at 248 or maybe a little higher. Yeah, it would slowly go up. But if you have one share, if there's one single share with a sell limit order at 1 million, which is at the moment something I cannot enter because it's too far away, so even 100,000 is something I can unfortunately not enter, then when that order gets fulfilled, it will cause the spike on the chart to go to that price. When we reach that price of 1 million because some ape has the sell limit order at 1 million, or we reach the price at 10,000 because of my first share sell limit, yeah, then some other apes might be, okay, 10,000 is the price where I already want to sell a little bit, or maybe it's already life-changing enough for me and whatever, and sell a little bit more. It's still, assuming that the stock is more than 100% shorted, they will have to buy every share at least once, so more than once. So even if half the apes would have their sell limit at 10,000, and that would be like 50% of the available shares, the hedge funds, if it's shorted more than 100%, would still have to buy the other 50% of the shares, driving the price higher up. So I think it's important that there are some sell limit orders at higher prices to help create those bigger jumps, because when everything else is bought up and the only available share that's currently listed as I want to sell it is at $16,000 or $18,000, then that's the next share that they are forced to buy, and which causes the price to spike up further, which makes it possible, once we see 16,000, it makes it possible for me to enter a sell limit at maybe 100,000, which then, again, they bought up the 16,000 shares, some people press the sell button, my 100,000 share order sell limit is the next one only available, that one triggers, causing the price to shoot up further. Yeah, so I think, I might be wrong here, I'm not saying that is how it works, it's just how I think that it works, or how, with my understanding, things work. So if we would have no sell limit orders, nobody would have insane values like 56,000, 16,000, my 10,000 and so on, then I think we would not like shoot up the way we will shoot up. Yeah? But I might be wrong there. So, and super strong credit. Yeah, it will just basically end up being supply and demand, but for now we have to see what will happen for the peak of the mowers. I can put maximum of 85K now. I didn't try to figure out the maximum. I mean, I can enter higher values in Motive Wave, but I then see in the interactive broker software that at 100,000 it would already say like not possible. Although interactive broker also mentions that if you want a higher floor or ceiling for a specific instrument, you can email them. Yeah, like, and I'm considering if I will reach out to support and request that I want to set a 1 million sell limit for GameStop, and blah, blah, blah. And assuming if retail owns the float, then it will be interesting to see where this goes, since we don't know true short interest, but it's quite high, yeah. Robinhood won't let a sell limit, for instance, at 10,000, yeah. Like the same is with eToro, like if we were to, I mean, here in that account, I only hold 2 shares, yeah. But if I try to set a take profit here, I can only do it at roughly 1,000% or exactly 1,000% based on the current price, so 1,776. And it's very, like, that's one of the, what the points, or one of the points why I come to the conclusion of the things that I mentioned, because it's a take profit, it's not a sell limit order, which means it would only trigger if somehow the price gets to that 1,700 something. Otherwise, it will not trigger. And the price can only go up there if the hedge funds buy for a share, for at least one share on some official exchange, yeah, for a price like this or higher. And the only way for them to do that is likely if there's already a sell limit. I think that these sell limit orders, if they're not too many and at like in interesting price levels, will actually speed things up. Because if we would have no sell limit orders, then we would just have like the price, it would buy all of that, and some people would start selling again, like those that don't care about the short squeeze and whatever and whatnot, and the price would slower go up, in my opinion. However, if we have those crazy sell limit orders, it will literally, if they're forced to buy up all those shares, it will literally then shoot up to that price level because it's the next available share and they are forced to buy it. Yeah, and so that's how I perceive it. Might be wrong about that, yeah. And why are you still on Robinhood? Yeah, some people like just don't want to take the risk to transfer their shares because if the squeeze happens during the time, they may not be able to sell it. So, but yeah, like same issue with different brokers. And one of the reasons why I actually switched and plan to deposit more, and depending on where the price is, maybe even buy more shares at Interactive Broker to be like diversified a little bit more. So that maybe if one broker screws me over, I still make a decent profit on the other broker to finance the lawsuit against the other broker. Yeah, so like something like that. But yeah, so I waited too long to get out. I do have an account with Fidelity. I don't think I will miss the mowers if I transfer. I waited too long to get out. I do have an account. I don't think I will miss the more. Well, if you don't think you miss it, I also don't think you would, but it's just my opinion, then I probably would transfer the shares. Yeah, like, I mean, Robinhood already showed that they might likely be willing to risk their entire business to make it harder for people to take their profits with some ridiculous excuse then. So, but yeah. But then if we jump that high, we will get halted and people may panic. But you will anyway have that. We will anyway get halted. Like if we have the squeeze the regular way, yeah, and people will anyway panic, and there will be anyway people that at $500 will take their profits. There will be people that at $1,000 take their profit, at 1,200, 1,500, and so on, because they just don't think that it's possible to go higher. Because while they jumped on the GameStop train, maybe in January, they didn't put in any time to research how far can it actually go. And like when they then see amounts that for them see, oh my God, like if you're like maybe a student that usually has like $200, $300, $400 maybe per month available to work with, not for trading but in general, and suddenly you see the 10 shares that you bought in January are now worth combined $10,000, it already seems like a big number to you. And if you didn't put in any effort to do some research, you might be tempted. Well, I remember in January they said 1,000 is the goal. Yeah, so you kind of like, maybe you didn't look up trading halts, you don't know how they work. So, and we anyway will hit them. We would hit them if we go slowly up. We would also hit them if we have a jump from $200 something to straight to 16,000. Yeah, but this way we would hit the trading halt at 16,000, and the people that then panic sell would sell at 16,000 and not at whatever 500. So it's like, I don't know. Like time will tell how it plays out. It's just how I perceive it. The crazy part is that these floors of 1 million are possible if all assumptions are correct and people do diamond hand and there isn't shady actors. That floor is already possible if the stock is 100% shorted and they are forced to buy every share. Because if that's the case, then yes, I could sell at $100, not $100, at $1,000, buy another share then at $1,500 if I think it will go up further, and sell it then at $3,000 and so on. So kind of like to supply more shares, which doesn't make sense, but like theoretically I could do it, or anyone could do it. But if they have to buy every share more than once, and like we literally, it just needs one person that then has a sell limit order somehow possible at $10 million, that order would then execute. And that would show on the chart, it would register as like one order. It's like the same thing if we look at, if we talk about cryptocurrency, I think it was Litecoin, yeah, like let's check crypto, Litecoin, USD, and this one here, yeah, like so no, not this one here, there. Okay, it's filtered here. Then maybe it was not Litecoin, maybe it was Dash, or it was Ethereum, like, And it's also possible that I will not be listed on, that I will not see it on every exchange. But I'm fairly certain it was Litecoin, that at some point where it was already trading nice, I mean, it rose, it fall and so on, but at some point had a drop to, don't get me wrong, like could be $8, 80 cents or 80 cents, yeah, but only for like a very brief moment, yeah, like maybe it was not Litecoin, maybe it was another, but it was a cryptocurrency that for some reason there was suddenly a lot of supply. And there was one guy that had his buy order at around 80 cents or $8 or whatever, like ridiculously low compared to the current price level, and basically made millions in a few minutes simply because his limit buy order at a ridiculous low price triggered. Yeah? And all it took is basically that somebody was, I don't know, like forced to sell, or I don't know, yeah, like needed to liquidate his position there, and and he was the only buy order at that moment left, and his buy order then registered at this low price, and then it instantly rocketed back up. Yeah, so the same here is in a reverse scenario. So, or technically, like, I mean, if there wouldn't be so many shares of Apple and so on, but technically we could see the same in another stock. So while we say we can sell our sell limit or set our sell limit order for GameStop at whatever, 1,000, 10,000, 100,000, a million, 10 million, whatever, yeah. It could be the other way, that in Tesla we could set, and it's just an example, we could go and set a pending buy order at $10, yeah? Because if the hedge funds hold a lot of Tesla shares and they're forced to liquidate them to cover their losses in the GameStop position, then they are forced, they suddenly flood the market with sell orders, but somebody needs to buy them. And they need to then sell their Tesla shares also at whatever price the market is willing to buy them for, which means if there is no demand, there is no buy order for whatever they are selling, but I would have a Tesla buy order at $20, that order could also theoretically execute, and instantly afterwards it would shoot back up because people would again buy at the $700 area, yeah? And I would suddenly make an insane profit with that buy position. So, but for that you would need to know that the shorts also hold an insane supply or insane amount of Tesla shares, that when they get margin called, those shares get liquidated, so thrown as sell orders into the market, and that it's basically more than whatever buy volume exists at any time. So I don't know if we see that here. Will it load? Yeah, so, and again, like the volume that we see here is not by far not the full volume, yeah. So, but it would go both ways, which would actually be an interesting idea. We'll need to look into that to consider if I will, for some of the major stocks like Apple and I don't know, like Facebook, for like all the major stocks that a hedge fund might still hold, simply just for fun of it, set a limit buy order at $1, like for 1 share or for 2 shares or something, so, or for 10 shares, yeah? Because if they have enough volume to be forced to flood the market with sell orders in Tesla, Apple, Facebook, whatnot, yeah, they are forced to sell those shares to cover their losses with the short positions and whatnot. And if there is not enough orders that are willing to buy those shares, then whatever ridiculous buy limit order there is, even if it's at $1, should technically execute. Yeah? And blah, 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 probable, who knows, but possible. It just depends on the true short interest, but these fails to delivers do help our, there's a lot of things that help our thesis, and and how often does it happen that a stock is shorted more than 100%? Really don't know. Like GameStop had it like last year, February, March, and so on. So like, or February, March, I screwed up the chart, congratulations. Do we get it fixed? Yeah. So like when we had last year, the low at 257, it was short at 140% or so according to historical short interest. And from there, it basically just recovered 100%. So it didn't endlessly recover. So I guess the bigger short sellers still, and there it still had 100% short interest or 90% here. So like only a few of them got margin called, but the bigger fishes still were able to hold their shorts, I would say. And yeah, so it just depends. So depend. What do you think about SafeMoon? I have some eagle, then it's kind of stable. It's a crypto, yeah, like SafeMoon. I've read it in our Binance Discord. I haven't looked at it and no idea. So like mention it sometimes. Like I don't really trade crypto. Like I look at some, and if I like the purpose of a coin, then I might look into how I can get it, like how I can mine it or earn it in some way, and then just hold it. But I don't really look into like I haven't looked into SafeMoon. So what happens if there are absolutely no shares available for say 30 minutes? Theoretically, if everyone is just waiting, what happens to the chart? Nothing, because then there are no orders. Like what you see on the chart is orders that happen. So every time we have, like, again, this is not full data, but every time a bid, or like one person here has like his bid price there, one person here is an ask price there, every time one of those things gets fulfilled, the candle moves a little tick in one of those directions. But if there is only, if the hedge funds have like, I want to sell my shares, but nobody's here that wants to buy them, so literally everybody would be holding, then nothing would happen. We would have like literally a straight line until somebody starts to, okay, I want to sell. That's why I personally think that those sell limit orders, of course, if everybody would have their sell limit order at $10,000, it wouldn't serve the mother of all squeezes, yeah, because then we would basically create too much supply at that level. But if you hold multiple shares, so maybe you have 5 shares, maybe you have 10 shares, maybe you have 100 shares, and you can, at your broker, in my opinion, set a sell limit order for one share at $10,000, one share at $100,000, one share maybe at $50,000, one share at $1 million, one maybe at $500,000, then in my opinion you would actually help the mother of all short squeezes to go up there. Now, interesting development we have here. So we see that we already, okay, we're still on our way to 165, which actually would move our labeling for wave 4. Theoretically, if this would now be our wave 4, I need to check the channels here. Doesn't look that nice anymore because our wave 1 is not on the same channel, doesn't have to be. But technically it now could be that it was 1, 2, 3, 4, 5, and this is now the A, B, C. So if that would be A, wrong. If this here would be A, and then that would be B, and then C would take us to 166.14. But it doesn't look super nice here in terms of how it develops. And then we go down from there. So still 165, 166 area where we could bounce off. So if it's like 1, 2, 3, 4, 5, so which makes up wave A, then this would be wave B to 166. And then as a result, our wave C would actually be, if it's 166 roughly, would actually be to 159, which would also be within the area that we have here for the wave 3 to 4. Where did all those channels come from? Oh yeah, I messed up the chart slightly. Yeah? And gonna see if I can undo that. Oh my God, what a mess. And also in terms of the Fibonacci retracement, we would hit precisely the 38.2 line. Yeah, so possible that that was wave 5, and this here will be, as said, 1, 2, 3, and then from here we go down. So now let's see when we do undo if I can get back of all the mess that somehow appeared there, or if I just go backwards on other things. Oh, that's likely how we got the mess. So it somehow just gets worse, doesn't get better. Like, where do all those lines come from? Yeah, that doesn't go better. Like, that's what we had. Oh, like, what a mess. Do we have something on higher time frames? Like, yeah, like, well, isn't that obvious? Yeah, like, oh, screw me. Yeah, like, where do you come from? Oh God, gotta be kidding me. No, don't delete the wave. It's like I enabled for all the waves some kind of like auto channeling, or I don't know how I got that stuff here. So channels are gone. Okay, hourly time frame still looks horrible. A, B, C, D, E, and yeah, like hourly, whatever, like 30 minutes time frame. Okay, like 5 minutes. Okay, like let's go back there, 5 minutes. and let's get rid of that channel and get rid of that channel and get rid of that channel, and the rest is still checking out like so. Bluish wave, yeah, like there the points don't match properly, but let's check. So 0 and wave 2, and then which means that 3 and 3, so that would be that, and also that, and also that, and it somehow doesn't map it properly. So, and then what's that? Okay, no, that would actually be, that was the wrong one. So 3 and that 1, 2 in blue would also not make sense then. So that's how we had it, 1, 2, 3, 4, 5. Yeah, now overall up. And then here we were working right now up, and we said that this might be, yeah, I mean 5 could be also this point here, yeah, like so. I'm gonna actually move, because they have the exact same height, so I'm gonna actually move that here. And then we would say here this was, oh, if that's, and from here we actually went, no, actually I like the other one better, so go back there. And then this would be 1, 2, and then as mentioned it could be that this is 3, 4, 5, which in return would turn into wave A, wave B we set around 160, and then wave C would take us, yeah, like what did we say here, somewhere down here. Let's use the lines up. So wave, yeah, it already goes higher there, so there technically goes our theory. So it would be then like this to this point here, and which would be in the area or exactly at the top of wave 3. And then if we add the Fibonacci retracement from, because this would then turn into a wave 1, and let's do that like this, and yeah, like scale that again, auto scale. So, and does that make sense? 1, 2, 3, 4, 5 would be wave 8, and this would have to be, as mentioned, another zigzag. Yeah, I don't think that doesn't look too nice anymore, but what if it's like this? So then that would be it, and there would we go to 167, so that would then be point C. Maybe on this candle already, but preferably on the next. And then from there we would have 1, 2, 3, 4, 5 down. And yeah, chat, what happens? In that case, very high limit orders can indeed benefit the eventual mowers, yeah. Like, I mean, I think it really comes down how many shares you have. Like, so I totally hold like 80, no, a little bit more than 80 shares, and I might buy more. So if I set a sell limit order, like, or 5 sell limit orders, 1 share at 10,000, or maybe even start with 5,000, 10,000, 50,000, 100,000. So like split it up to like maybe 1 million, yeah, whatever, or maybe higher. Like, but to just sell a fraction of my shares at that price, to make sure if nobody else does it, and if they like. It really depends, because as mentioned on eToro, I can only set a take profit. So I need somehow, or there needs to be some other way to get the price up there. So somebody else needs to have that sell limit order. And then we go based on that, yeah, and get the price up. And then I can also at the high price then sell the majority of my shares. So I think if it's high enough, then it helps the squeeze, but obviously if enough people would have their sell limit at some ridiculous low price, then it would not help it. Yeah? Like we would provide volume and shares at a too low price. Yeah, but time will tell, like could be wrong there. And when do I plan my next live? The next live will be on Friday. So basically today, I'm not sure how long we will keep going, because I'm also getting hungry, and as mentioned, have a few other things to do as well. I'm just like, I would like to see how this plays out. Yeah, like if we have a turnaround here to confirm that this is an ABC, or if we have to zoom out a little bit and relabel a small part here. But I still just like this 1, 2, 3, 4, 5 just seems so perfect. And considering if that is our base channel here, actually, one, two, why did I like that green one so much? Because it flows so nicely, but actually that even, God, I hate that flexibility that Elliott wave theory has, yeah? Because actually if this is 1, 2, and this could be wave 3, and then that could be wave 4, and this would be wave 5 of that same impulse. God, hate Elliott wave theory. Yeah, like, so it would be, let's get rid of some stuff. So let's see, let's get rid of that, no, yeah, mislabel, okay. So technically that, and then that, whatever that, let's move that wave 5 for now, which also takes the green one. So technically it could be like this. All those, then this would have to be a corrective pattern. This would have to be an A, B, C, and then our next profit target would be 2, 4, 3. So our next step would actually be somewhere here on this line. And if we again take ridiculous Fibonacci extensions, then, and again, like, please take my Fibonacci extensions when it comes to profit targets with like 5 grains of salt, because then the next profit target would actually be like here, 178.44. And then we can delete that base channel. And we'll also check out more in term, and wave 3 might then actually be, could technically even be that point here, or not as much. We need to check how to label that then. 1, 2, yeah, it could be 1, 2, extended third wave, 4, and truncated fifth wave that doesn't exceed wave 3. So if we were to sublabel this here, and then this would be wave 4 with like, I mean, it doesn't make a huge difference. It would change our profit target slightly if we move it here or if we have it here, yeah, but not too much. So, and I mean, in terms of the final channel, if we take then here 2 and 4, so that would be the channel otherwise. We would end up like a little bit later, but if we use the Fibonacci retracement, the target would still be the same. So price level would still the same, just time would be a little later. But yeah, like, especially if we go above 168.50 here, this becomes the more likely scenario. Like it makes way more sense. Like, why did I like that one earlier so much? Like, I mean, yes, it's like it aligns nicely here, but using channeling technique, it should have been obvious that if that's our base channel, we have our breakout for wave 3, then we use our next channel, which is our acceleration channel, like this and this and this. And only when we have a breakout, we indicate that we are in wave 4, which means technically this is our orthodox wave 3. Here we start our wave 4. Then we label our so-called deceleration channel, which here is, yeah, like, should be like this. And with this breakout, we start our wave 5, and meaning that we're still on the way up there. I think, who was it? Somebody, Osama, I think, asked if that's, I mean, he thought about like 1, 2, 3. But yeah, like, I think like, I still think like 1, 2, 3, 4, and then our 5 target, no, our 5 target, that's why it doesn't make sense, yeah, so, because they are now our target for wave number 5, although if we copy that and paste it and move it, our 5 target is pretty much still on spot with like the double of that range. And in terms of, again, Fibonacci extension, extensions. Oh, there we would already shoot further, so and what if, so if I get rid of that one and not the inner one, and what if we say, like if this would actually really be 1, 2, and that would be 3, and then 4 would take us down on that channel again, and 5 would be, it again connected somewhere wrong, but I'm not going to fix that right now. Now then this would need to be another impulse, so that here would need to divide in 1, 2, 3, 4, 5, which it does, not the way I think it should, but still, like it could be like this. Although technically, I mean, the unorthodox low, yeah, like, I mean, would still work out as a leading diagonal, which would be okay here. And then this would need to be a corrective pattern down here in whatever kind. And so I think that actually might work out. Now that degree here is wrong, that's sub-minute, and this one is minor, so this one actually would have to be degree intermediate. And then if that's the case, so then our base channel of this wave would look like this. And we would actually, right now, that would start our wave 3, and we would basically connect point 1 with point 3 parallel through here, and if we would have a breakout here, it would indicate our wave 4, which we don't have, and which means we should see more upside here, and likely, I mean, that also then would fit nicely, and then from here we would have the correction likely to go to touch here, so from like 180 down to 170, and then wave 5. So I think that makes more sense. I don't know how I missed that earlier actually, like what did I focus on to kind of like see it wrong now. Oh, let's fix, oops, yeah, 5 minutes, and drag, and yeah, let's try to fix this here, so like to get the wave 5 into the picture, which might, oh, there it is, Dup. Also gonna disconnect this one real quick so that I can then align it with the right elements. And so our point 0 would be this one, our point 1, our point 2 would actually be this one we said, could be a little bit further ahead of course, and then our point 3 was still in development. No, about 3 was this one, point 4 was this one. No, that doesn't check out, so I have the wrong point 1 here. 1, gotta love it, so 1, 2, and then we said we're on the way now to finish that point 3, yeah, so up. And this one here was 0, then that one would be 1, 2, and then we would have, no, like now I got something wrong, like, no, we had 1, 2, and then that would be, the blue 3 was then this one here with 4, and basically the green 5 would be up taking there, so up, much fun. So confirming again, so this channel was the base channel, our wave 4 comes down here, and we go up to wave 5, and our wave 5 target from this one would be dup, would actually be, regular target would be on this channel, okay, and of the bigger labeling here, we would have from here to here our base channel indicating our breakout here for a wave 3, and but not having the counter confirmation that wave 3 or wave 4 is already in progress, because we could again point 1 and 3 parallel to point 2, and we're still within that channel nicely. So our point 3 keeps growing then. Yeah, like, not sure, but I think that's the way we had it. So this 3, and then we would have our wave 4, which would correct down to this pace channel, which likely is the same, and then we would have our wave 5. So 168.50. It's like crazy. How often do we bounce from that price? 168.50 is like the magical barrier right today, which makes it unlikely that this is a zigzag. So like I mentioned, A, B, C could be a flat A, B, C. Yeah, like as always, a few more candles and we know. Do you know if there's a sell limit in eToro? No, you cannot have sell limits in eToro. That's the problem. You can only have your take profits. So it's like, and the difference is that is not posted to the market. So, and that's the crucial point. So if I create a sell limit order, so like I have a $10,000, it's actually visible to the market. So if somebody is forced to buy, they will see that sell limit at $10,000. However, even if you could enter $10,000 here, yeah, it wouldn't show up on the market. So it would not be visible. So if the hedge funds have to cover, they wouldn't see whatever take profit you have here. Only if the price by some other means goes up to that level will then eToro basically sell at market price. So it will then, if the price is still if you enter, let's say 1,800, if the price is still at 1,800, it would sell at 1,800 then. If it's a little higher, it will sell a little higher. If it's a little lower, it will sell a little lower. But the price on the chart needs to first go there for that to trigger. So that's one of the reasons why, especially for GameStop, I also was considering if I should sell my shares here, cash out, not those 2 shares, but the 76 shares on my other account, cash out, transfer them, so I have them in a broker where I can set sell limit orders, yeah. And or how much is the max one could sell? I have my shares. Well, you can always add 1,000% from the current price. So like you see, it was 1,805 a few seconds ago. Now the price dropped a little, and now the highest I could set is 1,801. However, when you have it set at 1,805, or whatever the highest possible is at any given time, yeah. So again, 1,805. And if I would save that, if the price then falls lower, it doesn't adjust your take profit lower. But you see, if we now change that, it's 1,805.10 because the price increased a little. If we wait a little bit, then again, still 1,805.10. Yeah, so like let's copy that. So you basically, as the price moves, the maximum that you can set moves. So at the moment, I wouldn't set it at all because you cannot even remotely set it anywhere where you want to set it, in my opinion. Yeah, and so during January that was nice because I was able to set it exactly at $1,000 or 1,500 and so on, but we didn't get there. Yeah, and now the problem is that our floor or ceiling or however you want to see it is higher, and yeah, so you see price increases a little, you can make a slightly higher take profit, but yeah, you basically will have to. If you think about this, the moment like right now, the share price is at 167 and we can set it roughly to 1,800. So once the share price would be at 1,600, you could basically set it to 18,000 roughly, yeah, so, or 16,000, so like 1,000%. And yeah, eToro seems a bit weird. Well, it's kind of like Robinhood. It's a broker for people that are not professional traders and that want to get started with investing. And I think there's a few benefits to eToro, you know, like first of all, you can literally get started. I mean, it's like an upside and a downside. If you create an account right now, you can instantly deposit and start trading and kind of like worry about some of the verification process later, which might backfire if you cannot verify your account for some reason. Yeah, you might then have frustrating experiences trying to get your money withdrawn again. Yeah, but it also means that for people that just want to get started, they don't have to first deal with a lot of paperwork in order to get started. Yeah, now. Second of all, it's easy to use for the average person that doesn't have a lot of clues. So you can literally just say, okay, I want to buy Apple, and okay, I click a trade button, I enter my size, I can pick my leverage if I want, yeah. I then see that I'm forced to use a stop loss and so on, blah, 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 and I can trade. So I can trade in either units, how many shares I want to buy, or in dollar amounts. I can place orders, so I want to buy at a certain level or sell at a certain level, yeah. And you have a lot of different assets, so no matter if we're talking about cryptocurrencies, yeah, so where you have a lot of different choices. if we are talking about commodities like oil or gold and so on, yeah. So you have a broad selection. At many brokers, you don't have that selection. So, and the interface is easy. It's not too complicated but you know, like the more you know, the more you benefit from complicated things. Like if we just consider the moment I say like higher up here, if I trade, you see how many different orders I have available here, and I don't even know yet all of them, like how they exactly work and if they would work with Interactive Broker. Yeah? Whereas in eToro, like, okay, whatever asset, buy, okay, I want to buy at a limit order at that price, and I want to buy for that much, and so on. Yeah, and you see if you are buying the underlying asset, so you're actually buying shares, or if you were to buy with leverage, that you're buying a contract for difference. So it's kind of like, I think for people that getting started, sufficient. And especially if you don't want to manage your entire portfolio yourself, like I mentioned earlier, and again, I'm going to pick somebody random here from the popular investors. So you can also just copy other traders. So you can look at their statistics. That one doesn't have a long history. Last year, good performance. This year, compared to money on your account, also okay performance. Drawdown with 20%, a little bit big. We can look at the chart. Okay, like so this year in February, like a huge drop basically from here to here. But until then, actually a decent performance. We can look at positions. Not bad, 2,000 trades, and 2/3 of it profitable, and the profitable ones twice as much, almost 3 times as much profit as the losses, and so on, yeah. And then you can just say, okay, I want to copy that guy. Minimum amount would be $500. You can set a stop loss. So if those $500 reach a certain either dollar amount or a certain percentage ratio, it would stop and close all positions that you copied that guy with. And so I think like for people that just get started, I like it, you know, like also like okay web interface or app on the mobile phone, so to manage your trades from mobile. And yeah, like there are popular investors, like we would need to find some of them, like this guy, history since 2013, like not the best history initially, but if we then look like not super impressive, but positive. Amazing year, 2018, not so good, but still compared to the year before, the drawdown is like okay. 2019, good results. 2020, good results. The drawdown in March, where pretty much most people lost money with 15% almost, not perfect, but still considering the yearly outcome okay. And 2021 so far also 6%, definitely nothing he needs to hide. Risk score very low, which means like very low variance, especially over the last 6 months, yeah. And not as many trades, so I don't know like how long that history goes, but in losing trades or winning trades twice as big as losing trades, again almost 2/3 of trades profitable, and only 3 trades per week. And that's also an interesting aspect, on average holding them 12.5 months, which means on average the positions are held more than a year, which means on average you won't have to buy whatever like capital gains tax or speculation tax or whatever tax you have in your country for holding stocks or cryptocurrency less than a year, which means your net profit after taxes is actually higher than if you pick another guy that might have slightly higher performance but holds most of the positions for a shorter time. Yeah, so like yes, eToro is not perfect if you like want to manage everything yourself, but I think for people that just start to look into investing, offers a lot of pros. Yeah, and OCO I don't get, but those others make sense, like trailing, limit, market. Yeah. Yes, like they make sense to some extent, but what I mean is like when you really, I don't know all of them, but when you like really just get started or so, like this would be, like what I'm not sure is like limit plus stop. So I'm not going to click because I don't want to, I would need to enable the simulation account so that I can play around here a little bit with simulated trades. Yeah, but does that mean I will create a limit sell order? and at the same time with declaring my stop loss? Yeah, is that buying at market plus setting a stop loss? Is this a limit then with a trailing stop and so on? I just have to like either set up another workspace with the simulated account, enable the simulated account in here, or just dig more into the documentation. I mean, I understand them. I would think limit plus stop is that either buy, sell at the limit and have the stop loss. Yeah, that's what I mean. Yeah, but yeah, like for the average person, like they might understand buying and selling, but you even on eToro, you already see it like that people are like, because GameStop you currently cannot sell, so you cannot short it, yeah. And then people are, why can I not sell my GameStop positions? Because they don't understand that for closing their positions they would have to press the X icon, yeah. And now imagine if they would have an interface with like, yeah, buy limit, sell limit, whatever like other phrases there are, would be just more overwhelming. So it really comes down to the target audience, and I think like it's a great way to get people started. But you also notice that most people are like too impatient. Again, if we, for example, let's pick one girl, also popular investor with like a long-term track record, yeah, so like since 2014, and she basically buys a lot and then holds it, and we see that on the average holding 21 months, yeah, and just keeps buying more and like then holding. So that's why you also see positions here with like 300% profit, and where she then holds like not one position, but you can literally see from like in 2019 open at 181, actually impressive, yeah, to opened in 2020 and so on. And then you have people that just like, I'm sure you see here, like there was a huge increase in copiers for her, and then there was like a dip here, which is likely when you have a month like this or a month like this or a month like this, where people suddenly stop copying because they're, oh my God, it's like losing, instead of considering, look at the long-term record that that woman has with her account. And yes, there might be even a losing year, but overall invest your money for, I don't know, like, I mean, she might not have the best return, but pick a 5-year period from 1, 2, 3, 4, 5, and then look at the return over this 5 years combined, and it's likely beating the index and likely beating whatever you get on your regular savings account. But I think considering the audience or the average target audience of eToro, so the kind of people that they attract and aim for or want to serve, I think it offers what people need. Yeah, but yeah. Anyway, we would have another hour to go, but I think I will call it a day, simply because, yeah, like still have other stuff to do. I think we have two options here right now. So again, either, like depending on how we label things, I really like considering that, again, from the screen labeling, this would be the base channel, this would be wave 3, here we are wave 4. This indicates the start of wave 5. Now, technically, this would likely be an extended third wave. If we look here, that would be 1, 2, 3, 4, 5. So that would be an extended third wave, which would mean that a truncated fifth wave would also be acceptable, and a truncated fifth wave would actually hit that median here. So it could be, no, it could not be, because that would then not make up our wave 3. Unless our wave 3 is even bigger, and so, because what I mean is it could be that this here is wave 5 in green, so with a truncated fifth wave, which however would then mean that this here is another 1 rather than 2 is like 2, and then from here 3, 4, 5, which should then end up here, yeah, like, or at this wave, yeah. Gonna get rid of that and move that back. So I think then that leaves us with 3 situations. Number 1 is we have a 1, 2, 3, 4 truncated fifth wave, which becomes another 1, which would require us from here to correct down to 162 to 159 to make this then a 1, 2, which would then be another base channel that we break out here for 3, 4, 5, and eventually should end up on this wave here. Option number 2 is like we had it labeled earlier, which I'm not going to go back to, that this is wave 5, so that we ended up like 1, 2, 3, 4, 5, and seeing an ABC correction here, but highly unlikely because the levels here are already identical, so it would only work out if it's a flat corrective pattern and whatnot, yeah. Overall, that still fulfills the requirements of alternation in my opinion. We have a short wave 2 and a longer wave 4, and yeah, so like overall I think the most likely scenario is either the one we have right here, that from here we have a 1, 2, 3, 4, 5 that will take us up here, so for that we likely could expect, or maybe we already had it, so that could be 1, 2, with the orthodox end of wave 2 maybe a little later, so we already have like a 38.2 retracement here. So 1, 2, which would be followed by a stronger wave 3, 4, and then takes us up here to complete this fifth wave. So that two options, yeah, like two options. So basically we go in a zigzag, like in a 1, 2, 3, 4, 5 pattern up to wave 5 here. And our target for wave 5, according to this, although our target with this labeling would be a little short, so like this, which likely means it could be that we have our target basically on the double here, if I got it right. Let's check Fibonacci extensions, wave 3. Or maybe it could be that it just takes time and then our target would be 161 here, so like at 178. Like if we move that here, but actually no, like we would need to have a higher target for this one here. It needs to go higher, like so this fifth wave, that this green 5 would need to go higher simply because of the bigger pattern here that would be 1, 2. Oh no, actually that would still be okay. If this is 1, 2, then, and here our price target would be as said 2, 4, 3. So, and then if we take this here, wrong, and extension from here to here, and boop, then we could say, I'm going to move that, I'm going to try to move that 4 somewhere else for now, like here, and I'm going to move that 3 here to like exactly this point, and so basically the 161 extension here would also align then with that channel here to complete this wave 5, and which on the bigger scale would mean it is this wave 3, and here we already noticed the breakout, so we already in part of wave 3 but not finished yet. Now if I get rid of this and that here, that's our base channel, and if this would be our wave 3, we would indicate that our wave 4 starts with a breakout to the bottom, likely to hit this base channel, which would indicate that it goes like this. And yeah, I think that makes the most sense actually. So let's let's go with that, and then this turns into wave 1. Don't know yet where wave 5 here should go, but I think that actually, especially here, we already got higher, so we definitely have 3, 4, and so we just have to slowly make our way up there. Not sure if that will be on tomorrow. So like time is like the worst thing to predict with Elliott wave theory, but in terms of price level, I think that checks out. So like second time, so base channel, that would be our acceleration channel, and then we have our so-called, wrong button. So acceleration channel, then we would have our so-called deceleration channel, like roughly like this, for wave 4, and then the breakout here indicates that we are in wave 5, so of those green pattern, and the wave 5 target would be again channel 0.243, so the median or more likely the top line here. And again, on the bigger scale, this is our base channel, and we currently have our breakout here. However, this breakout here with the retracement here lower doesn't, could be, but doesn't make sense because wave 3 would be almost the shortest, wave 4 would be also a simple correction. So most likely that it will be like this, yeah, like so from here we go up and next stop is 178, maybe 180. And That again, as mentioned, should happen in a 1, 2, 3, 4, 5 pattern, which as mentioned could be, because we already have the 38 retracement here, so it could be that this is 0, 1, 2, and which would give us, I mean, maybe not, yeah, like we would get a base channel that looks like this, and we would need a breakout from that channel, and then a drop back, and then wave 5, so more likely that our wave 1, 2 actually looks like a channel, so that would be 0, 2, and that here would be 1. So when we have the breakout here, we are in wave 3, which gives us a wave 3 channel. Wave 4 bounces again back here, and wave 5 then takes us, yeah, like maybe somewhere here, yeah. But that already gets too like small, so I'll have to wait and see. But definitely, yeah, Michael says, can't wait for next stream. We're super bullish. Hope to see you stream again before Friday, but if not, have a great week. Nuns with Guns, as always, thank you for everything today. And yeah, like it's been my pleasure. I think it's nice mostly because we are now in waves that take us up. So like, while we definitely like, like that's a mass scale. I mean, we had to relabel this part here now 20 times or whatever, but I think like this with the triangle here makes sense, and that candle breaking out here, I don't think if we will get any better sign as an indicator. Like if the triangle label here is correct, that candle here definitely indicates the end of the triangle, so that we will not see like a 9-wave triangle and go up from here. And the labeling here also on 2 different degrees. I mean, we didn't label this subwave here, but with this 1, 2, 3, 4, 5, which checks out according to Kennedy channeling technique, and this bigger 1, 2, 3 then, which also checks out, I think it kind of like makes sense. And on a smaller degree, if we would try to label this here, we would have a very strong wave 3 here, which may not or may already, like real quick before we press the end button, up, yeah, like a little higher, so like here, which already, like here we would indicate the breakout for a wave 3. It's also possible, like our wave 4 doesn't necessarily have to end on that low point. It could also be somewhere here, yeah, so like the orthodox end of the wave 4. So that base channel that I'm currently drawing from here to maybe here could be flatter, because it could be that it's like, I don't know, like it could be technically from this candle, yeah. Not really important, but just saying that it could be that our wave 4 here is slightly different. And yeah, so thank you for your insights. Thank you for your efforts. Finally, good to be on the uptrend. I'll see you on your next stream. Yeah, like if we would really have a huge movement, I would try to jump live as mentioned. And if we start the short squeeze, then I definitely will drop everything else, because it's in my financial interest and in my company's interest, because the money that we make there will definitely be used to help grow our company further, to manage that position then properly. But overall, like, I mean, if we are right in terms of the time, we would go somewhere here today, and tomorrow open slightly higher and then drop. Yeah, but we are like, time is again the one thing we are most often wrong about. So, but it's nice to see that we're in the overall uptrend. So while we have swings, and I actually would prefer it that we are still at 140, so I can actually buy more cheap. But overall, it's nice to see that we are finally past our wave 4 and can worry about labeling upwards movement instead of downwards movements. With that, anyway, and just need to connect to the other screen so I can smash the end stream button. It's nice to see that it goes up when we end it. Yeah. Like if somebody has time and you can kind of like, if somebody would take the time to read chapter 4 about ratio analysis in the book, that would be great. That's the one thing that would help us more to predict the price areas. And if I find the time, I will reread it, so that maybe we have like a little bit more practice with really predicting how far will a wave go, because that's what's like the crucial part. Yeah, like kind of like interesting. Do we have volume anyway, like 200,000, 100,000? There was almost like less than 100,000. Doesn't seem like we have a lot of volume today, or like daily 5 million. Okay, more than the last couple of days, but also not super high volume, like 5 million. And then we have the power hour, so still, but Still not super high volume, but actually nice movement for that low volume. Yeah. Sending you a virtual hug. Much love, bro. Take care. Up, up, up. And yeah, like with that, we just gonna see how far we go up. But as said, expected that we go up certain, and then we will have that wave 4 drop. But nothing to get scared. It's just another stop along the way. So 7.34 million on Webull. Yeah, like also not much more. Yeah, like so might be that my volume indicator is lagging behind. Yeah, so. But still, like, I mean, it's more than the 3 times more than the last couple of days, but the price movement in comparison is also way more. So like real quick, last thing. So if we look at that candle where it says 5 million on my end now, and it's double the volume, but the price movement is definitely way bigger than double. So yeah. Still light, but nice to see not 2 to 3 million. Yes, and especially considering light volume, but still decent movement. I mean, we're up 14% today. So, and if we really finish somewhere here, we still have like a few percent to go, and kind of like having a strong start into the week, especially high about max pain for options, and options would really suffer this week because our labeling doesn't consider a case where we fall below the max pain that was at, quickly gonna check, 150. So we definitely, in my opinion, will stay above that. Anyway, so that's it for today. And yeah, like don't forget, if you haven't subscribed already, there's a reason why you can or should subscribe, because if you also enable that stupid bell icon, if I decide to jump live during the week, you would get an email. And yeah, like other than that, next stream Friday, half an hour before market open. And have a great week, everybody. Thanks for tuning in, and see you soon. Bye-bye.